That update over to Vamakshi. List out the stocks you need to watch out for in today's session. Vamakshi, good morning.
Good morning, Hormaz. Let me first start off with BL. The company has managed to secure additional orders worth over 1,000 crores since the last disclosure on September 16th. Blue Dart is also on our radar because they have increased the average shipment price in the range of 9 to 12%, and this will come into effect from 1st of January 2026 onwards. Realtel Corp is the next stock we're watching out for, and this is on the back of an order win. They've received a 37 crore order from Visakhapatnam Port Authority. Now, this is for smart video surveillance with IoT and a 5-year operations and maintenance contract. Now, IRFC is one other stock that we'll be watching out for. They've signed a nearly 6,000 crore term loan agreement with Haryana Power Generation Corporation. This is for the 800 megawatt Yamuna Nagar project. In addition to that, they've also signed an agreement with Mahagenco, and this is for over 10,500 crore funding of Koradi thermal expansion project. GLR will also be in focus today. Keep in mind that Moody's has actually reaffirmed its BA1 ratings on JLR, but the outlook has changed from negative to negative rather from positive. Thomas Cook, also on our radar, has partnered with Ministry of Tourism to elevate destination experiences across India. And lastly, keep an eye out on Global Spirits because they've launched the world's first premium vodka filtered using amethyst crystals with the launch of Terai India Craft Vodka.
Well, Vamakshi, thank you for that list. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. 7 days of losses, lower highs, lower lows. What the FNO data is indicating?
Well, for starters, it's the first Tuesday where there will be a monthly expiry. So it's September series expiry today. The Nifty is, for all the highs and lows during this series has gained about 135 points after 1,100 points of losses in the previous two series. But this 135 points does not tell you the story. The story is between the high and the low of the series. The range of nearly 1,200 points, 12 straight days of gains, thereafter 7 straight days of losses and a fair amount of volatility. And yesterday's trade actually mirrored that as well. If you look at the Nifty Bank and the Midcap index, all of them ended mildly in the green or absolutely flat, but that masked the volatility that we saw intraday. And yesterday's high and low on the Nifty is a fair reference point to look at for trade today as well. 24,800 on the high side and 24,600 on the lower side is what everyone on the street is betting for, especially the option writers. The FI is still 16% long and 84% short. All of that moves to the next series now. We'll watch out for how the rollovers and their long positioning is because October has a fair amount of cues as well. As far as yesterday's trade is concerned and cues for today, they've written more puts, nearly 5 times the number of puts than the number of calls ahead of expiry, telling you that there is a stronger support on the way down than resistance on the way up. What are those levels? 24,650 put, fairly active in trade for a 46 rupee premium, telling you again yesterday's low and 24,600 would be an important support to track. Though on the way up, the Nifty has to cross that 24,750 mark and around that 24,800 mark, which again is around yesterday's high, for further short covering to take place as well on expiry. So 24,600 to 24,800 is the range that the street is betting on. One stock I'm watching out for, Sammaan Capital. Remember, fair amount of trading activity yesterday, back in FNO ban on the day of expiry, and there is some news as well where the company is looking to raise funds. So all of this makes the stock an exciting one to watch out for.
Oh, indeed. We'd watch out for Sammaan Capital out of the FNO ban one day, back in the other. Mangalam, thank you for that update. Take a short break. We get you more updates from the White House in our special segment, Trump Watch, on the other side. Welcome back. Getting you the latest on the Donald Trump related developments. Dia is here in our special segment, Trump Watch.
Good morning. We begin with high-stakes announcement out of Washington. President Donald Trump and Israeli Prime Minister Benjamin Netanyahu have unveiled a 20-point plan aimed at ending the war in Gaza. Now, the framework includes a phased withdrawal of Israeli forces from the enclave. Trump said the plan has backing from other West and Asian Muslim leaders. Now, the questions do remain over Hamas's role. The Palestinian Authority welcomed what it called Trump's sincere and determined efforts following the announcement. But Prime Minister Netanyahu made clear Israel will not walk away entirely. He said Israel would retain security responsibility in Gaza and vow to finish the job of destroying Hamas if the group rejects the US-backed deal. Meanwhile, President Trump is turning on to trade. On Monday, he imposed fresh tariffs to support the U.S. film and furniture industries. Trump said any country not producing its furniture in the U.S. would face substantial tariffs. He also imposed a 100% tariff on all foreign-made films. And the tariffs on kitchen cabinets announced earlier and the newly announced tariffs on furniture will come into effect on October 14, White House stated. And in yet another attack on Harvard University, the U.S. Department of Health and Human Services has recommended the university be excluded from federal funding. Now, this comes after the Office for Civil Rights in July referred the school to the U.S. Department of Justice to address allegations it failed to address discrimination and harassment against Jewish and Israeli students on the campus. That's all for today. Now back to you, Hormaz.
Dia, thank you very much for that update. Now, in the US markets itself, it was a very choppy session on Wall Street. Although the indices ended at the highs, but then although the Dow recovered from the lows of the day, the S&P 500 and the Nasdaq both ended in the green, but off the highs of the day. Mackenzie Sigalos of CNBC gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes in Monday trading as Wall Street tries to bounce back from a week of losses from the AI trade. The Dow climbing 69, the S&P 500 rising 18, and the tech-heavy Nasdaq advancing 107. Electronic Arts agreed Monday to be taken private in a deal worth $55 billion. The video game giant, which makes games such as Madden NFL, announced that it'll be acquired by a group of investors that includes Saudi Arabia's sovereign wealth fund and a firm managed by President Trump's son-in-law, Jared Kushner. Now, if the deal closes as expected in 2027, it would be the largest buyout of a publicly traded company in Wall Street history. And then OpenAI is rolling out new safety features and parental controls Monday for ChatGPT. Now, among those features, parents will be able to choose whether they want their child to use a version of ChatGPT that shows less content related to dieting, sex, and hate speech. If the controls are enabled, OpenAI says ChatGPT will send an emergency alert to parents if it detects a teen is in mental distress. The changes come as the company faces a wrongful death suit after a teen died by suicide following interactions with the chatbot. That's what's happening here in the U.S. Back to you in Mumbai.
Mackenzie Sigalos, thank you for that update. Now, U.S. President Donald Trump says that Israel's Prime Minister Benjamin Netanyahu has agreed to back a U.S.-sponsored Gaza peace proposal aimed at ending a nearly two-year-old war in the Palestinian enclave. Now, take a look at this report.
At least we're at a minimum very, very close, and I think we're beyond very close.
U.S. President Donald Trump said on Monday that Israeli Prime Minister Benjamin Netanyahu had agreed to back a U.S.-sponsored Gaza peace deal. The agreement includes a ceasefire of the two-year-old war in Gaza and the release of hostages held by Hamas.
If accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours.
An official with Hamas said after the announcement that it has not received the written plan.
I support your plan to end the war in Gaza, which achieves our war aims. It will bring back to Israel all our hostages, dismantle Hamas's military capabilities, end its political rule, and ensure that Gaza never again poses a threat to Israel.
Netanyahu made his fourth visit to the White House since Trump returned to office in January. The right-wing Israeli leader was looking to shore up his country's most important relationship, after a slew of Western leaders formally embraced Palestinian statehood last week in defiance of the U.S. and Israel. Trump, who sharply criticized the moves as a prize for Hamas, was seeking Netanyahu's agreement despite Israel's misgivings on parts of the plan. Washington presented its peace plan to Arab and Muslim states on the sidelines of the UN General Assembly last week. Trump's 20-point plan includes a staged Israeli withdrawal from the Palestinian enclave, Hamas disarmament, and a transition government led by an international body headed by Trump. The White House talks came as Israeli tanks on Monday thrust deeper into the heart of Gaza City. Israel has launched one of its biggest offensives of the war this month, with Netanyahu saying he aims to wipe out Hamas in its final redoubts. The war has left much of Gaza in ruins and caused a major humanitarian crisis.
We'll take a short break. On the other side, we get you cues from the commodities market. Stay tuned. Welcome back onto cues from the commodities market. Manisha Gupta is here. Manisha, good morning. Unstoppable gold, another day, another record.
Oh, well, absolutely. Now, this is getting, inching up to the levels that the markets thought would come perhaps next year. But 3850 is done with, and we are trading above those kind of levels right now. Well, there are mounting concerns over a looming U.S. government shutdown. We do understand that the meeting yesterday with the U.S. president and the congressional members ended without anything. But today, perhaps it would. If it doesn't, then tomorrow you have a government shutdown. But we have seen history, and we've always realized that some deal is reached at the 11th hour there. Also, the markets are working with a rising expectation of more Fed Reserve rate cuts. There's a 65% probability that you might see another rate cut in December. And before that, there's a 95% probability of a rate cut coming in the month of October. And that's exactly what the markets are working with. Well, for the gold prices, we are up by 46% in this year. It is the best yearly gain since 1979. And the markets will also watch out for the U.S. jobs data, private payrolls, non-farm payrolls. You have loads of data coming in the next 2 or 3 days, and that is where the next cues would come in from. But it's not just gold. Silver is trading at a new 14-year highs. Copper prices trading at a 2-month highs. You have zinc now trading at a 5-month highs. Aluminum trading at a 3.5-month highs. So when it comes to metals and tangible commodities, all of them seem to be doing quite well.
Not wrong when people say all that glitters. Maybe is gold, silver, and maybe some other precious metals as well. Manisha, thank you for that update. We call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call on the other side sets you up for the monthly expiry session.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, good morning, guys. Do you call up any of your friends in the US who like to watch Indian movies? I guess the headlines are coming in on the movie business this morning.
Absolutely. I mean, you don't know where he's going to go next, right, Mr. Trump? But I don't know what kind of an impact it'll have. But difficult what he's going to do next.
It's all entertainment.
But it's a festive season, guys.
So,
we're like moving ahead with Navratri. Dussehra is around the corner. So, it's all good.
And today is the expiry, and today marks the end of the halfway mark of the fiscal year. So, hoping for a better second half of the year.
Absolutely.
Yeah. All right, well, let's just take it from the top then, right, in terms of what you need to know as we begin this session. So equities last night in the US higher, but they kind of sort of sold off into close a little bit, paired gains into close. S&P was up about 0.25%, NASDAQ was up about 0.5%. I mean, the big talking point, and it's just a talking point, is, of course, concerns over a US government shutdown, which looks likelier than not, starting the 1st of October. So you had J.D. Vance, the U.S. Vice President, who said that I think we're heading into a shutdown because Democrats won't do the right thing. And of course, enough commentary from the Democrats saying, well, the Republicans aren't climbing down, piping down. So far, no agreement. Last minute, it's known to happen many times that it gets sort of eventually resolved. The Bureau of Statistics in the U.S. essentially said that it will delay the jobs report, the jobs data, and suspend all operations in the event of a government shutdown. So basically, if you think about how this impacts markets straight up, of course, I mean, it'll have an impact if the government shuts down, people don't get paid, etc. And there have been instances of extended shutdowns as well. The impact is there, but immediately some of the important data which the market kind of hangs on to, which, for example, is the jobs data, which is up on Friday, will get pushed out, will get delayed if the government shuts down. That was confirmed. Now, US 10-year yield was down about 3 basis points to about 4.14. Dollar index was down about 0.25%. 2 days now, dollar index is, basically it got past 98. We're just under 98 now. So about a 0.4% day before yesterday, 0.25 last night as well. Gold prices continue to climb higher, so above $3,800. Silver, of course, as well, doing very well. And Manisha will talk about both those in a bit from now. And remember, lots of silver ETFs, and we highlighted that towards the last hour as well, all kind of mirroring what's happening with underlying physical gold prices. Oil prices, about a 3.5% drop, back at about 67.7. It was a large drop. And of course, signals that OPEC Plus will likely raise output once again in November. So after October, perhaps in November, they will see an output hike again. So we'll just tie in the levels here. Nifty, of course, could not really hold on to the gains in any respectable way or fashion. The market, of course, started higher, sold off, another attempt, sold off. And towards the end, there was an attempt but did not last. So we ended pretty much where we started at about 24,600 kind of levels. So the support zone, once again, doesn't change. It's 24,400, 24,330. That broadly, this was, by the way, the prior support zone before the market saw that 1,000-point up move. So we're basically back where we started in that sense. The resistance comes in at 24,807 and 24,923. Very, very near term. 200 points basically on either sides is what we are working with for now. For the Nifty Bank, we need to hold above yesterday's low, which then becomes a bit of a support. 54,226 is that a level. And resistance is the 40 hourly and the 40-day exponential moving averages. So 54,860 is the hourly. And 55,078 is the daily exponential moving average for the Nifty Bank. So not very much has changed as we sort of, pick up from one day to the next. US, India, trade stuff, etc. Absolutely quiet, silence, nothing very much at all. Not very much to go along with in terms of new stuff, new triggers, either up or down. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. So it's quiet there as well, about 8-10 points higher. How's the F&O stuff looking? Nigel is standing by now with exactly that. Nigel, over to you.
Well, important trading session today because you have the September monthly expiry that will play out. You have the end of the halfway mark of the fiscal. That's the end of the first half of the year. And also you'll have a run-up to the RBI policy as well. So those are the top cues that you'll be tracking. For the Nifty, we're in a 7-session losing streak. Gives you a little bit of that eerie feeling. While the Nifty Bank, the good news is, yesterday at least it broke its losing streak. And the rollovers come up for you on the screen, pretty much in line with averages that we have seen getting into the expiry day. So at around 67%, at around 71%. One positive yesterday was that the broader markets, at least, there was some bit of green and some bit of an outperformance after a few trading sessions. So that's good. I'll keep an eye out on the broader markets because that's what impacts your portfolio. The other good news is that yesterday, the gross volumes actually were very, very high from the DIS perspective. There was some rejig that took place. So that's why that could be the cause out there. But net, you had the institutions that were biased to the tune of close to around 1,000 crores. So that's positive. The FI selling needs to cool off. That's important because the last week it did spike up. What do the FIs do in the F&O market though? On index futures, they added some short positioning. Short positioning holds at around 84%. On stock futures, there was an element of rolls that we saw. There was some bit of an arbitrage as well. But net, you had some shorts that covered out and there was some long addition as well. And what's going to give some kind of, glimmer of hope to the bulls is that yesterday the FIs actually wrote more puts than calls in trade. And that's after a few trading sessions that we saw that. Remember, the PCR is still at the lower end of the range. Yesterday, it was at around 0.63, 0.65. That's popped up to around 0.7, but still at the lower end of the range. And we're going to get 2 strikes up for you, and both these 2 strikes will be expiring today. So the 24,700 call, the bears believe they have got this covered. At higher levels, they believe that, we are not going to, run away beyond that mark. So that's why that call writing is extremely aggressive. Well, there was some put writing as well, which brings us to the levels. The 24,500 mark is the important mark. You don't want that to get breached on the downside. And with the last many trading sessions, we have been making lower highs. So in that case, this is the reference point for today, 24,791. The Nifty Bank comes up for you on the screen. That's pat in the middle of the 20 as well as the 200 DMA. So you'll want it actually to get closer to around the 20 DMA, which is around 200-300 points away from current levels. If you can get past that, at least the technicals start moving in favor of the largest constituent, that's the Nifty Bank. 2 stocks that we're looking at, Saman Capital. We had highlighted this on Friday. Yesterday, in fact, we did see, the stock moved up on very, very large volumes. There was a large trade that took place as well. So Saman Capital is one stock that we'll be tracking because it's come into the F&O ban and volumes were absolutely massive. And I think they could be raising some funds. The other one is RBL Bank, continues to hold steady and continues to hold on to its form despite of the Nifty Bank getting a little bit jittery. So both these 2 stocks continue to be on my radar.
Okay, well, let's look at cues across Asia as well, and they're fairly mixed, but there are big headlines coming from China, by the way. First of all, the PMI numbers in China, the official PMI on the manufacturing side, those numbers are looking good. Strongest since March, though it is still in contraction territory. The private sector PMI survey is actually indicating faster than expected expansion. So, data out of China is good. And there's a massive listing in China this morning. A huge gold miner has listed. Listing was over in the market to raise more than $3.2 billion. And the shares are surging 60% this morning in Hong Kong. So big moves out of the Chinese markets. But otherwise, index level, things are all right. Let's get to the implied open then. Very, very flat, as you just saw over there. About 9 points up is what the indication is, at least at this point in time. So maybe we get more of the range-bound trade. Let's see. Now, the equity call of the morning, and it's coming in from Rajiv Batra of JP Morgan, who says that despite rising concerns about a potential near-term slowdown in India's growth driven by 50% US tariffs on Indian imports and increased US H-1B visa fees, domestic catalysts such as GST 2.0, lower interest rates, and recent tax cuts could help trigger a recovery in consumption and corporate earnings. He continues to recommend domestic over exporters with an overweight stance on financials, staples, discretionary, materials, utilities, power, defense, and real estate. He says their underweight sectors remain IT and pharma. So fully, enthusiastic about the local stories here in India. Well, let's, welcome in our first guest on the show. Rahul Chadha, founder and chief investment officer at Shikara Investments, joins in. Rahul, great to have you with us. Exactly that. Let's take that debate forward. The note that I was reading out from JP Morgan, right? Whether the domestic measures that we've seen, whether there will be enough to inspire a real meaningful pickup in earnings. And we also have the policy tomorrow, so weigh in on that as well. I mean, whether you're expecting more monetary easing as well. And does it all lead to sustained double-digit earnings growth?
Yes, I think that is big question for markets. That look, some bit of a tailwind is expected from these GST cuts, the rate cuts, and the tax cuts which has happened. There is a repair of household balance sheet which is going on. So it is expected that next 3-6 months should be good. I think the bigger question for India is what is happening in terms of the white collar job disruption because of AI. We've seen the IT services companies do a fair bit of a cuts here. One is kind of looking at whether some of the GCCs look to kind of slow down their hiring because of AI-led productivity gains, etc. So I think those things are on minds of investors. And while this is happening is North Asia, particularly Korea, Taiwan, and China, they have a strong AI story in terms of the AI enablers. They have the AI infrastructure or AI adopter companies they have, and valuation is cheaper. And it's but natural for market participants to currently kind of overweight those markets over India.
But what are you liking in India, Rahul, at this point in time?
So again, our view is over the next 6-9 months, you will have opportunities come in India. One would look at banks selectively, look if the nominal growth remains slightly lower than before. Obviously, banks will do well, but not like the way they did in the past. I think selectively autos present an opportunity on back of these GST cuts and affordability coming through. We've continued to like the discretionary consumption, the consumer platforms, something like a Zomato, Nykaa, etc. And we continue to like that. Travel and tourism is a theme which took a breather because of the border skirmish. I think that comes back around Q4.
Rahul, hi, good morning. Good to have you here. Travel, tourism, so the hotel guys or airlines or even, for example, OTAs. Ixigo has been such a big mover. Make My Trip is the big one, but it's in the US. But I've heard they've kind of sort of not happy with the valuation they're getting there, so maybe trying to make their work through here. But what's your sense, Rahul, on the travel side?
It's a combination. Yeah? It's a combination of airlines, which is Indigo, hotels, some of the select hotel names, etc., and then OTAs, which includes a mix of both Make My Trip and Ixigo. Both of these are fantastic companies, and again, I think they just kind of touch the tip of that iceberg in terms of the customers they can mine. And as we saw with the C-Trip in China, the numbers are going to increase in the coming years.
Hi, Rahul. Good to see you in. I remember you liked the quick commerce players as well in our chats earlier. Some of them have done very, very well. Do you think there's still a big runway for them? Because, you've got good returns as it is in the last 3-4 months from the time we last spoke. You've indicated that things should look up from here on. You think there's still a long runway?
Yeah, no, we've liked the internet platforms across the Asian region, and India, you play those internet platforms through the quick commerce plays. What's happening with these some of the leading quick commerce plays is that competitive intensity has somewhat abated. You can see better response from their dark stores in the top 50 cities, etc. So you'll see that operating leverage play out. And remember, these guys did well when the economy wasn't really doing that well. And now with the tailwinds coming in the economy, they should do even better. So we'll continue to like these names. These are the names which have wide TAM in terms of gaining share in the grocery segment, and they will continue to do well.
So in the financials, Rahul, what's the play?
Yeah, so financials, again, it would be lower weight compared to before, and a couple of reasons for that. One is, like the way I said, look, unlike in the past where nominal GDP was somewhere around 10 to 12, 13%, I think those numbers are going to be slightly slower, 8 to 10%. So you're limiting yourselves to select private banks, etc. One is looking at capital market plays, but if the market is range bound, I think these names, having done well for last 4-5 years, may not do anything. So maybe at decline, some of the few capital market plays, etc., the wealth managers or asset managers may be interesting. And outside banks, the capital market plays, I think insurance looks interesting here. With the cuts GST is provided, we should see uptick in their policies, and growth should come back here. So insurance names look
from the old financials to the new age, right? The big global theme is the race for compute and, data centers and all of that stuff, everything which goes into a data center, I guess. Here in India, we've got, say, old real estate player like Anantraj, which is back in the reckoning because of the data center business. You've got, some computing businesses like NetWeb, which have done very well. Anything on that front? You've got a global view, global perspective as well, Rahul.
So we are playing these AI enablers, which are the memory guys through Samsung Hynix in Korea. There are plays in Taiwan, the likes of TSMC Quanta, which are there in our portfolios. India, there are no clear-cut plays. In the past, one has seen some of the names you said get impacted by slowdown in real estate sales in the NCR region, or kind of have some delay on the execution, etc. So India, what we are playing is the AI adopters. And I think that is probably the big story over the next 6-12 months, as some of the smart Indian companies kind of use AI to increase their productivity in terms of reaching out to their end customers.
You don't think, but you've given all these a look? Some of them, they're very few, but companies trying to really sort of, not just, the adopters are one, the others are enablers. You think makes sense to, you've looked and you said, well, maybe not.
Yeah, see, I think from our side, we get a better play, a more globally competitive play across Taiwan, Korea. Yeah. So I think which is why we've chosen those names. But somebody who invests solely in India will, I'm sure, look at some of the names.
Correct. Absolutely. And I think that's a good point. And that's a good, important distinction as well. Thank you very much, Rahul. Appreciate you joining us here on CNBC-TV18. Thanks for sort of running us through what you make of things here and around the world as well. We'll take a quick break, but let me just quickly run you through the interactions which are lined up here over the next 2 hours or so. 8:35, Prabal Sen of ICICI Securities will discuss the Ministry of Petroleum's pitch for high valuations for oil marketing companies. Stocks were up 4-5% yesterday. 9 o'clock, Karan Torani, Velara Capital, talks about the impact of US imposing tariffs on movies made outside of the US that came last night. 9:20, Devina Mehra of First Global will talk markets with us. 9:35, we'll have the Chief Business Officer of Premier Energies talk to us about the company's outlook. And we have the management of Keystone Realtors talking to us at 9:45 as well. Towards the end of the program is the economy. Lata speaks with Somshekhar Vemuri of CRISIL Ratings and Sachin Gupta of Care Edge Ratings. K. Ravichandra of ICRA also joins in. Credit quality of Indian corporates in the first half that ends today. That's the focal point of discussion. Okay, we'll take a quick commercial break here. We're going to come back, list of top stocks with our research team on the other side.
Welcome back. So the cues across Asia are fairly mixed, and the implied open so far has been telling us that it's going to be a flattish start, and then let's see if the bulls manage to reclaim some lost ground or not. It's a little better than when we checked it last. It was about 10 points up. Now it's 20 points higher. So let's see. As always, lots of stocks and news. So let's straight away get to the CNBC-TV18 list of top stocks to watch. Nigel, you're looking at Tata Steel. What's happening here?
Well, Tata Steel's in focus. They've announced that Tata Steel Netherlands as well as the Dutch government, they have signed a joint letter with the intent to decarbonize the operations by decommissioning the existing blast furnace and transitioning to the electric arc furnace. Remember, they've done the similar exercise, which is in transition in Tata Steel UK. Now, with regard to funding, the Dutch government has indicated its support of 2 billion euros, and Tata Steel is also applying for an EU Innovation Fund of around 0.3 billion euros. So that's a broad idea about with regard to funding. Analyst feedback, well, they are saying that this development is on expected lines. It could be a 5-year project or even more. The project capacity, capex, all of that should be worked out in due course and should be at a later stage, announced. So just a development in the positive direction. From the blast furnace route, they're going to be looking at moving to the EAF, that's the electric arc furnace. That's good for the environment. From a shareholder's perspective, more or less on expected lines. So going with mild green, but not a big stock mover actually. Let's go to Hormuz. He's here to tell us about Tata Motors. A lot of analyst notes came in earlier today. Hi, Hormuz. Good morning.
Morning, Nigel. And they held an analyst meet yesterday where there was some expectations that there would be some commentary with regard to the timelines for JLR resuming production. Unfortunately, that is not to be. And they've mentioned the same that they have mentioned in their earlier statements as well, that production would begin in a phased manner, although they have not disclosed when exactly would that happen. Until their last public disclosure, the production shutdown is supposed to continue until tomorrow, which is the 1st of October. And then there is no timeline forthcoming as to when resumption would take place. Now, on the JLR demand outlook, they mentioned that it is remaining tough in the near term for JLR, whether it be in Europe, China and the US markets as well when it comes to demand. But domestically, they mentioned that the GST cuts would aid the growth outlook for the PV and the CV industry in the second half of FY26. And the Iveco buyout, they have said that it will be completed by April of 2026. They mentioned that although it is EPS accretive right from the start, but it will be quote unquote meaningfully accretive in the next couple of years is what they have mentioned. And the CV business listing is tentatively supposed to take place in the month of November. So no clarity forthcoming, and only for that reason go with some red on the stock today.
Okay, all right. Got that, Hormuz. Yeah, like we've discussed yesterday, Tata Motors has managed to make it on the list almost every single day over the past week and a half. Thanks for that, Hormuz. Let's quickly get to Vamakshi. She's watching out for a bunch of names, including Z Entertainment, Sun TV and Tips Industries. Does it have anything to do with US tariffs, Vamakshi?
Absolutely, should we bang on then? US President Donald Trump has actually gone ahead and announced 100% tariffs on the movies that are made outside of the US. Now, of course, there is more clarity that is needed on how this will actually be implemented, whether or not, it will be also implemented on streaming platforms like Netflix, etc. So we'll have to wait for clarity on that. But overall, it's a negative for, all of these companies. And that is because, earlier my colleague Shilpa had actually compiled some data points from industry sources, and they said that around 30 to 40% of overseas collections comes in from the US. So it's a big market. We have a huge Indian diaspora over there, and along with some other Asian communities who love watching, Indian films. Apart from that, US is the second largest market outside of Telangana for Telugu films, and in fact almost 20 to 25% of box office collections for big ticket Telugu films comes from the US. So a higher impact is expected for Tollywood as compared to Bollywood. But now there are some likely scenarios that could play out. If this is passed on to customers, ticket prices may get expensive and the footfalls could likely get impacted. But if the producers themselves decide to take absorb some amount of cost, take some cuts, so then their revenue as well as profitability could see a hit. So therefore, we'll still wait for more clarity on this. But negative for all of these counters like Z, Sun TV, Tip Films.
All right, Vamakshi, thanks a lot for joining in and giving us that piece of news. And just to tell our viewers, Vamakshi today will be moving on from CNBC-TV18. It's been an absolute pleasure, Vamakshi, working with you and learning from you as well. Wishing you all the best in the new avatar. off to Australia, going to be getting married and breaking a lot of hearts out here. But wish you the best, Vamakshi. And as I always say, there's one better researcher that I believe it's you over the last
Thank you.
many
Thank
years.
you so much,
Thanks a lot,
Vamakshi.
Vamakshi.
Yes.
Thank you so much. It really means a lot to me.
And I'll send you the list of with regard to the treat. All right. Thanks a lot. Let's move on to Vinny, who will be facilitating that and who's had a interesting evening of dancing the Garba, I believe. Vinny, good to see you. Bright and early, fresh as ever. Tell us about the dance later. What stocks on your radar?
Yes, absolutely. It was a great night. But Nigel is starting up with the stocks. Then first, let's watch out for Adani Green. We're expecting red here. Now, there's a Bloomberg Reuters report that's come in where it's saying, and this was Total Energy CEO who actually spoke to some investors. And that investor meet, he highlighted that they may sell part of the stake in Adani Green Energy. Now, do not forget, Total Energy held around 19.25% stake in Adani Green. They'd acquired 20% stake in Adani Green in 2021 for around $2 billion. Now, also the company added that they will sell the renewable power holding except those in US, Brazil as well as Europe. And quoting what they said, if I was able to sell a quarter of my shares to recoup my $2 billion and to be neutral, I would be very happy. That's the word coming in there from the investor meet highlight. We have also sent a mail to them and reached out to Adani Group, but we've still not received a response, so we'll wait out for that. Other than that, Blue Dart, let's keep an eye out on that because Blue Dart has announced a general price increase effective 1st of January 2026. Average shipment price increase could be in the range of 9 to 12%, so it's steeper price increase that we're seeing coming in. And the main reason for this price increase is because the inflationary pressures that they face, increase in terms of airlines costs as well as complexities due to the global supply chain scenario is leading to the increase in terms of price hikes. But yes, keep an eye out on this one. We're expecting some bit of a green here.
Okay, all right. Thanks a lot for that, Vinny, Vamakshi, Vinny. And now Vivek. Vivek, tell us some more stocks on the radar.
That's right. Quite a few stocks on the radar on the back of order wins. Mainly, first on the list is Bharat Electronics. Company secured and has announced that they have received orders worth over 1,092 crore. The orders includes defense network upgrades that BL has to do, tank subsystems, communication equipment, even EAVMs is something that BL will be announcing. Remember, the company has announced to the analysts earlier that they expect orders worth 27,000 crore rupees in FY26. This is excluding the 30,000 crore QRSAM order that the company received significant visibility on last evening. Along with that, keep an eye out for DCX systems as well. The company has received orders worth almost 50 crore rupees. This order is for electronic module assemblies worth 30 crore and another order for cable and wireless harness assemblies worth 19.5 crore. And lastly, RailTel, two separate order wins for the company. The company has received a work order from Visakhapatnam Port Authority. This particular order is worth over 37 crores. This is for smart video surveillance and has also received a letter of award from Bihar Educated Project Council for a project worth a little over 50 crore. Expect all of these stocks to open in the green today.
Okay, all right. Thank you. So orders and more orders, Vivek. Well, let's quickly recap our list of stocks to watch then. The ones that have positive news flow would be Tata Steel, Blue Dart Express, BEL, DCX Systems and RailTel. Stocks with negative news flow would be Tata Motors, Z Entertainment, Sun TV, Tips and Adani Green Energy. Okay, so that's as far as stocks are concerned. Let's figure out what's happening in commodities. Usually it's gold and silver taking away all the headlines. Manisha, morning. What's the latest?
Oh, well, yes, it continues to be gold and silver taking away all the headlines. And this time around, we're looking at very strong, important resistance levels being broken when it comes to gold. $38.50 an ounce is done and dusted with. There are mounting concerns, remember, over a looming U.S. government shutdown. The yesterday conversations between the U.S. president and congressmen did not end positive. And if that happens today as well, then you're looking at a U.S. government shutdown tomorrow. But mostly, as we've seen in history, it does work out at the 11th hour, and that's what the markets are anticipating. Having said that, it also is about the rising expectation of more Fed Reserve rate cuts. There's a 95% probability of another rate cut in October and a 65% probability in December as well. In the meanwhile, you have the gold prices up by 46% in this year, the best yearly gain since 1979. And it's not just gold. Silver is also at a new 14-year high. There is also support for many of these metals where you have copper at a 2-month high. zinc and aluminum trading very close to their 5-month highs as well. So strong support continuing in commodities today as well. What the street will want to watch out for is the U.S. jobs data, non-farm payroll numbers, ISM manufacturing data. So the next 2 or 3 days have loads of data coming in from U.S., which will impact all of these markets.
Yeah, but the government has to function for that data to be released, right? Because I think the Labour Department said that if there's a shutdown, then we're not releasing the non-farm payrolls report. So let's see. We'll find out. Thanks very much for that, Manisha, for all the details over there. With that, let's quickly move on. We have Nimesh joining in to talk about some of the most interesting brokerage notes of the morning. Nimesh, good morning. What's on your radar?
Hi, Sharvi. Good morning. So a couple of reports which stood out for me and should be in focus. The first one is Coforge. CLS has initiated coverage on the stock with a target price, outperform rating and a target price of 23.46, a potential 50% plus upside from current levels. So that's a big target price there. CLS says that Coforge is one of the top 10 IT companies in terms of revenues, as well as and 2/3 of the revenues is derived from financial services and travel vertical. They expect very strong execution from the management, and that's been the trend for the last couple of years, and that's likely to continue. And they are forecasting a revenue and a EBIT CAGR of between 15 to 16% for FY26 to FY28. So big numbers there, and on the back of strong execution and outperform rating with a target price of 23.46. That's the first name. The second stock is Indus Tower. HSBC has initiated coverage on the stock with a reduced rating and a target price of 310. A kind of an anti-consensus negative view on Indus Tower. They believe that Airtel's growth is muted, and there is a concern on Vodafone as well going forward in terms of uncertainties and growth there. They expect, they believe that at the current price, most of the bull case scenario is priced in. So that's the reason why they have a reduced rating. And at current price, the stock implies an EV/EBITDA of close to 5.5 times for FY26 and close to 5 times for FY27. So valuation captures most of the upside. So that's they have a reduced rating. And the last one is UPS putting out a note on quick commerce. They've raised the target price on both Eternal as well as on Swiggy, and they believe that there could be further positive surprises as far as earnings are concerned for the quick commerce players, and hence they've raised the target price and earning estimates as well for both Swiggy as well as for Eternal.
All right, Nimesh, thank you very much for that. The big one, of course, in terms of the upsides, and the percentage targets is of course Coforge with that 50% upside as CLSA sees it for Coforge. Nimesh, thanks very much. More later. We'll take a break. We're back. Parag Thakkar of Fort Capital joins in for some fundamental stock conversation. We'll also have Prabal Sen of ICICI Securities to talk about the OMCs, oil companies. Remember, the government's made a pitch for high valuations here. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's get in our guests who are going to help us out with some good fundamental analysis. Parag Thakkar, Senior Fund Manager at Ford Capital, joins us on the show. And joining in is Prabal Sen, Energy Analyst at ICICI Securities. Good morning, gentlemen, and thanks a lot for joining in. Prabal, let me come across to you first. The ministers are making a solid pitch that value needs to be unlocked in these OMCs. Do you buy into that argument? To be fair, things actually have started looking up for them. Crude oil prices have stayed at lower levels. The problem is we have a couple of big elections that are coming up as well. Give and take everything. Do you buy into that pitch?
I think first I must mention it's probably for the first time that we are seeing an initiative and this awareness among the government and the ministry to actually look deeply into what are the concerns that the street has with respect to PSEs. They're working very hard at clarifying whatever perceptions, right or wrong, that people may have about the level of intervention, about the way that performance is being measured at these companies and the kind of capital allocation decisions that are being taken. So to that extent, I think it's definitely a positive that the government has an eye on the ball and they are doing their best to clear these misperceptions if at all they are there with respect to these companies. Secondly, as far as the operational environment is concerned, yes, it's a very simple rule of thumb. Oil, if it remains in a narrow range, typically is good for Indian oil and gas companies. Particularly the OMCs. It ensures that margins are not very volatile, and it also ensures that pricing power remains intact, particularly on the retail front. Coming to your point about the elections being a factor, that is something that frankly has been a case for a very long time. But if you were to look at recent examples, and when I say recent, I mean over the last 2-3 years, the limited point that I have to make is that there's not really been any significant impact or changes as far as retail fuel prices are concerned, even ahead of fairly crucial state elections. So we would like to believe that, even if there is a pricing change, it will be done within a reasonable range, and it's not something that will provide a shock to the system. And lastly, with the LPG compensation coming in, with GRMs continuing to remain stable at around $4 to $4.50 levels, on an integrated basis, our sense is that OMC margins will remain in the 6.5 rupees a litre range, which is a fairly reasonable level to sort of continue to deliver earnings growth. Despite the kind of capex that is going to be done, particularly by the likes of BPCL and IOCL. I think one structural.
Prabal, sorry, just to understand that point, when you're saying 6.5 rupees, you're talking about refining margins or you're talking about marketing margins?
I'm talking about refining and marketing on an integrated basis.
Okay.
On a per litre basis. I think that is what is frankly what needs to be looked at.
On that, Prabal, if there is a change in the mix of the crude that India is sourcing, which is the biggest global talking point, right? Not even local. Could that materially alter your projections on the refining side? I don't know how the basket is right now, vis-a-vis if it has lesser Russian crude and we start importing more from the US, then what happens?
No, I think we've not really been building in more than 20% Russian crude, at least as far as our estimates are concerned. And we have seen over the last couple of quarters that the discount in any case has been narrowing. Compared to, let's say, periods earlier where discount was as high as, let's say, $6 or $7. What we've really seen is that the discount has narrowed to somewhere between $2 to $3. And I think that at 20% means there's a 50 to 60 cent advantage, if at all, that can actually come through. So we're not really building very aggressive sourcing mix from Russia or a huge margin advantage for that matter, because that's really the reality that we are living in right now. If the uncertainty goes away, then we'll sort of relook at the numbers.
Yeah, I mean, I think the discount has fallen, right? It used to be some $8 for Russian oil at one point. Yes. Back in 2022, it's about $2.5 now. Yeah, I mean, it's come off quite a bit. Prabal, just to take you back to, because what you started with, I think that is the trigger, which is the petroleum minister. I mean, the broad thrust is what we got to follow here, which is that the government wants these companies to trade at better valuations. I'm sure you attended that meeting as well, Prabal, right?
Yeah.
So in terms of diluting some stake in these companies, did you get a sense that perhaps that is on the anvil? Not selling anything, but, bringing in more outside investors?
No, I think the thought process has changed on that. In any case, in a lot of these companies, the government shareholding is really close to what the minimum permissible limit is, number one. Number two, I think the approach that seems to be now being followed is unlocking of value in valuable subsidiaries rather than basically letting go of the family silver, for lack of a better word. At least that is the way that at least, the government seems to be moving.
So no increment, so nothing new on that front, right? In that sense.
No. I think that they'll look at monetizing the subsidiaries rather than the main companies.
Yeah, and that has been what's been the stance for the last couple of years as well.
Yeah.
Now, just one more thing, Prabal, in terms of how these companies calculate GRMs, was there a specific back and forth around that? About how private companies calculate GRMs and how they do it, and from maybe there is going to be these PSU OMCs also perhaps move to that way from the next quarter, and that provides a lift, just the way that it's calculated.
Not really. I don't think that there's going to be any change in terms of reporting. I think the OMCs are very clear that whatever impact of inventory is there, they would probably want to disclose the impact of under recoveries and inventory, in a much more detailed manner. If they can probably do it, I think that demand was there and it was heard by the ministry. I don't know if it's going to happen, but I don't think the reporting standards are going to change now.
All right, Prabal, let's get straight to the stocks. Top 3 buys.
In the PSU space, our pecking order remains HPCL, BPCL, and IOCL in that order. And as far as upstream is concerned, we continue to like oil. And as far as gas space is concerned, I think GAIL probably still offers value if the tariff order sort of comes through and is anywhere close to what the street is building in. And in the CGD space, we continue to like MGL and IGL in that order.
Okay, all right, got that. Let's get in Parag as well into this discussion. Parag, what's your view? I think you as well are quite positive on some of these OMCs. Which one is your pick of the pack?
Yeah, I clearly prefer BPCL. Very clear. 8 times trailing earnings. Last quarter EPS itself was 15 rupees. There is a potential to increase dividend. So dividend yield, which is right now already at 3%, will go up. And remember, the government intent has come at a time when crude oil prices are also under pressure. Yesterday itself, the Brent was down by 3%, right? Because OPEC has increased its production guidance. And I think Mr. Trump also wants oil to remain low so that US inflation remains under control. So I would say that it is all happening at a correct time. I would say stars are aligning for OMCs. And within that, I like BPCL followed by IOC in my packing order.
Prabal, we'll thank you. I think you have a hard stop. Appreciate you joining us with that. And thank you. Parag, so that's oil to begin the conversation. Let's just talk about single stocks, right? Samman Capital, Parag. A lot of news flow. I think ICICI Pru bought some 40 lakh shares yesterday. New deputy CFO, which we broke the story on, more than a few weeks ago. Have you looked at this one? I mean, the play, of course, is revamp, and maybe the earlier issues are past. It's repair and recovery from here, and there's a board meeting now as well for fundraise. I think the notice has been put up.
So I think, so a very good mutual fund has bought the stock. Of course, there was a management change, which was also positive. But up till now, we have not bought in the portfolio, so I'll refrain from commenting. Coming on the financials, my favorite stock remains ICICI Bank because of its pristine asset quality across the cycles, pristine ROA, about 2%, which is right now 2.3 to 2.4%. And now, because of the FII selling, the stock has come at a very reasonable price, where PEG is less than 1. On next year basis, where the EPS is expected to be 85 rupees, the X of subsidiary value of 200 rupees, the stock trades at 13.5 times on FY27 earnings, while EPS growth after the rate cut cycle is over, it will be easily 14 to 15%. Q2 will mark the bottom of growth and margins for them. And margins, remember, still are at 4.27%. So even if they come to say 4.20% on a core NIM basis, it is still a very good margin. And from there, you will see recovery as the CRR cut impact plays in and the deposit pricing plays in. Plus, you will see a GST-led demand surge in credit card spends and auto and all, where you will see recovery in ICICI Bank, HDFC Bank case also. So they will boost the credit growth in the second half. And finally, in Q4, I am expecting some kind of private sector capex also to kick in. So I would say that PEG-wise, price to book by ROA-wise, ICICI Bank at this oversold levels look extremely attractive. It is our top holding in the portfolio. I would like to put a disclaimer. So ICICI Bank followed by HDFC Bank, and of course PSU banks are also looking better. In Q2, I don't expect a significant margin tailwind for PSU Bank, headwind for PSU Bank. And I think valuations, again, SBI at below book, PNB at below book, with now they are also aiming for above 1% ROA. So I would like to bet on these traditional names, and which I have in a significant weight in the portfolios. Of course, the City Union Bank is another stock where 28% of the loan book is gold loan. So the margin resilience will be maximum over there. They are continuing to see above 15% growth and top class asset quality. The one common thread among all the banks, names which I took, is that asset quality is going to be very, very robust. Even when we saw that last 6 months to 9 months, there was a turbulence on the unsecured loan side. But all these banks have cleared that litmus test, and I would say that they stand tall right now, and the cycle is looking very better, I would say, in terms of asset quality, and growth will always come from second half, in my view.
Got it. All right, Parag, request you to just stay with us. For the time being, we'll take a mandatory break. Come back. We'll have Sudarshan and Mitesh will be joining in as well for some technical trades.
Okay, welcome back. Let's just bring in Hormuz now, who's with us with the big movers that we had yesterday. Lots of activity, single stocks, big blocks which went on. Of course, primary market action are really looking pretty solid as well. Hormuz is here. He can sort of compile this data yesterday. Hormuz, over to you.
There is this rush to go public. We've had this conversation about a lot of IPOs and the fundraising that has happened. But the question to be answered is the fact that has these IPOs resulted in any benefits for their shareholders? Well, so far the answer is no. And that's because out of the 74 main board IPOs that we have had so far, we have had 60 listings out of them. And 34 of those 60 listings have either resulted in single-digit gains or are trading below their IPO price. If you break that number down as well, 9 IPOs have single-digit gains and 25 of those listings are currently trading below their IPO price so far in 2025. And now the 24 IPOs have already opened in the month of September. One more opens today. That takes the total number to 25. And 1/3 of the IPOs that have come out in 2025 so far have resulted in have come out in the month of September. Now, it's not as if the market sentiment has been any good, and as a result of which the companies are looking to capitalize on sentiments. So take a look at this. The first quarter of calendar year 25, the Nifty was struggling. We had 9 IPOs. In fact, in the month of March, we did not have a single issue. Now, after making a tariff low in April, the index saw some recovery and the primary market activity picked up. But the third quarter, which ends today, the index is down around 3%, and today itself, including the IPO that opens today, we have had 50 issues coming out in the primary markets in the third quarter between July to September. Now, if you take a look, and the other big takeaway is the fact that a large IPO size as well. You take a look at the 10,000 crore IPO, we have had only 2 of them. HDB Financial is one, Tata Capital opens next week, and most of these IPOs, at least a third of them, are sized 500 crores or less. Now, bigger the IPO size, greater the returns. Well, not really, because 3 out of the 5 biggest IPOs of the year are trading below their IPO price. In fact, HDB Financial, you see a green tick here, but in intraday yesterday, the stock had slipped below its IPO price. NSDL is the only standout here, 50% above its IPO price, but that is also significantly below its post-listing high. And in the case for JSW Cement and Schloss Bangalore as well, they continue to trade below their issue price as well. It's not as if the pipeline is over. There is a big pipeline left as well. We spoke of Tata Capital. WeWork opens later this week. There is an LG Electronics IPO lined up. There is a Physics Wala IPO. We heard from Prestige Estates earlier this month. They said that the Prestige Hospitality IPO is on the anvil as well, and the Hero FinCorp IPO that is lined up too. So the primary market activity continues to buzz, and it will continue to buzz in the final quarter of 2025 as well.
Okay, all right. Hormuz, thank you very much for that. Parag is with us. Parag, you saw that data which Hormuz put out. It's pouring. When it's raining, it's pouring. What do you make of it? Anything interesting out there?
So I'm not a big fan of new IPOs because I want to buy time-tested businesses and I want to buy by promoters, the balance sheet and cash flows I have understood and analyzed over the last 20 years. So I would like to say that I would like to stick to something like ICICI Bank, where Mr. Sandeep Bakshi has proven it. After he has come, he has never disappointed investors. It will continue to outperform, in my view, in terms of results. Stock price, of course, depends on FIIs. And as I told you, for a bank which is making 2.3% ROA to trade at 2.1 times just because of FII selling, and which is going to grow at 15%, I think it offers the best opportunity. Apart from that, of course, today it was highlighted in your this thing also, stocks like Coforge, where the earning growth is expected to be around about 20%. The cash flow yield is around 5%. Then I said BPCL. Then in metals, we like stock like Hindalco. So these are our best preferred stocks. And I would like to stick to the listed names where I know the history very well.
Okay, all right. Thanks a lot, Parag, for joining in, giving us all those ideas. Look forward to chatting up with you and wishing you a good day ahead. For the time being, though, we slip into a short break. Come back. Pre-open rates will be with us. Karan Tarani as well will join in of Elara Capital. He'll tell us his take with regard to Mr. Trump announcing a 100% tariff on films made outside the United States. You want to tune in this conversation.
Welcome back. So we are almost at 9 a.m. We'll start getting the pre-open rates any second now. Good time to bring in the technical experts as well and get some trading advice for the session. We have both Mitesh as well as Sudarshan with us. Gentlemen, good morning to you and greetings of Ashtami for those who are celebrating. Let's get straight away to the action with respect to the index for Sudarshan. So it couldn't really sustain any momentum yesterday. What's the call for today?
Yeah, good morning. Well, it's not supposed to sustain that momentum. What happened was that we had 3 dips and each dip had a 100-point rally. That's as much as you can expect. Now, see what this likely scenario, the preferred scenario is that the Nifty starts building a base at current levels, 100 points up, 100 points down. It doesn't matter. So I'm assuming that the scenario could work out. And that is the trade that I'm suggesting for the Nifty. Have 24,500 as your stop loss, as it was yesterday. Look for dips, buying opportunities, take profits whenever you see rallies, and keep quiet. Let the market build a base.
Okay, so buy the dips, but be nimble enough to quickly take the profits as well at peaks. That's the advice. What about you, Mitesh? Index, are you trading today in Nifty or Bank Nifty?
Good morning. See, yesterday also I was talking about the fact that the last week's decline had kind of damaged the structure on the short term. So on the upside, I think till we capture 24,900, that's the very important mark. There's a gap over there and there are some retracement levels and moving averages. I think the idea would be that we could go and retest 24,400, 350 zones. In a worst case scenario, maybe even break it. So for me, I think, yes, for the timing, you can say that 24,400 to about 24,850, 900 is the range. But there is a slightly stronger chance of us eventually breaking downside. So the way I'm approaching the markets, and yesterday also it was the same, is that we'll try and sell closer to about 24,800, 850 levels. You can sell in the futures or you can trade via buying put options or selling call options. And possibly see if, the market once again sustains 24,400. If it does that, then I think we are safe. Otherwise, we'll have some trouble.
Okay. All right, let's also get down to stocks then, gentlemen. So, Darshan, what are you trading today?
Well, it's a mixed bag. Hindalco is a buying opportunity with a stop under 740. Bank of Baroda is a buy with a stop under 249. I have 2 intraday shorts, Vedant, which is a sell with a stop above 461, and CESC, which is a sell with a stop above 165. But as yesterday, I would prefer the buys. I must warn traders that today, should be its options expiry weekly as well as monthly. That can do very unusual things.
Oh, yes, and that caution is well taken. And I'm glad you put that reminder back on the table as well, the 30th. So watch out for the expiry-related factors. What about your stock list, Mitesh?
I have a mix of buys and sells, slightly more tilted towards the sell side. So a sell on Bharti Airtel, which is broken its short-term averages. Keep a stop at 1922. Look for targets of around 1860. Also a sell on Eternal. After a long time, there are first signs of profit booking on the charts of Eternal. So sell with a stop at 330. Look for a target of around 312 to about 310. A sell on Dr. Reddy's with a stop at about 1258 for targets of 1190. And one buy call, that's Bank of Baroda. It gave a breakout about 248, 249, completed a pullback day before yesterday, bounced back again yesterday. This could possibly head higher. So buy with a stop at 248 for targets of 266.
What was your target on internal? Sorry, Mitesh, missed that.
Yeah, about 312 to about 310.
Okay, a reason I asked is that UBS's fundamental call on Eternal today, their price target is 400. So Mitesh is also looking at more upsides. Got that. Thanks very much, gentlemen, for the trading advice. Quickly getting to Vivek now. He's watching out for the block deal action from yesterday. There were several big names. Vivek, tell us about the data.
Well, that's right. Quite a few interesting block deals in yesterday's trading session. Samman Capital, remember yesterday was a very sharp mover. ICICI Prudential Mutual Fund picked up close to 43 lakh shares in yesterday's trading session. Ather Industries, the significant names coming in over there. Amansa Holding picked up close to 12.8 lakh shares. And the seller was Goldman Sachs Equity Portfolio Fund. They sold close to 11.5 lakh shares. 2 different stocks in focus. Motilal Oswal Mutual Fund picked up stake in both of these names. Bharat Forge, they picked up close to 31 lakh shares. DCX Systems, they picked up close to 7.4 lakh shares. GMR Power and Urban Infra, Rajasthan Global Securities sold close to 40 lakh shares over there. And NIBE Limited, a name we don't discuss too often, but promoter has picked up, or rather upped his stake over there, close to 1.7 lakh shares at 1,411 rupees. And, mostly these are stocks that will remain in focus. Fund action seen in yesterday's trading session.
Okay, all right. Thanks for that. Helpful. So we'll keep these stocks in mind as well. Thank you for that, Vivek. Let's quickly move on and address the latest tariff salvo that has been fired by US President Donald Trump. And it's coming in on the movie business. He has said that any movie that is not made in America will now attract 100% tariff. Not quite sure how the tariffs will, play out, how exactly they are going to be implemented. But could there be a hit on, of course, the Indian content that is screened in the US? Let's try and understand this better with Karan Taurani, Executive Vice President at Elara Capital. Karan, thank you very much for joining in. So every day we get a tariff missile. Now it's aimed at the movie business. You tell us your first interpretation of what this means for, like I said, there's a large Indian diaspora in the US looking to consume Indian movies, and they've been doing so for years. So what happens now?
Hi, Surabhi. Morning. So firstly, there are a lot of limitations in terms of, whether or not this can be done, because this is actually more on the goods part and not on the movie. So how will you exactly impose tariff, whether it will be on the cost of the movie or whether it will be in the box office collection? A lot of lack of clarity on that front. But let's say if the tariff is imposed on the box office collection, just to give you some numbers in perspective, film industry is about a 20,000 crore market. Out of which around 8 to 10% of this market is coming from overseas box office. And within the overseas box office, US has got a reasonable share. About 35 to 40% of box office for the large marquee films is from US market. And for the smaller films, this number could be below 20% odd. But net, you can say around 25-30% of overseas market does come from US in terms of box office. Now, potentially the negative impact herein is that anyways, in terms of distributor share, largely all over the world, the arrangement is 50-50 in terms of distributor and the producer. So if the producer's earnings, kind of is at 50% of whatever that number would be, that would lead to 100% tariff, which means the earnings of a producer can get diluted over here. That's one way to, kind of look at it.
No, so you're saying that, this is going to be applied on what, the box office collections of the movie here in India? I mean, it can't be on the cost of, or will it be on the cost of the movie produced? What's your best guess at this point in time till we get the details in the tariff order?
See, it can't be on the cost of the movie produced, because cost of the movie is something which is very confidential. Now the production houses or the studios do give out any cost metrics or dynamics, right? So that's the first thing. So it'll mostly happen in the form of box office only, wherein the box office revenues, the producer could be penalized in terms of whatever earnings they're having, because eventually the earnings they're having from US market in terms of box office is the export revenue rather, which the producer would make, right? So I think that's the number where the tariff will be imposed.
So on Karan, just breaking it down. So let's say if a movie earns, 100 crores for the sake of simplicity, Indian box office collections, and say 20 crores in US box office in terms of US box office collections. So the 100% tariff should be on 20 crores. Is that what you're saying?
Yes, absolutely. The 100% tariff will not be on 20 crores, but on the 10 crores, because 10% will be retained by the US exhibitors there. So that will not be exposed to tariff. But the 10 crores which the Indian producer would make over here, that could see 100% tariff. So which means that the earnings of the producer are quite dilutive here in terms of how they're going to see a severe negative impact in terms of their earnings from this market as a whole.
Okay, so let's boil this down in terms of stocks then. I mean, what should investors be prepared for? Which names could get potentially impacted, which have a significant US exposure in terms of their slate? And there are a lot of re-releases as well that are happening. Producers or content, IP holders re-releasing older movies or earlier movies. So in terms of impact, stock-wise?
So not much of an impact for any of the stocks because, as I said, in terms of overseas box office, it's only 8-10% of the total Indian box office market. And within that, US is, let's say, 25%. So let's say US box office is merely 2 to 3% of the overall Indian box office market, which even if it sees 100% tariff or whatever, it will be a negative for the producer. But it is an avoidable situation for the producer. They can obviously, increase exposure to other emerging markets, other markets except for United States. And so not a big impact in terms of listed entities. But yes, the producer movie economics does get challenged over here in terms of the films they make. Their earnings can get depleted by a certain margin.
So you don't see any major impact on any of the listed entities?
Not a major impact, but if you look at the case of PVR for that matter, right? So things are anyways quite shaky right now in terms of occupancy levels and very volatile. So producers which have made large budget films over the last 6 months haven't seen traction. They've made hefty losses. So in a mild manner, for example, the larger films which are also appealing globally, to the US markets and so on and so forth, could see some kind of negative impact in terms of their earnings potentially. Not much from PVR perspective in terms of a negative impact as of now.
We'll wait by to understand what's the impact with regard to what Trump is going to do concretely once we get further clarity. So we'll push that aside. For the time being, let's focus on GST 2.0 since we have you, Karan. Very quickly, if you could tell us what are the trends you're seeing on consumption and what theme you're most bullish on.
So within consumption trends, very clearly in terms of GST 2.0, whatever savings the consumer is seeing right now because of GST, a lot of the traction is coming on the high value items where the savings are higher. So I think white goods and automobiles are the ones which are seeing maximum traction as of now. Other sectors within discretionary, whether you call it the likes of online BPC, food, apparel, footwear, everything put together, is not seeing that greater traction, at least in the near term, last couple of weeks. But yes, you could see pent-up demand in the month of October because September first 3 weeks was quite weak for the entire discretionary pack. So some demand boost will definitely come because of GST 2.0. But as I mentioned, except auto and consumer durables, other discretionary items, you see the boost and growth rates in the phased manner over the next 6 to 8 months. The delta positive impact for the GST part in terms of discretionary bucket is not more than 0.2% to 1.5% in terms of revenue upgrades. So it's a very mild cheer for this discretionary basket as of now. And we'll have to wait and watch in terms of how things pan out. There are some selective companies which have seen a two-way positive impact because one is because of the consumption boost and savings in the consumer wallet share. And some companies have also seen a revision in terms of raw materials like hair care. The GST has come off for Jubilant Foodworks or the QSR companies. The food cost has kind of come down. So there is ample cushioning for better growth because of the lower pricing which is there, which could drive volume growth for these companies. But again, this will happen in a phased manner. We don't expect that in October, November, December will be like a blockbuster quarter for this discretionary pack specifically.
Okay, so let's see, slow and steady towards maybe Q4, maybe next year Q1 when we have the full impact of the GST cuts, all the new MRPs, everything brought in, we'll know how the consumer is really reacting. Very quickly, just a clarification, Karan, before we let you go. The value that you gave, 20,000 crores, that's value of the entire Indian film industry or only Bollywood?
No, Indian film industry across genres.
Across the country. Got it. All right, thank you. Very helpful conversation. Thanks for stopping by. You have a good day. That's Karan Taurani, view of Elara, that not too much impact on the listed stocks with respect to this tariff business. Not even on PVR. Quickly getting to our 9-10 calls. Let's go back to Sudarshan. Sudarshan, what's the stock?
That's Hindalco. Buy with a stop under 740.
And Mitesh?
I'll go with a sell on Bharti Airtel for targets of around 1860.
Got it. Thanks a lot for that. Well, let's hop across to Nimesh. She's here to tell us the standout brokerage report of the day. Nimesh, take it away.
Hi, Nigel. So today's standout is in Kotak Mahindra Bank. A big report from Morgan Stanley. They have an overweight rating. They've raised the target price to 2,600 on Kotak Mahindra Bank. Morgan Stanley believes that Kotak Bank is best set to generate growth in an improving economy. And the loan book is well diversified with leverage to commercial banking, vehicle financing, as well as unsecured loans. They expect incremental spreads to improve, and that will aid to faster loan growth as well going forward. For FY27, FY27-28, Morgan Stanley expects that the core PPOP growth and EPS growth will return back to 18 to 20% by 27. So big numbers from Morgan Stanley and Kotak Mahindra Bank. So overweight rating and a target price of 2,600. This is a second big report on Kotak Mahindra Bank. Last month, UBS actually upgraded the stock to a buy as well. So positive notes coming in this time from Morgan Stanley and Kotak Mahindra Bank.
Okay. All right, Nimesh, got it. Thanks very much for that. Well, as we get to market opening, 57 points up on the Nifty. And I think we can probably just have a quick glance at the stocks. No, actually, before that, Nimesh, on Coforge as well, let's just revisit that call. You had flagged it off earlier. But that's a big one too from CLSA.
Well, absolutely big one, right? They've initiated coverage on Coforge with a target price of 23.46, a potential 50% more than upside from current levels. They believe that it's one of the top 10 companies in terms of revenue and have a very diversified, returns as well in terms of revenue and from financial verticals and travel vertical. Look at the number for FY26, FY28. They're expecting close to 15 to 16% revenue and EBIT CAGR. For Coforge. So that's the reason why a big initiating report on Coforge with a target price of 23.46, a potential more than 50% upside.
Okay, well, this is one of those. This is not a tinkering call, right, Nimesh? This is a directional call. Okay, more later. Stocks up 2% in the pre-open, and we'll have more coming up. What do we have? First, couple of seconds to, just a couple of seconds to go for market open. So we'll look at rates, then we'll get down to individual names. So the opening bell goes off about 0.25% higher, 24,680. You've got the Nifty Bank, which is up about 0.4%, 54,660. And you've got, what else? Midcap index up about 1/3%. The small cap index will come up with some gains as well. So out of the gates, right of the word go, about 2:1, advances to decline, although I suspect that will change as we go along. But it's not a bad start. Back above 24,700. I mean, actually something similar to what we saw yesterday. It's just yesterday, of course, markets were not able to hold on, and there were multiple waves of selling which hit some recoveries as well. But finally, we ended unchanged. That's the Nifty heat map. Overwhelmingly positive. There are some stocks down in the red as well. I mean, the setup still, of course, remains the fact that at least large cap indices remain extremely oversold. So that backdrop is there, but we'll have to just see how much is in the tank for the market to even see some sustainable lift, even if we are able to remain, even if we are to remain in the range, broad range for the Nifty out there. So 24,700 to begin the session. Surabhi.
Okay, let's look at the gainers. Titans had a good showing so far this week. It's only day 2, but it's looking good. 2% up. Nifty winner. Then there's Power Grid, there's Hero Moto as it makes its way out of the index. It's having a good session, at least. Good morning. 1.5% up on that one. Asian Paints, BEL, which announced some order wins. These are all your gainers. Steel stocks are looking good. Hindalco, JSW Steel. Let's check Tata Steel if it is part of this. Tata Steel also up about 0.5%. So metals are in form. Tata Consumer as well on the upside. Kotak Mahindra Bank, the stock that Nimesh was just talking about, that standout brokerage report, it's up about 0.5% at this point in time. Not too many stocks on the downside, actually. Tata Motors down about 0.5%. There's ITC and Tech Mahindra, but that's about it. I mean, the market seems to be finally in a bit of a festive morning mood, at least. Let's see if it lasts. 70 points up on the Nifty. Nigel.
Well, Man Industries, that's the stock that's getting hammered on the downside. The regulator has pulled up some of the, people some of the promoter entity and the like. So that's why, in fact, that's one stock that's getting absolutely smashed in today's trading session, down close to around, I think, 15% as we speak. The company, though, they've come out with the clarification that they're cooperating with the regulator and they're looking for a better outcome. They're maintaining that they have a good, a good order book as well. For the time being, the street is not buying into that. At the low point of the day, volumes massive. So we mentioned about Titan. Kalyan Jewellers, that's popped up in trade as well. Good uptake is what we're seeing on that particular name. The other big winner is DCX Systems. Just pull up that stock. Yesterday it ended at the low of the day. By the end of the trading session, we got to know that Motilal Oswal was the one that sold. But they won an order. It's only 50 crores odd, but a strategic one because it's coming from an Israel company. So I guess that's why the street likes it. That stock up and about in today's trading session. Another one is Cybertech. We don't talk about it very often, but they've declared a dividend of 20 rupees or thereabouts. So I think that was one of the top gainers, Cybertech System. That stock up and about in today's trading session. Saman Capital in the F&O ban. Big fund buying yesterday. And they could be looking at raising some capital as well. Continues its good form. Friday, late in trade, we had told you that it's possibly coming out of the F&O ban. That's what happened. Now it's back in the ban. But massive action is what we saw on Monday. All those that wanted to get in have got in. And Vascon, stock opened 2% up, corrected, but that dip has got bought into, still holding with a gain of around 1.5%.
Without making a It's not a comment on Samman per se, but I mean, just the broad category of the theme which is playing out in Samman, right? When they, as they say, when stuff goes from bad to good, as I said, it's not a comment on Samman. I mean, there's a big, sometimes there is big re-rating which happens. Lots of issues. I mean, the erstwhile Samman. This was Indiabulls Housing, if you remember. But, I mean, there is, attempts afoot to turn this. And I think, ICICI Pru coming in, etc., perhaps a case in point that they're trying to attract institutional participation. I don't think there were any institutions before ICICI picked up some 42 lakh shares yesterday. So 4% on this one, 160 or so. Devina Mehra is with us, founder, chairperson and managing director at First Global. Devina, good morning. Great to have you with us here. Thanks very much for joining us. We're still stuck in the range without really a line of sight, either up or down. And no real triggers as well in that sense, right, Devina? What are your thoughts to kind of sort of kick this conversation open?
Good morning. So, yeah, I mean, because the news also has been there on both sides. So tariffs in India have been positive, which is the GST, and tariffs which President Trump has brought in has been negative. So, I mean, markets will always frustrate you one way or the other. That's the nature of markets, that they will never do what you expect them to do. And when you get frustrated is when they will suddenly do something you didn't expect. So actually sentiment is a contraindicator. So that's what all research studies across the world say. So if I go back to July, August last year, the mood was euphoric. I mean, people would come and tell me that I don't have, and this I'm talking family offices, saying I don't have unrealistic expectations, but I'll be happy with the 30% compounding. I said that is an unrealistic expectation. So when the mood is so buoyant, and this is what studies show, the next period returns are below normal. And when everybody is anxious, asking, should I stop my SIPs? Should I get out of the market? The next period returns are above normal. And I don't see it. That I don't know when the market will move up or that it will. I'm not saying that it won't move down at all. But if you look at what you should be doing, I don't see an imminent crash. And most of the time, it helps to remain invested to the extent of your equity allocation. And again, I'm probably repeating myself, but don't have 100% in equity, even if you are young, even if you are in a good job. But whatever is your equity allocation, remain invested. This is not something you asked, Prashant, but I caught the tail end of what you were saying earlier. So not commenting on a stock, but one of the very interesting things, very large global fund manager told me, he was one of the people who coined the terms emerging markets. So he's like that much of a stalwart. And he said that, and which I found in my life also, in my experience also, that the big money is always made when a company goes from bad to average, not from when it goes from good to very good. So that's actually true.
From one end to the other, but yeah, from just turn, right?
Bad to average. So bad.
I said bad to good. You said bad to, yeah, I mean, not great.
So
we both agree, not great.
Bad to good, you are better off than somebody going from good to great. So, and this is, even in cyclical industries, I have found this so often that when the turnaround in whatever the commodity price or whatever the reason for the cyclicality comes, it is the worst stocks in that business that do the best, because the cash comes in, they can pay off their loans, and there's a reflexivity. The stock price goes up, they can raise more money if required, and suddenly, if you have a 1% a net margin, if the EBITDA goes up by 2% points, it is a tripling of the net margin. Whereas the guy who was already at 10. It is only from 10 to 12%, so the percentage is not so high. So it's a very interesting phenomena, which is why I always say that do the actual maths. Don't do upar ka ki that this will happen to margins and that will happen to profit. Do the whole exercise as to what happens to cash flows, what happens to balance sheet if this happens, and you'll see a very different scenario emerging.
Very, very interesting. That gentleman I'm guessing you're referring to would be Mr. Jim O'Neill, the father of the BRICS acronym. No, someone else. Okay. All right, all right. Devina is not taking names. Devina, but just to go back to the earlier point that you're making, you've always made that point. Don't keep all your eggs in one basket. And this year, if any, has been such a stark reminder of that cardinal principle of investing, right? I want to get your thoughts first on gold, then we'll talk about the US market as well, where you've always, advocated a very sensible allocation. On gold, though, because it's making a lot of investors feel silly, just to see something go up 40% in 1 year. So are we at a point of excessive optimism now? There are people who are feeling major FOMO, thinking, should I now at least have a silver ETF, gold ETF? What would you say?
I would say be very careful. I saw a headline somewhere saying that gold has not seen this kind of rally since 1979. That's the last time it saw this kind of rally. So I said, let's go forward from 1979 and see what happens. And gold made a high in dollar terms in 1980. And thereafter, if I go from 1980 to 1999, 19 years, imagine what the return on that investment in gold was.
So that doesn't answer my question. Buy or not buy now? Those who bought are super happy. They're waiting for a bumper Diwali. The ones who didn't allocate enough are wondering, what did I do this year?
I'm just coming to that. So it came down 62% from that high. So the 1980 price of gold was not crossed till 2007. For 27 years, it was underwater. Going down 62%, as I said, in the interim. The next high, it came down 40%. So if you look at the dollar chart of gold, it has been more volatile than equities. Gold has been more volatile than the S&P 500. So it's no safe haven. In rupees, the chart looks good. So even the time that the dollar price went down 60% over 19 years, it tripled in rupee terms because rupee has been depreciating. So at that time, the gold was the only way to get kind of overseas exposure. But now you're not stuck to gold. So now it is in frothy territory. I'm not saying it may or may not go up. But this is the time when you get FOMO is when you enter at the wrong time, because usually that asset has had a huge run up. Everybody on the street knows about it. And then when you get it, it is dangerous. So have some gold in your asset allocation, but it should not be 25, 30%. And yes, we have added silver also, because silver is looking good compared to gold. And silver also has industrial usage. And with the renewables, that is one area where silver is used. So actually, in terms of industrial demand, also silver has been going up. Coming to the other part of your question, which was on global allocation. So suddenly, because the Indian market has not been doing very well, people have started thinking global. But number one, you said I asked people to go for US allocation. No, I don't. I always say global. US is not the world. That's the number one thing to remember. US has been outperforming for a very long time. Doesn't mean it will always outperform. Since January in our global funds, in fact, we've been underweight US. We've been overweight Europe. So till June, July, of course, Europe had huge outperformance. Now US has done a bit better in the last couple of months. And we've been overweight China since last year. So you have to make these tactical reallocations. Unfortunately, because now suddenly India has not been doing well, people are talking global. A lot of people with no global expertise whatsoever are positioning themselves as global experts. So be beware of that.
Hi, Devina. Good to see you. And the point on gold, there are a few periods that I went back, 45 years or thereabouts in terms of data. 1980 to 1986, gold didn't move much. 1992 to 2002, I think it didn't move that much, in terms of, I think, percentage terms, it was some double digits across all those years. And 2012 to 2019, that's the time when it didn't move too much. But in the last 1 year, that's been the asset to go forward. That said, Devina, let's talk about equities. Give us a couple of stocks with all due disclosures that y'all are very, very bullish at this juncture. Couple of stocks, if you could name it, please.
So let me tell you this, that recently, one of the bigger banks asked us that, which are your high conviction bets? And I sent them a 3-page note on why, in principle, we do not have high conviction bets. Because what is a high conviction bet? That you bought into a story, you're married to a stock. That's the last thing we want to do. So we have a very diversified portfolio in our PMS. In fact, even in our small case, we typically have 25, 30 stocks. And so it's across industries. So it is really, I'm not making a big bet on a single stock ever. That's not something I do. Where we are overweight has been since last year. So now almost, 1.5 years plus has been pharma, healthcare, auto components. We've added a couple of auto companies in the last rebalance. So what has increased and become overweight in 2025 has been FMCG. After that, of course, there have been individual stock picks, something in chemicals, etc. Banks, we are not overweight, but we are holding more than what we typically hold because banking as a sector, after many, many years of underperformance, is doing better this year. So that would be the broad strokes. But our PMS is called India Super 50 because we hold 50, 55 stocks. So it's not like a 1 or 2 stock bet. And no one knows the future, so never tell yourself that I know the long-term future of this company, whether it is HDFC Bank or Amazon or Titan, or even the management could not have told you the 20, 30-year trajectory.
What are the newest things you've done in this portfolio, Devina, if I were to put it like that?
So this year, more FMCG companies have been coming up. So as I said, this year we have become overweight in FMCG. We've added a couple more of the auto stocks. We already held auto. So that is, and as I said, we've also added to banking this year. Now, of course, now that the quarter is ending, now we will be looking at everything once from base zero. So we forget about what we hold and we look at if we had cash today, where would we invest? Of course, typically from one quarter to the other, 85-90% of the list is the same. But as a discipline, it is very important to tell yourself that because there's something called endowment bias where you overvalue what you hold. So I say the hold rating exists only because of endowment bias, because if you see objectively anything you won't buy today, you should not be holding.
Yeah, absolutely. Devina, since you have a global perspective, you've looked at other markets and what's happened, bigger trends, etc., right? You got to, obviously you do apply some of that to, what happens sometimes, not always, but you got to use that knowledge in the Indian context as well. A lot of trends are global in that sense, right?
Right.
And in a variety of businesses, and I can, there are companies, for example, in logistics where stuff which has happened globally, and these are newer businesses, relatively newer listings in that sense. Of course, in compute and AI, etc., we don't have very much, but we have a couple which, of course, now are trading at 50 times forward earnings, etc. So valuations perhaps are a bit of an issue. What else? I mean, you got a few construction, for example, prefab stuff. I mean, is there? Do you kind of sort of actively look at some of this stuff? Because you got there's the old economy, banking and consumer and FMCG. I mean, that'll continue, and it's got to be a part of the portfolio. But these are more niche businesses where you've got to be careful, but makes sense to look at them, doesn't it?
See, anything new is high risk. So if you look at new technologies, I read the farewell column of a technology columnist after 40 years of writing that column. And he said, I can just go back and say so many technologies were launched with great fanfare, which went nowhere. So 3D televisions, Google Glass, Apple Car, and I can go on. So one is that which technology will succeed? How long will it take to succeed? We think, electric vehicles is something new. Reva car was launched, I think, 23 or 24 years ago in India, I'm talking about. I'm not even talking globally. So which technology will succeed? If it succeeds, which company will succeed? Will it make enough return on capital? That's the other part. So if I go back to the internet boom, there was this thing that, fine, I mean, whoever wins, we'll need the internet's infrastructure. We'll need things going across continents. So there was this company called Global Crossing.
Yes,
which laid on
the famous case.
Yes, and,
No, no,
and see the
absolutely.
cables are still in use.
No, that's a very
And
famous case.
global
My question is not that, Devina. My question is proven stuff outside, which is happening here now. This is not stuff which is...
What is, I mean, AI, what is proven stuff?
Not AI. I'm not talking about AI. AI was just gave an example. I'm talking about, something. I'm not naming names because you don't want to name names and you don't want, you can't.
Recently, there was this study on where how these AI models were being used.
Yeah.
And during the summer vacation, 70% of the usage went down.
I know that.
So something you might invest in. And now to be in the game, you have to invest. You have to invest in the data centers. You have to invest in the AI. You are hiring people, individual people at 100 million, 200 million, 500 million dollars. But will the market pay the return? So global profit example was only that infrastructure was required, but you will not get a return on capital on that. So that's the part which is hard. And a technology that succeeds can still be a graveyard for investors. Automobiles and aviation from the 20th century are like poster child for that they changed the way the human beings lived, but they didn't make returns for the investors. Also be very careful. I mean, the story is very interesting at any point in time. Again, data centers. What is data center? When you set up a data center, what is it? It's a lot of real estate, a lot of equipment which depreciates very quickly, a lot of power and energy. So that is
absolutely.
It's a
Sometimes I feel, Prashant, Devina was listening into her as well. Sometimes I feel maybe on a lighter note, it's easier to sell more complex stories, right? If you're selling, if you have to convince investors about a toothbrush, toothpaste business, 100 questions are going to be asked, right? But it's data centers, it's some voodoo.
दिन में कितने बार brush करते हो?
But it's new age tech which has not been proven. Maybe it's easier to sell in the hype era. We are in the hype era. How it ends, we will all find out. I think in a couple of years.
I think absolutely what Devina is saying, absolutely completely cautionary advice, absolutely good stuff. And maybe this is not the platform, Devina, but maybe we can invite you back on maybe some other program and we can go into some of this detail, right? Because this is interesting stuff. It doesn't apply to here and now, this stock or that stock, but I think how you think about some of these things, I think it's important to debate and discuss. Thank you very much, Devina, for joining us.
Thank you.
Great speaking with you. Really appreciate your time here on CNBC-TV18. I think we'll just look at that, right? Markets were up 70, they're up about 30 now. So like yesterday, this is just the start, not being able to hold on. 24,660 is where we are at. I just want to quickly highlight one or two names. There's Blue Dart and there's All Cargo, All Cargo Gati, which is in focus. Mangalam is here to tell us why. Mangalam, over to you.
Well, both these stocks are buzzing in today's trading session, and there are a couple of reasons for the same. The first one, obviously, is Blue Dart has, as an annual exercise, announced their price hike as well, which is usually to the tune of 9 to 12%. So no different from what the company typically does, at the end of September every year. So that's something that the street has been anticipating. And All Cargo Gati has also gone ahead and done that. But the good part is because of the GST cuts and the boost on consumption, etc., and the early indications that we have from, Amazon's sales and Flipkart Big Billion Days sales, that e-commerce activity is picking up, especially ahead of the festive season. So all these factors working for these solutions providers for e-commerce logistics in this quarter. But come January, you will have an effective price increase between 9 to 12%. The company usually gives their clients a quarter to go ahead and, intimate them that there is a 9 to 10% price increase so that there leaves some room for negotiation. The important part is what the stocks do between these two announcements. Because if you look at it, over the last 12 months or so, Blue Dart from the highs has seen a correction. All Cargo Gati too hasn't seen a big rise in the stock price. So the price move has come on account of the price hike that the company has announced, but delivery, literally and figuratively, on those price announcements and their impact on the revenues is something that the street will be tracking over the longer course of time.
Okay, all right, Mangalam. Thanks a lot for that. Well, let's move on then and let's invite our next management. Premier Energies has signed a near $20 million solar power contract in West Africa. We have with us Mr. Vinay Rustagi, the Chief Business Officer at Premier Energies, who joins us on the show. Hi, Vinay. Good morning. Thanks a lot for joining in. Coming across to you. For the time being, just highlighting the three broad points that we're going to be looking at. The rationale behind the West Africa foray. And is it a one-time or are there more such forays planned? Point number two, the impact of the lower GST on renewable sector. And finally, the outlook of Indian module prices amidst the rise in capacity. Well, Vinay, good to have you on the show, sir. I recall earlier you had said that your focus is going to be more domestic in nature and you don't have much capacity for exports. So tell us more about this African foray. What kind of capex will be required from your end? Is this the one-off or do you have more plans to get into the global arena?
Well, thanks for having me. And you're right, we did say that for us, the focus in the short run is the Indian market. Having said that, we have to bear in mind that today India is one of the largest and the most competitive manufacturer of solar panels in the world after China. The domestic manufacturing ecosystem is growing very strongly, partly because thanks to the government's support for Make in India. And as we grow our capacities and capabilities, it is imperative for us to look for new growth opportunities. And hence, you will see us tapping into markets in Africa and other countries around the world to find new opportunities for us.
But could you tell us, in terms of the investment initially you mentioned around $20 million, what kind of an asset turn will you be looking at in terms of these markets? How big can the pie get? Some broad outlook in terms of the total quantum you're looking to spend and how much you're looking to penetrate into that market?
See, in terms of the outlook, the money that we're going to spend on this, it is going to come out of our existing operational capacity. So there is no capex involved. The $20 million number that you refer to is the order value. And this order value comprises installation of some rooftop solar systems, solar heaters, as well as solar street lights. It'll all come out of our existing production lines in India. And there is no new net incremental capex involved for us. In terms of the market size, like I said, solar is booming around the world. Africa is a great opportunity, particularly as the country has very low penetration of power. And off-grid and new distributed solar systems are going to be instrumental in electrifying most of the continent. So hence, we are looking at that opportunity out of India. But in terms of new capex, there is nothing as yet.
I just did a quick search through in terms of competition in Africa. And that's what I really want to, understand. So, Vinay, there are players like Scatec, EDF Renewables, First Solar, which is US, EDF is French for the benefit of our viewers. The Italians are there, ENEL, Green Power, etc. So the who's already reached Africa, right? In terms of just trying to gain some market share, give us a roadmap. Say over the next 3 years, how much of your business will continue to come in from India? How much will you target Africa? And will you at all look at the US? Though US has enough issues of its own in terms of tariffs, very high regulation. But I don't know, since you're looking global, will you look towards the US at all?
So I think there are many issues that you covered in your questions. So let me try to address them. So when you talk about players like Scatec and other European players and maybe people from China coming into Africa, that's absolutely right. But, the sector has a very distinct, I would say, three-part value chain. One is the project developers. These are large companies who are setting up mainly ground-mounted projects, and that is where Scatec and some of the other big majors from around the world are focusing on. Second part is the EPC, which is people are just buying the equipment and installing these systems. And the third part is the equipment supply. Equipment supply is where there is a massive shortage in Africa. And most of the equipment is imported from other countries, including China and India. And that is the market that we are really focusing on. So as far as we see, there is not too much competition other than, I would say, China. And hence, we are kind of really trying to see with the government support if we can find a good, attractive market, which does open up a new growth opportunity for us. So I think that is the outlook in comparison to Africa and how we are focusing on that market. There was an earlier question about GST. So I think in terms of GST, I think it is a very good move for the entire sector.
Vinay, just 1 second. Sorry, to complete the Africa point.
Sure.
So when you have to compete with the Chinese in that international market, typically when you compete with the Chinese on anything, the competition comes down to lowest cost pricing. So is that an arena that you can compete in effectively at all and yet retain profitability and decent margins? I mean, what will be the margin of your Africa business vis-a-vis your India business? Again, I'm not talking about immediate. I'm talking about a 2-year roadmap or 3-year roadmap.
So I think in terms of the competition, you're right. The direct competition is with China, but then there are ways to open up that market, particularly with the government support. The government has various tools in terms of trade treaties, developmental aid, and Exim Bank financing, etc., which can open up a very attractive opportunity for India, and that is what we are mainly looking at. So Africa does need a lot of developmental aid. The Indian government has a very good relationship with many of the countries across Africa. So we are hoping that with the government's help, we can open up this market. And in terms of pricing and margins, so the overall pricing and margins for us are largely in line with the current business in India and overall very attractive, meeting our threshold returns. Your other question was about what is the 3-year outlook for us. So I think it's very difficult to say right now. We are looking at the US market as well, but obviously there is a short-term uncertainty because of the 50% tariffs. Plus, there is a new anti-dumping duty petition which has been filed in the US against imports from India. So I think there is a short-term uncertainty. But again, as you would know, the Indian government is trying to sign a free trade agreement with the US, and there are expectations that some of these tariff levels will be reduced, ultimately again opening up the US market as well. So the long-term outlook for the Indian exports, I would say, is attractive because as we are growing capacities, the cost of production is coming down, and solar demand is growing everywhere in the world.
Vinay, can I come in? Morning. Did you watch President Trump's speech at the UN? Did you hear?
I did. Yes, I'm aware of that.
So, I mean, of course, that is. So he said, a completely full-throttled attack, right, on the what he called the green energy agenda, dismissing wind, solar as costly, unreliable, return to fossil fuels, nuclear, calling carbon footprint a hoax, and warning other countries like Europe, etc., that their energy policies are a disaster. Now, there is, of course, a tariff bit in the US, but there is, of course, I think the bigger issue, tariff is just a manifestation of the underlying policy and the fact that they don't like all this stuff, right? At least for the next 3.5 years. 3.5 years later, we'll see whatever happens. But even with regards to Africa, Vinay, I'm assuming a lot of aid comes from US. I mean, US is the capital of the world, right? And a lot of aid flows through those channels. Even multilateral organizations. US has been the largest donor historically for and these are all technologies where you need a lot of government support for adoption, and then they become self-sustaining. Isn't this a problem then?
So, let's take the US market. I think there is at the top level, there is some governmental resistance to renewables, but I think the overall picture for renewables, even in the US, remains very compelling. So if you look at the demand, there is a strong demand outlook because the end consumers, whether it is the IT companies, the industry, the retail consumer, the households, they still want solar solutions because this is the most competitive source of power. So we do expect the demand for solar to stay. Maybe there will be some small blips here and there. But overall, I think the market kind of is still growing in our view. And hence we are kind of looking at that market. When it comes to Africa, you're right. There are various competing players, whether it is the US, China, or India. Look, I mean, I think India has to find its own path in the continent.
No, Vinay, my question is specific. Funding for projects. I mean, governments are there are developmental organizations fund a lot of this, right? Because countries there are poor, and they are. So isn't that is funding going to be an issue at all? Because the source of the largest amounts of capital is the US, and there is a very specific targeted crackdown on many of this stuff now.
So, okay, I'm not sure if US is the largest funder over there, but I think the Indian government also is very keen to work with the African nations to find an export market for Indian products. India is giving developmental aid to many of these countries, and the best example is our project in Benin, where the aid is coming from India in the form of cheaper financing for these products. So I think India is also the founder of India International Solar Alliance, which is a body which comprises over 40 nations from Africa. We are undertaking initiatives to reduce the cost of solar equipment for the African consumers. So I think India can still play an important role in the growth of solar power in the continent.
No, I wish you all the best of luck. I mean, we need more renewable power despite what President Trump says. And, that speech, certainly carbon footprint is a hoax. I mean, I don't know what to say to that, what to make of it. But anyway, it is what it is, at least for the next 3.5 years. And we've got to sort of navigate through some of this stuff. Thank you for joining us here, Vinay. I appreciate your time. Sorry, you were saying something, Vinay?
No, I said thanks for having me.
All right, thank you very much. We'll come back. Keystone Realtors on demand trends here in Bombay and outside on the other side. Stay with us.
Welcome back. So the market continues to drift along, 30 points up. Not too much of a major move either up or down. That's what we have for the time being. We're putting the spotlight on now the real estate space, and the company on our radar is Keystone Realtors, and we have Bowman Rustamirani, Chairman and Managing Director of the company, joining in. Bowman, always a pleasure to have you in. Thanks so much to talk about. So I just want to quickly lay it out for our viewers just to focus the conversation. Now, 3 key talking points. Number 1, of course, we want to understand the impact of the GST cuts on cement and how that flows into the real estate sector. Of course, we need to understand some concerns, particularly in the super premium luxury segments. There is some chatter about a plateau, perhaps, in demand. So let's see what Bowman has to say on that. And then, of course, redevelopment, where Keystone is very, very active. We'll find out what the latest is, especially in Mumbai. So, Bowman, there you have it, the questions, or rather the themes laid out for you. Let's first start with GST. That's the good news, right? On cement coming down lower. How does it sort of improve things for you? Will some of it be passed on? I mean, I don't know, it won't have a material impact on the end price of a house. But just what does the cut mean for the industry and for the end buyer?
Well, thank you for having me on your show. And I must say that, this season, which comes along in Q2 and now continues in Q3, with regards to festivities in India, become a prime time for people to buy new stuff, whether it's cars, whether it's homes. And we are seeing this trend work out much stronger this year, given the fact that GST rate cuts almost came in at a time when, to improve the mood, the buying mood of the people. And we've seen the impact, on the 22nd itself, we saw the walk-ins increase. I must say the only thing that's played a dampener in the whole thing, and pun intended, was the rains. And weekends are generally when people are walking in to buy new homes, check out availability, etc. And we've had a washed out weekend last as well as the earlier one. So save and except that, I am very optimistic about the Diwali season, which is going to be in October this year, and we've observed that every year when Diwali comes in early, it actually makes for a bumper sale for homes as well. And our teams are gearing up more for the mid-mass and the aspiration category. Also, the premium category has seen a great amount of demand. I must tell you that the GST impact has led to a feel-good factor amongst people. The buying power or the belief that their buying power has improved and prices have been brought down are helping. On the real estate front, GST has been cut down on cement from 28 to 18. I can tell you most of the Mumbai developers, we use RMC concrete, and over there it was always 18%. So really no impact on that. And the other area where the impact will be seen is marble blocks and granite blocks. We'll have to wait for our suppliers because we buy them, in cut to size, etc. And over there's been no change in the GST. So we'll just have to wait as to what is passed on to us. What I can tell you is that the consumer durables or the air conditioners, the washing machines, all of these price reductions will definitely make the adornment of the homes a lot better and will impact our home buyers. So every home has, I would say, even if you have a 3-bedroom or a 2-bedroom, you'll have about 4 air conditioners, even 2 in a hall and then 1 each.
No, absolutely. And, even on ACs, the reduction is 10%. So it really, really helps when you're doing up a new house or even refurbishing your current house. But the other point, and it's interesting to note, you're sounding as optimistic as ever. And you're saying that even in the premium, at the premium end of the spectrum, there is as much excitement, because I saw some reports and some chatter, and I was speaking to some fund managers on the mutual fund side, and they were saying that they're picking up some hints of some sort of a plateau in excitement or, demand at the super luxury end. But you're saying that is not to be noticed, at least not in Mumbai, is it?
I'll tell you, it's exactly the opposite. And basically, Mumbai homes, if you take an average price, they're between the 17 and 30,000 rupee bracket, right? It's homes in prime locations, Bandra, maybe Juhu, maybe South Mumbai, certain areas of Worli. All of these is where you see prices going from 50,000 all the way up to 100,000 rupees and maybe even higher, which is what we keep seeing in the papers time and again. Actually, there has been a very strong upswing in demand for the luxury and uber luxury. And I like to define these as 7 crore to 15 crore and then above kind of homes. As a matter of fact, the demand has improved, has increased. And like I told you, our sales teams give us feedback that basically, if not for the rains, the last 2 weekends, you would have seen a bumper Q2, but now we are waiting for Q3 because all of this will spill over into Q3, and Diwali being a very auspicious time to make or buy a home is also going to assist this process. So, au contraire, you are not seeing any kind of a slowdown in the Uber.
You're saying it's the other, it's the other way, which is you're saying it's accelerating. That is interesting.
Yes, it's true, but I'll tell you, the overall unit sales have gone down to 97,000 versus 107,000. Mumbai and Pune account for still about 48% of the unit sales. And overall, while there's been...
What percentage, Baman, sorry, what percentage of your portfolio is in that, not the 7 crore price mark?
So now, again, a difficult question because we are having many launches come up this year. We kind of did project acquisitions or launches of about 4,000 crores in the first quarter itself. And we've seen a very strong surge in demand in homes that were launched in the Bandra area. So that gives me the confidence that this continues to be a growing segment. And we've also continued to do extremely well in our Mahim sales. There's 180 Bayview, Mahim Matunga sales have done extremely well. Our Versova launch, which is like, again, a premium segment because it's on the water, has seen a great amount of demand and buy.
Can I? It's an unfair question to ask you because you are developing these specific projects and they're doing very well. But broadly, and I've asked you this before, how much of this boom that we saw was related to the wealth effect from stocks going up over the last few years, and stocks now have been flat for the last 1 year. Broadly, they've been big wealth creators as well, but on a broad basis, as some of this runs off in terms of marquee projects, Matunga, for example, is the area which did not have very many high rises. They're coming up now. So it's like a cluster-specific thing. Bandra, perhaps, is another one. But in terms of direction of travel, Boman, will the pace slow down if just because of the fact that markets have not done well?
I don't have any data that points in that direction, quite honestly. As a matter of fact, all the feedback that comes to me from my team as well as other teams in and around Mumbai, even yesterday I was visiting a fellow developer's high-end development in Worli, and they were pleased as punch about the sales. As a matter of fact, they were telling me that the larger apartments, which would obviously make them a little more expensive, are the ones that are selling out faster, and they're even converting some of the smaller apartments, joining them together and making them larger apartments and selling. So really, I have no answer for you that points in the direction where you're stating about a slowdown.
Maybe it's all the stock sales. Maybe it's all the.
That is something you and I can both debate about, But I've said this before, and I'll say it again. Not only am I seeing buyers from Mumbai buying, I'm also seeing in it, especially these high net worth or high price areas or the high value areas, I'm seeing buyers coming in from all across the country and buying in Mumbai. And if you open the papers on any given day, you've seen the kind of sales that have taken place, in the Andheri belt recently by a developer who came in from Delhi, and they've done phenomenally well, and they're looking at a lot more in this area. We're saying that we are seeing the same kind of results, and I think it's only a matter of a few days. This quarter will also announce itself. And all the listed players who are doing the larger developments will also have a similar story to say.
Okay, all right, Mr. Rani, we appreciate you joining in. You're sounding very gung-ho about demand going ahead as well. And thanks a lot for the suggestion with regard to the BSA 650. I tried the bike out. Quite impressed by it. Thanks a lot. Catch you soon. Thanks a lot, Mr. Rani.
Thank you, Nigel. Thank you.
Have a good day ahead. Well, let's get back to markets. We have Vinay Rajani, the senior technical and derivative analyst who joins us on the show. Hi, Vinay. Good to have you back on the show. Tell us, what do you make of today's trading action? The good news is, at least it appears that the bulls are giving it a bit of a fight, and we're hoping to break that losing streak. How would you trade the index?
Yeah, good morning. So a more than 800 points fall in the Nifty. As far as today's trade is concerned, today I can see that breadth of the market has been quite strong since morning, and many stocks and sectors are performing like we are in a bull market. If we see the movement of PSU banks and some of the metal stocks, some of the PSU stocks, as well as some oil and gas sectors. So 3-4 sectors are showing the sign of bullishness. Breadth of the market is improving. Nifty seems a bit oversold, though we have not got any reversal sign on the charts of the Nifty. But there was a bank Nifty reversal pattern yesterday on the daily chart. That was the long leg doji candlestick pattern in the bank Nifty. And FMCG, which was not performing, now started recovering from the lower level. So it might happen that Nifty might take a pause in the overall downtrend, because Nifty has been falling for 7 consecutive sessions, and now many stocks and sectors have started performing. So I think there could be a consolidation in Nifty. But stock specific, I am bullish for the day. It might happen that PSU banks and metals can do well. So stock specific bullishness can be expected from the market, and I don't see any broad-based market selling in the from here right now. At least we can expect a pullback. As far as Nifty support is concerned, we believe that 24,600 to 24,500 is a very strong base. So that should not break immediately, at least. So we can expect some pullback or consolidation in the Nifty, but stock specific, yes, we are bullish for the day.
Okay, got it. What about stock specific action?
So as I said, our view on the PSU bank is bullish. So Bank of Baroda, which has actually shown a great amount of resilience in this current downfall of the market. So Bank of Baroda is looking strong on the charts around 259. One can go long. I would suggest a trading stop loss at 255. On the upside, I'm expecting a target of 267. The second pick I would pick from the metal space, Hindustan Zinc. So Hindustan Zinc is looking strong, and it has recently broken out from the consolidation and now trading above the key moving averages. So 475 is the rate around which one can go long. I would stop loss should be 467. And immediate target I can see on the chart is around 490. So Hindustan Zinc and Bank of Baroda with the mentioned stop losses.
Thanks a lot for joining us and giving us those quick calls, Vinay. Well, we have a few listings that just came up for you on the screen. I think we should get some of them up for you. I think let's get a few of them. Yeah, we have the debutant coming in from Anand Rathi Group, another stock that's listed. I think that had a mild positive gain out there. Solar World Energy, the solar EPC player, that in fact has a gain of closer around 1 to 2%. So a flattish start is what you're seeing. Share Sai Tech, we'll have the management shortly with us in the next half hour or so. That one, in fact, has listed, I think, more or less flourished with a mild negative bias. But Anand Rathi share, that's up close to around 5%. And that's the big listing, the thumbs up listing of the morning, now up close to around 6%. Well, let's move on then. The RBI's MPC will announce its interest rate decision tomorrow. Ritu's with us to tell us the key expectations. Ritu?
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts, ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5 to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Okay. All right, Ritu, thank you very much for that. Watching out for the RBI announcement tomorrow. We'll take a break right now. On the other side, we'll have Manisha join in with the latest from the commodity markets. Welcome back. Well, the equity market is having a quiet morning. Let's figure out what's happening with the commodities. We have Manisha. Actually, Manisha, I think beyond commodities, she's tracking the rains. And Mumbai has been saying, rain, rain, go away. Manisha, is it going away?
No, it's not. But I'll come to Mumbai slightly later. Let me tell you that this is the most important season for agriculture, for farmers as well, because 70% of Indian rain happens between June to September. Now, interestingly, officially the monsoon ends on 30th of September, and I'm assuming that date is going to be changed very soon in coming few years, because this time around as well, we saw the onset of monsoon delayed, and that is the reason the outgoing or the exit of monsoon also is going to be slightly delayed in that sense. But we do follow 1st January to 30th of September. Today is 30th of September. Officially, monsoon ends today. The dates I have is until 29th of September. So all India is 8% in excess, 108% of long period average. And that's exactly the number that IMD had put out in their revised forecast. So that's exactly what we are standing at right now. The only concern has been in the east and northeast. That is where we have seen deficiency of 20%. But apart from that, it has been a good monsoon across other states. Northwest, 27% higher. Central India, 15%. And the southern peninsula also is ending with 10% of excess rains for this season here. Now look at the deficient rains here, and that basically was in Arunachal Pradesh, minus 41%, and then you had Bihar as well with 31% of a decline in overall rains. But the excess states are quite a bit. You have Rajasthan with 60% more rain, Punjab 42%, and then you had 40%, 39 to 40 for Himachal and Marathwada as well. Maharashtra, of course, has been a bit of a concern with various areas in mid-Maharashtra as well. Now, interestingly, when you look at the monsoon this time around, all 4 months were excess monsoon months. So we started with June, and that was 9% above average. You had 5% above average for the months of July and August, and September until now has been 15% more than average. So the mean median of that is 8% or above axis. So 108% is how we get that. Now, when you look at the monsoon in last many years, 94% was in 2023, which is normal or below normal. But apart from that, the last 5 years in that sense have given you above normal monsoon. So it has been great going when it comes to the Indian markets there. Now, above average monsoon in all 4 months is quite a rarity, by the way. 2025 is one such year where you have above normal monsoon every month of this season. And the last time you saw that was in 2007, and then it was in 1975, and then 1961, 1956. So since 1950, if you start looking at data from 1950 onwards, it has been only these years that have seen average, above average monsoon in all of those months. Interestingly, now when you look at Mumbai and monsoons, IMD has moved dates that happened last couple of years itself, that the withdrawal date was shifted from 29th September to 8th of October. But this time around, in this year, IMD says that monsoon withdrawal from Mumbai would happen on 15th of October. Apart from that, when you look at the September rains itself, well, average really is at around 341 mm. For the month of September this year, Mumbai has seen 607. So we're looking at really high, almost double of monsoon that we usually get in Mumbai. Now, what's coming is even more interesting because you have more low pressure areas being formed all over Bay of Bengal, and that would bring more rains into Mumbai, Konkan, Gujarat, and some parts of Maharashtra. This would be between 4th to 6th October. So is the monsoon withdrawing? No, it's not. It's exactly what I told you. Another very important thing to note out going forward is that La Nina is setting, and it is setting during October to December period. Now, what does it mean for India? Remember, La Nina means different things for different countries. But for India, it means stronger monsoon. So October to December, those winter rains that we talk about are going to be stronger this time around. And the other thing is colder, harsher winters is something that India could be prepared for as well, is what we're looking at now between October to Jan. Actually, there are some reports which suggest that Jan 2026 could be one of the harshest winters that many parts of India perhaps would be looking at.
Well, forewarned. Manisha, thank you very much for that. I really appreciate it. That's a pretty sort of good look, a comprehensive look at the monsoon retreat, but of course, I mean, a wetter October to January, as Manisha pointed out as well. We'll take a quick commercial break here. On the other side is the economy. Latha in conversation with a bunch of experts, Somsekhar Vemuri of CRISIL, Sachin Gupta of Care Edge Ratings, K. Ravichandran of ICRA on credit quality of Indian corporates in the first half that ends today. Stay tuned, coming up.
Welcome to It's the Economy. For those of us who are ruing that the markets are not able to climb up, here's some good news from Indian corporates. The credit quality of Indian companies is excellent. That's the verdict from all the rating agencies for the half year that is ending today, September 30th. Although the credit ratio, that is the number of upgrades divided by the number of downgrades. You know how many times upgrades to downgrades? This has fallen slightly for CRISIL data. The positive bit is upgrades are maximum in which sector? Infra, power, roads, renewables, data centers, and downgrades are expectedly in export-oriented sectors, especially those exposed to US tariffs, textiles, shrimps, gems and jewelry. MFI's asset quality also still a little shaky, says the CRISIL note. With that, let me welcome my guest, Somashekar Vemuri, the Chief Criteria Officer at CRISIL Ratings, Ravichandran of ICRA, and Sachin Gupta, Chief Rating Officer at CareEdge. Gentlemen, thank you very much indeed for your time. Mr. Vemuri, let me start with you. What's the overall picture? It's looking like your number of upgrades are far more than your number of downgrades, but it is a little less than last year.
Yeah, thank you, Lata, and good morning, everyone. So clearly, with 499 upgrades and about 230 downgrades, our credit ratio is about 2.17 times. It has moderated a little bit from 2.75 that we saw in the first half of previous fiscal. Having said that, it still shows a picture of resilience, especially when you look at the fact that 80% of our rating actions continue to be reaffirmations. And from a sectoral perspective, if you look at it, the domestic-oriented sectors, infrastructure-linked sectors, especially roads, commercial real estate, renewables, construction and engineering, capital goods, and secondary steel. These have accounted almost half of the upgrades that we have seen. And the vulnerability is in the export-oriented sectors, primarily diamond polishers, shrimp exports, and home textiles, on account of the fact that the US tariffs are going to impact these sectors, and these sectors have a fairly higher share of demand coming from the US.
Okay.
So domestic-oriented economies, there are tailwinds, whereas for the exports, there are a bit of headwinds.
Okay. Well, let me take BFSI, banking finance in particular. Mr. Ravichandran, what does it look like? We've seen a period when banks reported excellent, or rather very low credit costs and excellent asset quality. How does it work out in the first half gone by and in the coming second half?
Yeah. In fact, in our portfolio, the infra sector was the only sector where we saw credit ratio less than 1 time, which means we had more downgrades than upgrades. Most of these downgrades happened in the NBFC space, not in the banking space.
Oh.
The NBFC, microfinance institutions and NBFCs who are exposed to unsecured, MSMEs and unsecured personal loans and so on and so forth. In these 3 categories, we saw elevated asset quality pressures and high credit cost, and certain cases there were significant covenant breaches resulting in acceleration of debt by the lenders and liquidity-related pressures and so on and so forth. And because of that, financial sector saw high downgrades. And in the near term also, we are closely watching this space, and we believe that credit quality may not improve anytime soon in this space. And after that, recently, with the the H1B related issue, even the lenders who are lending to educational purposes, even those category may be marginally impacted. Of course, we'll have to closely watch as to how things unfold. So NBFCs.
One minute, Mr. Ravichandran. Which specific category of NBFCs you said? MFIs, yes. Anything other than MFIs also in trouble?
Yeah, apart from MFI, there are some NBFCs who are lending to MSMEs.
Okay.
SME focused, lenders, especially in certain regions, the SMEs have not been in peak of health, and there have been delay in payments by them. And because of that, asset quality has been, under pressure for some of the NBFCs who are concentrated in the MSME lending.
Okay.
And we've had one default, also investment grade default in this space because of the elevated, asset quality pressure.
Okay. Let me come to Sachin. What I see from yours is that you all have a large number of non-AAA companies coming to you for rating. And it looks like there is a substantial improvement actually at the sub-investment grade level. Can you take us through? I mean, looks like your B, number of people in B have been upgraded, number of people in A have been upgraded. Can you take us through the, sub-investment quality as well?
Yeah, thanks, Lata. So, in line with what Som and Ravichandran have mentioned, the growth in the credit quality or the improvement in the credit quality is actually across the spectrum. So it's not necessarily only sub-investment or investment. We are seeing improvement in both higher rated categories and sub-investment. Okay. In fact, the ratio, if I look at the overall ratio, is still is 2.56x, right, for the overall portfolio that we've done in the first 6 months. For the sub-investment, it's 1.92. So it's slightly lower than that. But yes, within the smaller entities also, there has been, in the segments which are not export focused but more domestic focused, there is an improvement that we're saying that we are seeing. So in hospitals, in small real estate projects or small pharma companies also, we are seeing improvement there. Or maybe entities which are supplying to these sectors which are doing well.
Mm. Somsekhar, can you tell us what is the worry in the export-oriented sectors? Your press note says that is where 35% of the downgrades came, exporters exposed to the US. Can you give us more nuanced details?
So what we've done is we have looked at a deeper dive of, how are the export-oriented sectors going to be impacted. So totally about $87 billion of merchandise exports were there last year to the US, which accounts for about 20% of our overall merchandise exports. Of this, roughly about $50 billion is currently what is impacted by the tariffs. Remaining 37 is largely unimpacted. And what we've done for the impacted sectors is looked at what is the exposure that these sectors have to the US and how dependent is US on India.
May I stop you for a minute there? That math has been done by every brokerage under the sun, how much exports and how much is to the US. I want to know if they're already showing stress. Jewelry, textiles and shrimps.
Yes. So all these three sectors, we've already seen downgrades in the first half, and they were fairly sizable compared to the portfolio size that we have. Diamond polishers, shrimp exporters, and home textiles. And even from an outlook perspective as well, these sectors continue to remain negative. Because the almost 30 to 50% of their top line comes from the US markets, and it is very difficult, for them to kind of find any alternate sort of destinations very quickly. It will take time for them to rework their market strategies. So they remain vulnerable. And also what has happened is there has been some degree of front loading of exports in the first half in anticipation of the fact that there could be tariffs, etc. There was a lot of front loading which has happened quite a few of these segments. So the real impact will be something which will be more seen and more stark probably in the second half if this 50% kind of tariffs were to continue.
Okay. Ravichandran, which specific SMEs are in trouble? Anything sectoral in what you found?
We found, SMEs who are active in the textile space and engineering. These are the two major clusters where we saw slowdown and delays in payment by them to the NBFCs, and even banks also. When we look at the banks portfolio, also we see that SME is one space where we are seeing slightly elevated GNPA levels.
Okay, Sachin, what are you seeing in terms of an outlook? Will the good times continue in the second half, or are they looking troubled?
I think it's certainly not as rosy. I think the future is going to be a little bit more, I would say, cautious we have to be than the past. Essentially, the sectors, so there are two levels that we can analyze this. So one is the directly impacted sectors. So all of us, as you said, textiles, gems and jewelry, shrimps, all these will be impacted. And right now the impact is not yet felt because of the front loading that we discussed. But I think if this 50% were to continue over the next 1 or 2 quarters, I think we will start seeing some serious damage. Even on the rating side, most of the rating actions in these sectors have been more of, watch negative or negative outlook, etc. Because somewhere there is hope that these, some the 50% will be kind of taken off and will come down to 25%. But if this were to continue at 50%, then I think there is serious damage in these sectors. But yes, still I would not say systemic. I mean, roughly 3 to 4% of our portfolio is covered by these companies which are exposed to US. Yeah, so
I got it. Just one last word from you, Somsekhar, since you have the largest number of companies under your coverage. Outlook. Will that good times continue, barring these pockets of exports?
Yeah, so our outlook is that of resilience. Essentially, we continue to expect upgrades to outnumber downgrades, and domestic-oriented, consumption-oriented, infrastructure sector-oriented segments will continue to see buoyancy. Having said that, the pockets of vulnerability continue to remain in the export segments, and in the financial sector, like what others mentioned, the microfinance is still under watch, as well as unsecured lending is something which also bears watching.
Okay. Thank you very much, gentlemen, for that very quick wrap. I'm sorry that we are out of time and we have a lot of rating agencies covering many companies. But the key takeaway that we got from all their, data is that sector which was responsible for all the bad loans between 2012 and 2016 or 17, infrastructure is the best performing sector with power absolutely, powering ahead, especially including renewables and data centers, which of course consume a lot of power. So infrastructure, thumbs up. That's the message we get from the rating agencies. Wrap up on Bazaar. Chartbusters coming.
The Indian market opens up higher but gives up gains ahead of the September series expiry. The Nifty Bank 2 slips into the red after some outperformance ahead of the RBI policy outcome tomorrow. Autos remain well bid, but that index too is marginally off the highs.
Sammaan Capital continues to rally on a number of triggers. The company's board is set to consider a fundraise on the 2nd of October. ICICI Prudential also picks up stake in a big block yesterday. The stock, however, is back in the F&O ban list.
Blue Dart and All Cargo Gati announced price hikes around 10% from the January 1st, 2026. Blue Dart is up nearly 5%, All Cargo too up around 2.5%.
A string of listings on D Street this morning sees Anand Rathi share and stockbrokers list at a premium of around 5%. SSI Technology sees a minor listing gains, but it slips into the red. While we have Solar World as well that sees a pop of in trade, but however, from the highs of the day, that gets sold in too. Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Manglam. Markets dilly-dallying between the red as well as the green terrain, for the time being trading in the red, Manglam.
Yes, Nigel, you know, the highs of today have been a lot lower than yesterday's high, but the important part is that it's maintaining at the lows of around that 24,600 mark. So let's see whether that sustains or not. But more importantly, what the Nifty Bank and the Midcaps do ahead of the RBI policy outcome tomorrow is something that we'll be watching out for. Be that as it may, let's talk about some of those new listings. We have Anand Rathi share and stock brokers, which saw a steady listing on the street. Now, there are a few listings today which are still holding in the green. It's up around 5.5%. We do have with us the Chairman and Managing Director, Pradeep Gupta. Mind you, this is Anand Rathi share, the broking business. Anand Rathi Wealth, obviously, is already listed on the bourses. Thanks a lot, Mr. Gupta, for joining in, and congratulations for the listing of another of the Anand Rathi Group stocks on the bourses. You've been helping the street, look at stocks, look at numbers, make transactions on your brokerage app, etc. as well. Now, we'll be asking you some questions for your business too. Importantly, just before you went in for the IPO, the FY23 to FY25 period, revenues for you grew over 34% compounded. Profits grew over 65% compounded as well. This coincided with a surge in, brokerage and the cult of equity, so to say, as well. How much of that is now sustainable, given the sort of clampdown that regulators are taking on excessive trading as well, including the likes of F&O, etc.?
Thank you, and good morning to all the viewers. See, typically, if you really look at it, we have grown in the past, and we are constantly working towards it, that how we can have a sustainable growth. As a result, we have been talking, and this is what is our endeavor is in the future also, that how we can create our revenue stream of this company in such a manner that we constantly have a predictable growth and do not have any kind of impact of market volatility. So we do have broking business and non-broking business. The share of broking and non-broking is between 60-40. We are constantly trying that how we bring this share to 50-50. And when we are talking about non-broking is a business which create annuity income for the company. So we are constantly seeing and trying to work on that so that, our growth on non-broking constantly stay faster and bring this level in coming years and try to see how we can level of our revenue stream both ways, 50-50. And that's what we are trying to do. Once we'll do that, I'm sure we will have a more predictable growth. But as on today also, we have got a predictable growth. And coming back to your question on derivative side, I mean, typically in broking revenue, we have two parts, which is cash market and derivative market. If you really look at it, again, our share is 50% from cash and 50% derivative, and largely derivative for an hedging purposes. So our dependency on derivative is very, very less. So we are less impacted, less effective with any kind of regulations which is talked about in the market.
Okay, all right, Mr. Gupta, congratulations on the listing. It's the green listing of the day, and good to see Mr. Rathi as well in there, ringing that bell, enjoying in the celebration. So good on y'all. That said, last year was a very good year for you all in terms of growth. Given the challenges that we're seeing, the market itself is a little bit subdued. Will you grow this year?
Yeah, we are constantly looking at growth, and as I said, we are constantly working on non-broking.
That's correct.
Side. So
That's
this year
correct.
Again, we are surely going to grow.
Grow, yeah. So give us a guidance in terms of
if
growth.
You really see, unfortunately, today is not a day to probably share the guidance. Maybe, very soon, in 20-25 days, when we are coming out with results, I think the guidance will also be given in a proper manner. But just to tell the viewers and to you guys and share with you that our growth trajectory is also going to be continue, and we will see that constantly working towards it and constantly provide a growth to this company also.
Okay, all right. Just to understand then, and we have the other listed entity, Feroz joins in quite often, and you'll give out a guidance and he achieves that and he overachieves that. So I'll be interested to see what kind of guidance you put out. That said, the last few years I've seen that margins have gradually improved. From the mid-20s, you'll have moved to the mid-30%. Do you want to hold it onto these levels, or do you think there are enough levers to see, say, the margins improve from here on? Give us a broad margin trajectory.
So I think what we are looking at it is in the past, and our whole endeavor is to constantly grow in revenue terms between 20 to 25%. And on our PAT level, we are growing and probably think and trying to work on growth trajectory of about 30 to 35% on a PAT level.
All right, so you're looking at 30 to 35% growth on the PAT level itself. If you could explain a little to us on your non-broking business. You said that a large part of that, is annuity, but I see some function coming in from MTF as well. Now, SEBI has planned a review of MTF margin rules to streamline risk management. So wanted to understand if that business gets impacted by that. And then you also have this other income component, which has been increasing. The graphics come up for you on the screen. What does that other income entail, and how is that likely to grow from here on?
So largely in our non-broking is coming from margin trading funding and distribution businesses. So when we are talking about margin trading funding, I think we have internal checks and balances and processes being created to keep our risk completely in control. And I do not see that anything which is going to adversely impact in our company while providing margin trading funding. I mean, I have shared this data, and again, for the benefit of the viewers, if you really look at and glance through our margin trading funding book, about 70% stays below 1 crore. And again, if you really look at from a security perspective, it's 75% stocks are in Nifty 500. And we are closely monitoring and have a strong, robust risk management system. I don't think we'll have any kind of a trouble. In the past also, we haven't seen any kind of a delinquencies in this kind of a book. So I think we are confident that over a period of time also it's not going to impact. And to be really frank with you, out of our active customer base, only, active customer in broking side about 9%, and total overall active customer base about 6 to 7% have been utilizing this book. So there is enough amount of inherent growth perspective also available with us. So I think we are confident that this is going to grow over a period of time.
All right.
Coming back to the other revenue.
Yes.
I think, it's an interest income. An interest income on the fixed deposit which is being provided to exchanges from time to time for getting our trading limits and margin, for satisfying the margin requirements. And that's what is being counted. And obviously, as and when we have to grow, we have to provide certain amount of securities to exchanges in terms of cash and collateral, which is in terms of fixed deposit. And that's the revenue which is also being shown as an other revenue.
All right, Mr. Gupta, thanks for giving us some color on the business. As you said at the start of the show, today is not the day to give any big guidance, but we have to pull out a few numbers from you. But go ahead, enjoy the day, celebrate it, and wishing you and the entire team all the very best. And we'll chat with you rather soon. Well, it's time to slip into a short break. On the other side, we have another company that's listed. That's Sept Technologies. We'll discuss with them what's the strategy post-listing. Stay with us. Welcome back. You're tuned into Chart Busters here on CNBC-TV18. Well, there have been quite a few listings today. Another one is Sept Technology. It saw more or less flattish debut with a bit of a negative bias. But to help us out with how they see the company pan out, I love these visuals that come in, right? Of ringing the bell, celebrating all the hard work that's been put in. And now, being a company that's publicly listed, good amount of responsibility comes with it as well. Mr. Lalwani, the chairman and managing director of the company, joins us on the show. Hi, Mr. Lalwani. First of all, congratulations. I'm sure there's a lot of hard work that goes into the process, into building a company, and now you have various owners as well via your shareholders. That said, what's the trajectory for the business? In the next 3 years, what is the goal for the business in terms of revenue growth, in terms of margins, margin outlook? And revenue as well, you've got various verticals. Tell us, split it up bucket-wise. What would the contribution of each vertical look like?
Yeah. Hi, Nigel. Thanks for having me on the show. As you know, we said earlier that our business is divided into 3 verticals: the payment solutions vertical, the communication and fulfillment vertical, and the IoT vertical. And in the payment solutions vertical, we predominantly are catering to to various spectrum of customers. And with the growth in the payment card industry that we expect from now to 2030, where it's supposed to have a 12% CAGR on the growth, the kind of product mix that we have and the constant innovation that we're doing to get to new products which are relevant for the customers, we are sure that we'll be able to retain our market share and grow as the market expands. The IoT vertical for us is a vertical wherein we have accelerated growth. This is a sector for us where we are getting into non-BFSI sector, where along with the consumer and the discretionary spend growth of India, we should be able to grow our businesses in retail, in renewables, as well as in manufacturing. So IoT definitely for us will be a vertical which will grow much more than the payment solution vertical. But communication and fulfillment also has some promise in it. So net, we feel that all the 3 verticals for us are going to be growing. Definitely the IoT vertical for us will grow much faster.
All right. If you could give us a sense, Mr. Lalwani, congratulations on the listing. Over the last 3 years, if we look at it, all the ups and downs, etc., the revenues have compounded at around 25%. Over the next 3 years or so, do you believe this 25% growth rate continues? And since IoT is likely to grow the fastest, what compounded growth rate is that segment to be at? And while you're talking about IoT, what we notice is that your margins have improved as well, from closer to 17% to over 25%. Is it because IoT has higher margins? If yes, by how much?
So essentially, the margin expansion that we saw over the last 2-3 years was due to multiple factors, right? One was obviously our revenue moved from 1,100 to around about 1,500 crores. So we obviously got operating leverage out of that. Also, whatever cash was generated in the business went in, and the resources were deployed for better sourcing and more competitive sourcing. We also had advantage because our ratings improved, so we had lower cost of funds. So with these multiple factors, we saw a margin improvement that has happened over the years. Now coming to a question about the growth aspect, if you see historically, we've been a company who's been steadily growing. And with the potential in the market and the target market that we have, we hope to maintain and grow our market share. So with that, we'll definitely have healthy growth in the times to come.
What is healthy, sir? 25% plus is healthy, and IoT in particular grows at what rate?
See, IoT, if you see in the last 2 years, we've been doubling our revenue. So definitely IoT will be at a much accelerated rate of growth compared to the other verticals. It will be our growth engine. But since the revenue contribution of IoT to the overall revenue is yet not very significant, right? We will still have the payment solutions and the communications vertical contributing significantly to the revenue, and we are confident of growth in both these verticals as well.
Margins, you want to give us a broad band?
Essentially, we are confident that the current margins that we have had, we should be able to sustain over the next year or two. That's the outlook that we have on the margin side.
Mid 20%.
yeah, I mean, the EBITDA is around 24-25%, and our PAT levels are between 14 to 15% right now. Yes.
But I reckon your PAT level margins will increase as well, because a large part of your, IPO funds will be used to repay some of the debt. So that will take away at least 25 to 30 crores of interest. So to that extent, should we see your PAT expanding immediately?
So I think now we'll probably get the advantage only for half of the year, for the debt repayment. So it will be to that extent. But definitely that is going to contribute to the PAT expansion, yes.
Right. Just a larger macro question. You said that a lot of the IoT business has been exposing you to the non-BFSI segment. What proportion of your revenue currently comes in from BFSI, and how much is it non-BFSI? How much is the addressable market there? What are you looking to target here?
So I think roughly we have about 87 to 88% of our revenue now coming from BFSI space, and the non-BFSI space is the remainder of that. The IoT business in India is slated to be about 10,000 crores. The RFID tags and the hardware business is slated to be about 10,000 crores by 2030. So a lot of our energies, a lot of our investments, a lot of our focus is on this vertical, which includes basically passive tags, active tags. We're also focusing on the SIM and the eSIM part of the business. eSIMs will probably grow in the next couple of years. So, with these three areas of expansion, we expect the IoT vertical contribution to go up, over the next 3 to 5 years significantly in our overall revenue construct.
Do you have a target for that? It's currently 7% of your revenue. Does it go to, say, 10%, 20%, 25%?
No, we are probably by FY27, we kind of are targeting that to be at least in the 18 to 20% range is the effort that we're trying to put in.
Okay, all right, Mr. Lalwani, appreciate you joining in. You've given us some numbers, some kind of an outlook. Wishing you, your team, all the very best. Enjoy the evening, enjoy the day. It's a big day for you all. But post your results, request you to come back on the show. And in fact, we'll quiz you a little bit more with regard to numbers and the way ahead. Well, time to move on then. For the time being, I think what we can do is we can take a snappy break. We come back, continue our focus on markets as well as on stock-specific action.
Welcome back. The Nifty briefly went below that 24,600 mark, but now has managed to hold on to that level. So that should be positive from a bull's perspective. And we have a couple of these IT names which are picking pace right now as well. So HCL Tech, Tech Mahindra, all of them doing well. Mind you, don't have a big weight on the index, but the IT index holding up with a gain of almost 0.5% should provide some support to the bulls. But it is expiry day, monthly expiry day, that too. So we have the India VIX, which too has moved to the high point of trade with a gain of almost 3% From the broader markets, Sammaan Capital continues to do well. Back in F&O ban, but the management has gone ahead and suggested that there would be a board meet to consider a fundraise on October 2nd. That stock gaining from strength to strength. The last two trading sessions or so is up around 15%. But a lot of other stocks, Nigel, metals in particular, moving as well.
Well, that's right. Hindustan Copper, that stock, in fact, is doing well, building onto the gains as copper has moved to multi-year highs, in fact, multi-month highs, to be fair. So that one's popped up. And Shalby, I think that's another stock that's done quite well. Suddenly, it spiked to the high point of the day. But we've run out of time on this edition of Chartbusters. Stay with us. Trading Hour comes up next.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormuz Fatakia. Hey Hormuz, good morning. Well, you know, it's been already volatile. It's like we just started trading session, but we have come off from those highs of 24,731. That continues to be a very important level that we are watching out for, because yesterday also we retreated from those levels. Midcaps, they are underperforming today. We do have Bank Nifty, which is lending some support, majorly coming in from PSU banking names. That index itself is up around 3.5% in last 2 days. Metal index supporting as well. Some gains coming in from IT as well for now. So we'll be watching out for all those names, whether that support continues or not. But yes, of course, it's the monthly expiry, so anything can happen at any point in time during the trading day. We've been oversold. Let's see whether we'll see some short covering towards the last 1 hour of trade, or whether this trend would continue.
Volatility, as is the name of the game on the monthly expiry session, of course. But the other disappointing factor to start off the day has been that we have already broken below yesterday's low. So yesterday's low being 24,604, we've broken that and we slipped to levels of 24,593, from where in just the last few minutes we have recovered almost 60 points from those levels. So a proper expiry session playing out in just the first couple of hours of the trading session. As of now, the Nifty remains in the green at 24,650. The Nifty Bank is lending support as of now, so you'll keep an eye out on how the second half of the trading session pans out. The broader markets too, fairly okay. The stock-specific activities are more prominent there compared to the index. The broader markets underperforming as of now. The mid-cap index is in the red. So all in all, it's been a choppy start to the trading session.
All right, so that's about the action that's happening as far as the benchmarks are concerned. But let's talk about a corporate discussion. Solar World Energy Solutions made a good D-Street debut. It listed at 388.5 rupees per share. This compares with the issue price of around 351 rupees a share. Those are some visuals coming in from NSE. Karthik Teltia, who is the managing director at Solar World Energy Solutions, joins us now to discuss on a lot of things. Of course, now they can talk about forward-looking statements as well. So foray into modules, move away from traditional strengths, the current order booking trends as well, and also the breakup that they'll see between CapEx and Resco model going forward. Karthik, good morning. Thank you so much for joining in. Now that the stock is listed, you can give us more numbers going forward. What are the current trends looking like when it comes to your current order book, your current order inflow post the DRHP filing? What is the guidance in terms of top-line growth, profit growth? You've been looking at investing some of the amount in CapEx growth.
Good morning, ma'am. It is a very momentous day for us today. We have just got listed on the National Stock Exchange. We are very proud. All our employees are very proud. Solar World as a company, we will continue to be an EPC company. Our CapEx investments are directed towards backward integration. We have already set up a 1.5 gigawatt module manufacturing line. We are in the process of setting up a lithium-ion cell to battery pack line. And going forward, we are looking to put in around 575 crores, which is the object of this IPO. This will be directed towards setting up a 1.2 gigawatt solar cell line. So going forward, solar market is very, very strong. It is becoming one of the most mainstream sources of power in India. We believe that there's a lot of opportunity in the market. Our backward integration will give us a lot of strength to capture a bigger market share and to grow multifold from here.
Karthik, many congratulations first up on the listing. But my question being, you mentioned the fact that you're going to deploy a lot of your IPO proceeds towards that solar cell line. What's your rationale behind entering this space? Are you focusing more towards your domestic captive consumers, or you're going to set up opportunities for the export market as well?
Sir, we are focused on the domestic consumers only. We are not looking at the export market at present. The rationale is twofold for this investment. First is risk management. If you look at an EPC company, almost 40% of our cost comes from solar panels. As we backward integrate into solar panels and solar cells, that risk climbs down to about 8%. So in a 100 rupee contract, our volatility comes down from 40% to about 8%. That gives us a lot of strength, a lot of clarity when we are bidding for contracts or giving out prices to our customers. These tend to be fixed price contracts, and this is going to be a big advantage for us. Secondly, if you look at the market currently, We buy our solar panels from a lot of large players. They charge us they make between 12 to 14% margins. As we start doing this internally, that is going to add a lot to our margins as well. So, and thirdly, I would also like to add, this helps us becoming an end-to-end supplier to our customers. We can offer a complete turnkey solution. Solar cell ALMM2 comes in from June 26. We should be one of the suppliers at that time. That will give us a big leg up.
Okay. So, Karthik, two-part question here. You said once you backward integrate into solar cells, your margins can improve. It is at 20% currently. Where do you take it to in terms of improvement? When do you commission these facilities for solar cell? And, you know, analysts generally say there has been a lot of action in the solar cell segment overall, because a lot of big players are also looking at solar cell. Everyone wants to be integrated in the entire supply chain. Do you think that is something that could put pressure on the margins, because there's so much supply coming in, there could be an impact on pricing?
So, ma'am, what you're saying is absolutely true. There is a lot of interest in our industry. It is one of the fastest growing industries, but I would say demand and supply are kind of both growing very rapidly. In terms of margins, if you look at solar panels, you look at solar cells, the margins are tremendously good. I think the margins should normalize a little bit, and that would make solar projects more viable. So we are already accounting for that, and we believe that's a very good, fantastic market to be in.
And what happens to your margins? You said it will see an improvement. Big players see 12 to 14%. You are at 20%. How do you improve that post-commissioning of solar cells facility?
Ma'am, as I said, we currently spend 40% of our project cost on buying solar panels. So if you assume that people are making somewhere between 10 to 12% margins, we will not have to pay out those margins to our suppliers, because we have an in-house facility. So that margins should start accruing to us as a company, and that will definitely add to our PAT margins.
And by what kind of figure are you anticipating because of that? Karthik, do you see that 20% number going up to 22, 22.5, say over the next 12 months?
So EBITDA margins will be out in the market as we achieve them, but we definitely see this as a very, very good market. The margins we expect to be quite good going forward as well. I can give you an example. China, I think, did about 360 gigawatt of installations last year. Compared to that, India did about 40-45 gigawatt. I believe India's solar story is just starting, with BESS coming in, and intermittency of power is not a problem anymore. So I believe this market will go from 40-45 gigawatt to maybe even close to 100 gigawatt annually. And that kind of says the story about this industry. It's a new type of technology, rapidly evolving technology. Good margins, a lot of interest from a lot of industry players. So it's a good sector, and we are very well poised. We are one of the companies that is EPC focused but has backward integration. That gives us a very unique advantage in terms of our cost, in terms of our ability to execute our projects.
So the 575 crores that you are spending for that cell capacity, Karthik, 420 you use from the IPO proceeds. Where do you fund the rest from? That's part one. And part two being, what has been your debt situation pre-IPO, and what does that happen going forward now?
So debt situation pre-IPO, we were net debt negative. So we were very well capitalized. In terms of this plant, we intend to take a debt of close to about 150 to 170 crores to execute this. But since this project is mostly equity funded, you will see a very good capital base. And the idea is to have a strong capital base having a good capital base, looking at the strong growth ahead of us. I think a good capital base would help us capture a lot of that growth in the market.
All right, Karthik, a lot more questions, but we have completely run out of time. But we look forward to the updates that come by from the company in terms of CapEx, adding new capacities, and a lot more. It was a pleasure speaking with you, and we'll touch base soon again. With that, we'll slip into a short break. Up next, we'll focus on the crypto market with Ola Duden from BitOasis on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
As promised, let's shift focus now to crypto space, and Ola Dudin, who is the co-founder and CEO at BitOasis, now joins us live on the show. Ola, hi, thank you so much for joining in. And you have a lot to your credit, really, on the kind of work that you've done on Web3 and blockchain. But I want to start with what's happening with Dubai right now, and you really seem to be expanding about, around, and far from Dubai.
Thanks, Manisha, for having me on the show. I'm very glad to be with you this morning. Definitely, we're seeing a lot of regulatory and adoption momentum in our markets. I wouldn't say just Dubai, but we're definitely seeing that across the Gulf overall. Obviously, UAE tends to be on the forefront, and they're definitely leading the wave of adoption. So we've seen several factors, I think, contributing to that. Regulatory clarity, positioning UAE as a hub, new use cases in terms of adoption of crypto, such as stablecoins and tokenization of real-world assets, most recently real estate that we've seen in the UAE. And I think also global regulatory developments, particularly in the US, such as the Genius Act, has been fueling more interest and adoption across the region.
Oh, well, absolutely. Ola, I want to take it ahead when it comes to the real-world asset classes, especially when it comes to real estate as an area. That really seems to be picking up. I mean, we have seen those instances in India as well, where you have real estate now being launched on blockchain as a technology. But as you said, Middle East and UAE, Dubai seems to be really spearheading that. Where would you see the future, let's say, in 5, 7, perhaps 10 years from now?
We're definitely seeing tokenization taking momentum. And I think us as a crypto platform that is regulated with different licenses across the Gulf will definitely see not just crypto assets being traded, but tokenization of money, such as stable coins, and tokenization of physical assets and digital assets as well, that will be traded, exchanged, and then ultimately transacted over a blockchain. So we're definitely seeing that in terms of real estate, but we'll see that in terms of equities, bonds, physical assets such as gold. And we're definitely seeing some of that traction in other markets, and definitely Middle East, started with real estate, but we'll definitely see that in terms of other assets as well. So we're seeing that convergence, I would say, of the crypto world and the traditional finance world all coming into blockchain and ultimately being traded on platforms such as ours in terms of BitOasis, that will ultimately spearhead that adoption and distribution and liquidity, I would say, that being transacted and traded in those markets.
Ola, when you look at the overall markets, well, yes, we've seen a lot of push and a lot of enthusiasm as well in the last many years. But the last couple of years, would you say, is more about corporates, countries, institutions, family houses wanting their piece of pie as well when it comes to the technology or even the crypto prices for that matter?
Yeah, I think the Middle East market is following also similar trends to other international markets. So I think in the last couple of years, what we've seen is higher interest amongst the institutional base, or let's say family offices, funds, corporates, et cetera, either in terms of Bitcoin treasuries or diversifying their assets, or ultimately, essentially coming into the market by way of buying the asset itself or exposure through ETFs. So I think Bitcoin ETFs has definitely, in the US market, has unleashed that wave of institutional interest in the crypto space. So particularly in the Middle East, we've definitely seen a high interest from high net worth individuals, family offices, and ultimately even sovereign wealth funds. So, recent surveys and statistics says that over 90% of high net worth individuals and family offices have actually developed an interest in crypto and see it as a way of diversifying their portfolio. I think in the last year, recent filing has shown that Mubadala has increased its stake in BlackRock's Bitcoin ETFs. And then ultimately, the Central Bank of Saudi has invested a small portion in MicroStrategy as a way of being exposed to Bitcoin. So I think we're definitely seeing early signs of serious institutional adoption in terms of sovereign wealth funds and funds overall. But I would say high net worth individuals and family offices have already built exposure into the asset class that we would actually forecast and predict that will continue growing as the asset class becoming more of a legitimate asset class in the sense has a place in the investor portfolio, but also with regulation being in place, I think that increased the trust from qualified and institutional investors to actually directly invest into the asset.
Well, absolutely. Well, I was reading a report in US, especially if you're not holding or invested in some part in sense of crypto or blockchain, then you are seen as an outdated business. Well, that perhaps is what we're looking at coming now. But my final question to you is about from here on, what is that BitOasis is looking at as a company, let's say 5 years down the line? And second, you spoke about regulatory. When it comes to crypto or blockchain as an asset class, how much regulation is too much regulation or right regulation? How would you read that?
Yeah, so in terms of our aspirations as BitOasis, so we've been the first and we want to continue being the largest platform in the region. And when we say the Middle East, it's across the region and not just in the Gulf. As obviously regulatory clarity continues to develop across the region, we're seeing most of that in the Gulf, where we've got 2 licenses in the UAE and Bahrain. But we want to continue being at the forefront of adopting crypto and allowing retail and institutional clients to invest into the asset, but also be the gateway to Web3. So we definitely see ourselves as a major player in essentially driving the wave of adoption of crypto assets, be it in terms of Bitcoin and ETH and other the crypto assets that we see in the space, stable coins and other tokenized assets that we will see developing over the next few years. So we definitely want to be the gateway that is allowing that adoption of crypto assets across the region to hundreds of thousands and millions and tens of millions of customers across the Middle East. So that requires robust regulatory frameworks. And to your second question, regulation is very important to allow players like us that are serious about building that infrastructure, Web3 infrastructure in our markets, to really flourish and be able to drive that adoption safely in a regulated way, but also focused on consumer and customer experience and allowing seamless adoption and integration of this technology in our daily lives. So we're always, advocating for friendly regulation that allows innovation, but at the same time, we really prioritize consumer protection.
That point is well taken, Ola. Very, very appreciate you. Thank you for joining in and making sense of what really is happening, especially in the Gulf area and, of course, overall the world. And as your point is well taken, that regulatory friendly regulations is what perhaps this developing technology needs at this point in time. But with that, that's a break on this segment. We'll come back with more news and stock specifics on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Just before we went into the break, I saw the screen and I said we'd be mentioning the fact that the Nifty is off the day's low and heading back towards the 24,700 mark. Unfortunately, that's not to be. And that recovery has been very swiftly sold into. That's how quickly the sentiment in the market has been changing on this monthly expiry day. And analysts also have been mentioning the fact that every bounce towards levels of 25,000 or even 25,200 for that matter should be used as an opportunity to sell, as we spoke to Jay Thakkar yesterday and he was of this view. But what are the charts indicating on this monthly expiry day for the future? Sneha Seth from Angel One is joining in with a quick chart check. Sneha, good morning. Thank you for joining in. It's very, very volatile right now on the Nifty. What are the important levels that you're watching out for? And if we do end up breaking today's low at 24,590, where does the index head to? And your stock recommendations for the morning.
So very good morning. Yes, if you look at the index, it has been volatile, but it has been trading in a range. So broadly, I would say that 24,500 on the lower side, 24,800 on the higher side is the resistance zone. So this 300 points is the range for Nifty for now. And looking at the options activity, I think on the higher side, 24,700 is attracting decent pile-up of positions on the call side. And on the put side, we are seeing decent writing happening in 24,600. So at this point in time, I think this 100-point range would be there for the for today's monthly expiry. Not expecting a major move for today. So as far as both the index, if you see the banking index also has been trading in a range. So until and unless we don't see some clarity on the direction front, one should stick to individual counters. Now, as far as individual counters are concerned, I believe metals have been doing good. So I would suggest buying National Aluminium, which NALCO has been, showing decent strength since yesterday. It has rebounded from the strong support zone placed around 200 zone, and now I believe it is poised for a move at least towards 215, 217 is the level which I'm watching. So for the target of 217, it's a buy. The stop loss can be maintained around 205. Apart from that, PSU Bank has been doing good, and Bank of Baroda is one of the counter which I'm liking since quite some time now. This counter, if you see, has made a very strong base around 230 zone and has given a very strong up move. Has also managed to surpass the resistance zone placed around 257, 256 zone. And I believe this counter is heading towards 267 zone. So it's a buy for the target of 267, and the stop loss can be maintained around 252.
All right. Thank you so much for joining in with those chart checks and individual names as well. Let's go across to Mangalam now. He's bringing us the latest trends from the F&O space this morning. Mangalam, a lot of action there?
A lot of action there, and importantly, it is also the monthly expiry for September series, the first one that happens on a Tuesday as well. So it will be very interesting to watch how that goes, especially as the Midcap index is underperforming, but the frontline index has been, held supported by both the Nifty Bank as well as the Nifty IT index. So the IT index yesterday and today as well has been doing okay, so that supports the frontline index. The important part to watch out for, though, will be whether we cross past today's high and go closer to yesterday's high on the frontline index or not. Because yesterday's high on the Nifty was close to 24,791, which is around the 24,800 mark, and September 30th, which is today, was significantly lower than yesterday's high at 24,732. So the first mark on the way up would be today's high, and thereafter would be yesterday's high as a mark of reference for where the index can go towards expiry. But ahead of expiry, it is going to remain volatile. Yesterday was a fairly volatile session as well, and that's reflected in the way the India VIX has moved today as well. Up around 2.5–3% as we speak, close to around 11.5. So that's something that we'll be watching out for. Importantly, on options expiry day or monthly expiry days, the option writers get fairly active. So 24,700 call. That's the one that should come up for you. That's been fairly active in today's trading session in terms of trade. And the writers of the 24,700 call do believe that maybe there would be around the 24,725 to 24,730, which is closer to today's high as a resistance. But at the lower level, today's low and a little below that, 24,600 put has been equally active. So around 24,575 to 24,600 is where the support lies. So it will be a range-bound trade between about 100–140 points, as the technical experts were explaining as well. And the option writers don't believe that, 24,550 to 24,750 would break as far as this expiry is concerned.
Range-bound expiry is what we are anticipating. Mangalam, thank you for that update from the F&O desk. Take a short break, continue our conversation on the markets. Viraj Mehta of Enigma Investment Partners joins in on the other side.
Welcome back. You're still tuned into Trading Hour. Well, autos continue to be on our radar. First was the GST cut, and tomorrow we have the auto sales numbers as well, which we'll be tracking. And do remember, September was a mixed month. The initial days, we saw the impact of Shraddh, but come September 22, we saw the impact of that massive GST rate cuts as well. And that is something which led to pent-up demand across segments. So we did get some commentary from the companies as well. For instance, Maruti said that 75,000 unit retail sales is what they saw since the start of Navratri. They continue to get 18,000 bookings per day and 80,000 inquiries across its distribution network. Hyundai said they saw 11,000 dealer billings. Tata Motors said that number for them was 10,000 deliveries and 25,000 inquiries on the first day of Navratri itself. For Hero MotoCorp, they indicated they expect double-digit growth during this festive season itself. We looked at some Nomura estimates, and industry-wide, in the PV industry, they are looking at sales of 5% on a YY basis, two-wheeler sales up 7%, and medium and heavy commercial vehicle sales up 7% on a YY basis. Now let's look at individual companies. For Ashok Leyland, it is expected to be a decent month, 6.8% growth on a YY basis in terms of sales. For Bajaj Auto as well, total sales are expected to go higher by 6.5%, out of which domestic two-wheeler will not contribute so much. It will be 1.8% gain there, but exports will see strong growth. That will come in at 11.9%. For Eicher Motors, Royal Enfield will drive growth this time, 55% higher this time, while VECV will see growth of single digit at 5%. If you talk about Hero Moto, total sales are expected to grow by 2%, this time around at 6.5 lakh units. For Maruti Suzuki as well, total sales expected to go higher by 2.6%. If we talk about M&M, their total sales expected to go higher by 7%. However, their tractor sales are the ones which will do well. A good monsoons and the GST rate cut that came on tires as well and across the value chain for agriculture. So that will see a growth of around 12.5%. Tata Motors, where total sales are expected to see a strong growth, 12.8% there, while CV sales will be up 7%. The passenger vehicles, because they spoke about strong demand, expected to go higher by 21.8%. Let's talk about TVS Motors now. Total sales, according to Nomura, should see strong growth, 13.9% there. And for Hyundai, total sales are expected to go higher by 7.5%. So anywhere between 2 to 7% or even 12% in certain cases. That's the kind of growth that the auto segment is going to look at. And we'll watch out for management commentary. What happens post the festive season? How are the trends looking?
The most important thing to watch out for, right? The road ahead for these auto companies. You take that conversation forward with Viraj Mehta of Enigma Investment Partners, who's joining in. Viraj, good morning. Thank you for joining in. Tomorrow is possibly D-Day, right, for a lot of these auto companies, the way they have run up after this GST reform. Do you still justify the kind of moves that you're seeing? Because despite that move, a lot of them are now coming off their highs. And what's your call here on the auto sector?
So, first of all, good morning. Thank you so much for having me on your show. So, I think auto in general, you cannot treat it as a very homogeneous sector, right? You have to think about it as a heterogeneous sector. On one side, you have two-wheelers, which will see significant demand and which has seen significant pent-up demand, and in four-wheelers as well. But a lot of it is actually reflected in the price that we saw. And I think market has pretty much factored a lot of that growth in. So we have to see how the demand of these autos sustain. It's just, I think these are one-off numbers. And we are not very sure about the sustenance of these numbers going forward. If these numbers sustain into October and November, then we will see probably another leg of rally. Otherwise, we do not see significant upside in auto manufacturers or OEMs as such. But if you see ancillaries, I think there are a lot of plays in ancillaries which are better plays in our mind, because they are gaining, or they have sharper focus on certain segments, and they are gaining market share. So in our view, that is a better space to look at rather than just the OEMs, because there the upside is pretty much capped.
All right, so that's your take on the auto space, like the auto anchs more than the OEMs. Viraj, I was looking at your recent portfolio as well. You've added Parag Milk Foods. Is it because of the reforms that have come by in the dairy sector because of GST cuts? What's your rationale here?
We have been positive on dairy for a reasonably long period of time. One of the other dairy companies, Heritage, was part of our portfolio earlier. But what we do believe is that with the recent GST cut, the price differential between organized and unorganized will significantly reduce, especially in value-added products like paneer, ghee, and cheese, significantly, especially in ghee and paneer, where unorganized is a very large portion. Just to give you an example, ghee is a 75,000 crore market, out of which organized is only 5,000 crores. Now imagine the kind of penetration organized players can potentially have when you will see the price differential between organized and unorganized significantly reducing. So we see this as at least a 6 to 8 quarter tailwind in terms of growth for value-added products for dairy sector. And within that, if you have to look at plays, I would say Parag is right up there because a value-added is significantly larger portion for them compared to milk, which will be larger for other dairy players like Heritage or Hatson. For Parag, it is close to 55-60%. So which is where we think the delta in growth is going to be. Also, we think this should lead to decent margin improvement because of operating leverage that they will have in the system, which is already built in. So, and the valuations are less than 0.7, 0.8 times current year sales. So you will have tailwinds of growth, plus you will have margin expansion and you have valuation which is in your favor. So, which is why we like dairy sector in general, but we like this name slightly more.
Right.
Just the disclosure is that obviously our fund and us personally, we own significant chunks of this company.
Right. Very quickly, Viraj, we're running out of time, but iron and steel products is another very important allocation to your portfolio. Where does your preference lie here? Are you preferring the larger names, the Hindalcos or the Tata Steels, or you go into the smaller names such as the Godavari Powers and the likes?
So we do not really have any direct exposure to OEMs again of ferrous or non-ferrous. So we like actually converters in this space. Obviously, I also think that some of the OEMs that you did mention will also see profitability improvement over next 6 to 12 months. But we think the end usage of these products will have sustained volume growth over next 3 to 4 years. So that is where our play lies. So we like steel pipe manufacturers, which are nothing but actually converters of these players. We like distributors of those steel pipe manufacturers. So that is where our play is, because they will have sustained high ROCs, sustained high cash flows, which we think will lead to significant re-rating that we have seen in some of the other industries which have followed similar paths in the past. So our play in metals space, especially in steel, is not the OEMs like the Vedantas or Godavaris that you, or rather SAIL or Tata Steel that you mentioned, but the pipe manufacturers and the distributor of the pipe manufacturers rather.
All right, take that point, Viraj. Always a pleasure speaking with you. Thank you so much for joining in and taking out time to explain the rationale for the holdings in your fund. Time for a short break now, but don't go anywhere. We'll put the spotlight on the big story of the day on the other side. Welcome back. You're still tuned into Trading Hour. The big story of the day has to be the action that we're seeing in the primary space, the strong pipeline of IPOs. We'll put spotlight on the recent listings as well, and the focus on today's listings as well. There have been quite a handful of them. Hormus, take it over with the basics first up.
4 listings today, and all 4 listings have given you one major takeaway, is the fact that a healthy IPO subscription may not necessarily translate into a healthy listing. We have witnessed all of that in today's 4 listings that we have had. We had 4 today. Anand Rathi is one, Jaro Technologies is the other, Seshasai Technologies is the third one, and Solar World Energy. Now take a look at their subscription figures. By the size of their IPOs, their subscription figures are fairly decent, anywhere between 15 times to even Seshasai Technologies was subscribed almost 70 times. But take a look at their listing. Anand Rathi listed just above its IPO price, as did Seshasai, and Jaro Technologies listed just at its IPO price. And now, after listing, Jaro Technologies is down almost 18 to 19%, and barring Anand Rathi, the other 3 have already slipped below their IPO price. So it's not necessary that if your IPO has seen a healthy subscription, it may also witness a healthy listing. Of course, it's early days, but today's listing may not have pleased all those who received the allotment for sure.
Oh, absolutely. So let's specifically talk about September, the number of IPOs. What has the performance been like? Because there have been some big ones as well.
Big ones indeed. And you take a look at September itself, it's the biggest IPO month of 2025 so far. We have had 25 IPOs, including one that opened today. So 1/3 of the total number of IPOs that we have had so far in 2025 have come in the month of September. Now, if you take a look at the listings that have happened, now out of these 25 IPOs, 15 have listed, and 5 of them are already trading below their IPO price. And this I am not discounting for the fact I'm not taking in today's listings. So 5 of them trading below their IPO price. And you take a look at the issue size also. It's not, take a look at their issue sizes. The biggest issue size has been 1900 crore. Need to get that changed. 1900 crore has been the biggest issue size this month that we have had. And the IPOs of over 1,000 crores have been only 2 of them. But 16 out of these 25 IPOs that have come out in the month of September are priced less than 500 crores. So a lot of these smaller IPOs are making a dash to the primary markets. There's one standout name that you can find in September's IPOs has been Urban Company, without a doubt. Healthy subscription, a healthy listing. But of course, even after hitting a post-listing high of 201, that stock is also down 20% from that post-listing high. So you're seeing some profit booking in Urban Company as well. So those IPOs that have done well are witnessing some profit booking. They are coming off the highs. And of course, so that is one standout that has been there. But otherwise, it's just been a rush. At one point last week, there were at least 9 IPOs that were open simultaneously for subscription. So it goes to show the kind of activity that you're witnessing in the primary markets, and there is no specific trigger behind this as well.
Oh, yes. And I think the pipeline looks similar.
Pipeline looks similar as well. But the bigger takeaway of the IPOs that we have had this year so far is that a majority of them has that done anything for investors? For majority of them, the answer is no. Because out of the 74 IPOs, we have 34 or 35 of them that are either trading with single-digit gains from their issue price or below the IPO price. So 9 of them are trading with single-digit gains out of the 60 listings that have taken place so far. And 25 of those 60 listings are trading below their IPO price. That goes to show the kind of activity that you have seen. Now, even if you take a look at the returns as well, only 2 IPOs that have listed so far this year have returned more than 100%, or they have doubled from their issue price. And the rest, 25 to 50%, 10 to 25%, 9 each. And the bigger number, of course, is the ones that are below their IPO price, right? At 25 IPOs. And it's not as if the market sentiment is so positive and markets are making record highs is why you're making a beeline to the IPOs, as what was the case in 2024. Now, even we are coming to the end of this quarter, the Nifty is down 3%. And yet, in this quarter, the July to September period, we have had 50 IPOs that have come out. So that goes to show the kind of activity. And of course, the primary and the activity, the pipeline is the same, right? Tata Capital opens next week. WeWork opens this week. There are IPOs like Physicswala, Prestige Hospitality, Prestige, Hero FinCorp that is lined up as well. So not dying down anytime soon. This primary market activity is certainly spilling over into the 4th quarter as well.
Quite strong there. Thank you so much for making sense of that entire space, Hormus. But with that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets on the other side.
Well, very choppy, as has been the case all through these last 60 minutes. The Nifty is back into the red now after seeing a brief intraday recovery. The important level to watch continues to remain today's low of 24,593 on this monthly expiry session. We take your leave on this edition of Trading Hour from Sonal and me. Thank you for watching. Halftime report on the other side.
Stocks oscillate in a range of ahead of F&O expiry today on the NSE. Metals and IT eke out some gains, while consumer durables, realty and FMCG drag.
Donald Trump fires a fresh tariff salvo targeting movies and furniture imports, while foreign movies will be tariffed at 100%. Upholstered wooden items will attract a 25% levy. The Indian film industry may be the only one marginally impacted, say analysts.
RBI is likely to take a pause on rates and stance even as the GST rate cut could see it revising up GDP growth and lowering inflation expectations. A dovish tone may, however, keep the door open for future rate cuts.
Gold scales to a new high of $3,870 per ounce on Tuesday, clocking gains of 46% for the year and setting up for its best monthly gain in 14 years. A likely US government shutdown and hope of further Fed rate cuts keeps bulls upbeat. Hello and welcome to a halftime report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Patra. With me is Mangalam Malu as well as Vinny Motiwala. Well, it's turning out to be a session where we've just about given up all of our gains for the Nifty, and the Midcap index is in the red, down around 62 odd points. The Bank Nifty is holding up ahead of the RBI policy tomorrow, so just about higher by around 0.3%. Let's see whether that sustains or not. It seems to be a little bit of a tough day for us. The advanced decline ratio just about 1:1. So as of now, we're sustaining, but let's see whether we manage to sustain these gains going forward or sustain. Well, you can see it. The crisscross is already taking place at this point in time. So it looks like the second half could probably be a little tougher than what the first half has been.
Well, ahead of the RBI policy tomorrow, we have the monthly expiry today. So that's something that we'll most definitely, watch out for in trade, because the option writers, and we'll talk more about that when we, speak from the FNO desk, are expecting some sort of range-bound moves between 24,580 to about 24,730, which is closer to today's high. So that's something I'll be watching out for in the frontline end of things. But more importantly, two important sectors for the Nifty, which is the Nifty Bank as well as the Nifty IT Index. Both of them are doing relatively better. So the intraday charts of both the Nifty Bank and the IT Index come up for you. The Nifty Bank is up around 1/3%, and the IT Index is up around 1/3% as well. If both of them continue to hold on and we get some sort of support coming in from Reliance, then a lot of the shorts in the system may have to cover their positions. That's something that the street is betting on. So long as this range holds and the lower end of this range holds, and we go past that 24,700 mark at any point in today's trading session, led by any of these sectors or Reliance that I spoke about, then maybe we could see some bit of a short covering pop towards the last hour of trade as well. Whether that happens or not, only time will tell. But for now, the Nifty up nearly 150 points for the September series after having fallen 1,100 points in the prior two series.
Absolutely. So important to keep an eye out on all these data points today. Good afternoon, guys. In banks specifically, we have PSU banks that are doing well, right? Look at the top gainers today with PNB, Canara, Bank of Baroda, all these managing to hold on to gains. SBI also managing to see some bit of a gain today. Apart from that, we have metals that is also seeing some bit of attraction today, and Nifty Metal is also holding on to gains. On the flip side, media is the one that's not doing well in today's trading session and among the top sectoral losers. But we have a whole host of stocks that are buzzing in trade today and then are moving around. Vivek is joining with us to give us those details. Good afternoon, Vivek.
Well, good afternoon. As you mentioned at the start of the show, so many moving parts to keep an eye out for in today as well as tomorrow's trading session. Amidst that, some of the stocks that are making the moves are first on the list, Tata Investment. This particular stock yesterday did see a bit of a knock, but this particular stock has done exceptionally well in the last two trading weeks. Today, higher by another 9%. Good volumes, top NSE 500 gainer. The other stock in focus, or the other set of stocks in focus, one that you mentioned, PSU banks. Have a look at the entire pack today. Most of the stocks are higher, anywhere between 2 to 4% in the session. Names like Bank of India, Canara Bank doing very well. The NSE metal pack, especially some of the names are from the broader end, so names like Hindustan Copper, another stock that's outperformed the entire month. Have a look at Nalco, look at Hinzinc, Vedanta. All of these stocks doing very well in the session today, up anywhere between 2 and 4%. Again, new listings. Remember, we had 4 listings on the main board today. Very mixed start for most of these names. Jara Institute down almost 16%. Solar World again muted, but has recovered a little bit from the day's lowest point. The only listing that's managed to do quite well is actually Anand Rathi shares. We had the management too earlier on the channel. On the other hand, quite a few laggards as well. Dixon Tech yesterday saw a bit of a knock, recovered a little bit, but today down another 2.5%. VOCA, one of the top gainers yesterday, cools off after the sharp rally. Exchange stocks today, both BSE as well as M6 have cooled off quite significantly. Both of the stocks down anywhere between 2.5%. And IKS, one of the top laggards as far as the NSE 500 is concerned, Inventor's Knowledge Solutions, that particular stock down almost 4.5%. And lastly, like you mentioned, the media pack under pressure today, PVR taking it on the chin, almost 2.5% lower today.
Right, Vivek, thanks a lot for that. So those were a bunch of buzzing stocks today, though, in terms of an advanced decline, like we pointed out, it has been crisscross. So a bunch of them gaining, a bunch of them losing. What we'll do is, on the other side, focus on all the movers and shakers. Stay with us.
Welcome back to Halftime Report on CNBC-TV18. Nifty is flat in today's trading session. 24,650 right now is what the Nifty is managing to hold on to. So let's keep an eye out on that. The broader end of the market, though, is also seeing a bit of a decline and is underperforming. So yes, Nifty Midcap is down 0.1% still in trade, and that is what we're watching out for as well. But a lot of stocks that are moving around in trade, and in our movers and shakers segment, where we track all these individual stocks that are buzzing in trade, let's go across to a team of research now who's here to give us those individual details about why these stocks are moving in trade. Mangalam, first up, you are tracking Blue Dart as well as All Cargo Logistics. Why are they both in focus?
Both of them are in focus because they've gone ahead and done what they annually do towards the end of September, which is announce a price hike for the next year. And this time for both Blue Dart as well as All Cargo, you know, the price hikes which are effective January 1st, 2026 have been pretty similar to what they announce every year as well. 9 to 12% on an average for Blue Dart, around 10% for All Cargo Gati as well. So both those stocks come up for you. While a price hike every year is what the analyst community expects and they bake in their estimates as well, you know, on the day they announce this price hike, the street really gets excited about it. A couple of things that really we need to keep an eye out on for both Blue Dart as well as All Cargo. Typically, the third quarter is seasonally the strongest because you have a lot of these, you know, festive season online sales that take place as well. So that means big business for them. And secondly, whether they go ahead and, you know, give the price hikes that they've announced from Jan 2026 to that extent that they've announced, because usually between the announcement and the actual implementation, there is a negotiation that happens between the clients, etc. So the average realization increase is 6 to 7% as against the 10-12% that they announce in terms of a price hike as well. And mind you, the stock price move on the day of the announcement versus the company's share price performance over the next 12 months are fairly divergent. So if you look at Blue Dart, you know, today is up around 6%, but over the last 12 months or so, it's down around 15%. Similar is the case for something like an All Cargo Gati as well. Today it's up in the trade session, but the last 12 months or so, it's down about 32%. So just be mindful of these, you know, factors. The price hike, obviously a positive and expected by the street, these stocks buzzing around.
Okay, all right, Mangalam, thanks very much for that. So Blue Dart and All Cargo Gati, both those stocks in focus. But let's go across to Gaurav, who's going to tell us about Sammaan Capital and why he's looking at that. Gaurav, over to you.
Well, yes, when we look at Sammaan Capital, today the stock actually opened with a strong performance, although it has given us some of its game. But let's understand what is happening. First is that 2nd October is a date where board meeting will happen, where they will consider and evaluate fundraising via equity. Second, yesterday also, when we look at the stock performance, it was up more than 10%. And yesterday, to add up to that, we also saw ICICI Pru MF actually bought 43 lakh shares at a price of around 151.95 rupees per share. Apart from that, in the last 1 month, we have seen this stock actually outperforming because apart from all these news flows, there are other fundamental triggers. So first, let's talk about appointment of Mr. Himanshu Modi as Deputy CEO. Other than that, for FY27, the company is saying that the legacy book is going to contribute in single digits versus what it is right now at 37%. They are also saying that the AUM is going to reach around 1 lakh crores, which implies 27% CAGR growth from here. And at the same time, management also expects credit cost to go at around 1% at a steady state, which is currently at 3%. Other than that, when we look at valuations, they are also attractive because the stock currently is trading at around 0.58 times price to book, given that the recent rally. And given all these factors, we are seeing some kind of healthy rally in Sammaan Capital. Let's see if it sustains. But for now, we are seeing some kind of gains coming up in this stock.
At that point, whether that sustains or not is something that we'll definitely watch out for. Gaurav, that's about, you know, Sammaan Capital, but from Sammaan, let's move on to Man Industries. That's the one that Nigel is tracking. Nigel, it's under pressure today.
Well, that's right. Man Industries is under pressure following the regulatory action. SEBI has barred the company and 3 of its top executives from the securities market for 2 years. The names include the managing director, Nikhil Mansukani, the chairman, Ramesh Mansukani, as well as the former finance chief, Ashok Gupta. Now, in addition, SEBI has also imposed a penalty of around 25 lakh each of these executives. The regulator's action, well, it's based on the findings that go beyond a single transaction of financial year, citing a pattern of conduct that disregards transparency as well as accountability. Man Industries, well, they have responded with a clarification. They are stating that the primary issue relates to non-consolidation of its subsidiary, which is Merino Shelters Private Limited, along with some minor compliance lapses between FY 2015 to 2021. They also add that consolidation of the subsidiary's financials started from FY 23 and 24. They go on to state that their order book is solid at around 4,700 crores. The company assures stakeholders that business operations continue unaffected. They maintain a robust order book and all their facilities are fully operational. Investors, well, they'll be looking and watching how Man Industries navigates this regulatory challenge and the current market pressure. Nonetheless, for the time being, a rap on the knuckles from the regulator, and that's why the stock under pressure.
Okay, Nigel, thank you so much for that. But let's move on and go across to Nimesh, who's tracking Coforge as well. Nimesh, the stock is buzzing in trade. What's the update here today?
Well, so the stock is buzzing on the back of a big report from CLSA. They've initiated coverage on the stock with an outperform rating and a target price of 23.46. I guess they're the highest on the street, and which indicates a more than 50% upside from current levels. So that's the reason why the stock is excited today. Now, Coforge is among the top 10 Indian companies in terms of revenue, and 2/3 of its revenues come from the financial as well as the travel verticals. Given the strong execution track record of the management, which is clearly visible in the strong order book revenue as well as earnings in the last couple of quarters, CLSA is forecasting FY26, FY28 revenue and EBIT CAGR of 15-16% and an EPS CAGR of 22%. Guess this is one of the most fastest growing IT company, and given the execution track record of the company, CLSA believes that there is a potential of more than 50% upside. So a big report initiating coverage on Coforge with an outperform rating and a target price of 23.46.
Take that point, Nimesh. Thanks a lot for that. So that's about Coforge, a big report coming in, a big upside target as well. But while you were talking, Nimesh, there was Nigel in the studio. He's still with us, and he was showing us some of the Garba moves that were happening. The last day of Navratri, I suppose, before we go on to the Shera. So I think
Nigel has to show us some moves.
Yeah, go ahead.
Some moves, something.
Actually, our colleague Vamakshi is moving on, right?
Yeah.
And so I thought that they were preparing and practicing for the Sangeet. This was around 20 days ago. They said, no, they're practicing for Garba. So then I read a couple of tack.
Tonight, where in which?
Actually, let's see. I mean, it depends on where Vinny takes us. Because yesterday, I believe Vinny, Vamakshi, they were burning the dance floor. So pick up a little bit of some of those steps. Mangala.
I can run the chopsticks.
And the holidays on Thursday.
Ekta, how about you? Okay, three of us are known to be moving around left, right, and center. Let's ask Ekta to do a step or two.
I'm fine with not doing a step.
Ekta saying that it's all Punjab. All right.
Okay, guys. Thursday is the holiday, not today. We still have work to do today, but thanks very much for that entertainment also, Nigel. Well, we'll take a short break with the news that the Nifty is just about flat, so that's probably why you think today is a holiday as well. We'll take a short break and be back and connect with Ritu to decode what to expect from the RBI policy tomorrow. Stay tuned. Welcome back. Well, picked up a little bit for the Bank Nifty, so up around 0.5% currently for the Bank Nifty. Also, just want to point out that the Nifty PSU Bank Index is outperforming, so that should come up for you. It's up around 2% at this point in time, so there is definitely a lot of positivity ahead of the RBI policy tomorrow. Just want to point out that stocks such as PNB, Bank of India, Union Bank, all of these stocks are buzzing around in today's trading session, up anywhere between 2.5 to 3.5% at this point. But let's in fact focus on the RBI policy. The RBI's MPC will announce its interest rate decision tomorrow. Ritu is here with the key expectations on what we can expect. Ritu.
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts, ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5 to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
All right, bringing NBFCs under the Banking Regulatory Act, assurance of liquidity, and the tone and tonality of what the RBI governor says and the MPC policy outcome is something that we'll be tracking. And ahead of that, we have the expiry to contend with. What are the charts saying, even as the frontline indices consolidate? Take a short break. On the other side, we have Rachna Vaidya joining in with some trading strategies and the view on the frontline indices. Stay with us.
Welcome back to Halftime Report on CNBC-TV18. Nifty has moved up from when we started the show, right? 24,630. Around that when we started the show was Nifty trading at that. Now look at a bit of an increase that we've seen in the last half an hour. 24,676. Bank Nifty has also seen an up move. But today is expiry day, so what are we keeping an eye out on in the world of F&O? Mangalam is joining us from the F&O desk now to give us all these details.
Well, at the start of the show, we pointed out that, there is a possibility that Nifty does go higher in today's trading session if there are no further declines that we see on the frontline index. And the reason for that was that both its, important verticals, the Nifty Bank as well as the Nifty IT index, were both doing well. They were up around 1/3% about 15-20 minutes ago. Now they are increased their up move to about 0.5%. So that's a positive. The other thing that we're looking at ahead of expiry is that the advanced decline, while it's at an even keel, we do have a fair amount of stocks which are in the green with fairly well bid numbers as well. So we'll talk about those individual stocks and pockets in just a bit. Ahead of expiry, the India VIX is higher. Now that the market has seen a bit of a recovery, the first port of call on the way up would be today's high, 24,732, and thereafter would be the yesterday high number, which is 24,791. So those are important levels we'll watch out for further short covering on the index. Now, the stocks which are fairly well bid outside of the IT and auto pack are rather outside of the IT and banking pack. We have the consumer and auto stocks, Hero MotoCorp up 2.5%, HUL, Britannia, both of them up around 1%, Metals have been, fairly well bid as well. So we have Nalco, SAIL, Vedanta. So individual pockets of the market doing extremely well, even though the broader markets are largely equal in favor of advances and declines. Now, what is it that the street is working with when it comes to expiry? Typically on the expiry, a straddle, which is a call and a put together, is sold. So 24,650 is the nearest straddle that we have right now. The call is trading at a premium of 57 rupees. The 24,650 put comes up for you. That too has a premium of almost 29-30 rupees. So net, they are playing for a premium of 75 rupees on the 24,650 call and put, which implies a range of 24,575 at the lower level and on the way up 24,725, which is closer to today's high as well. So that's the broad range that the street is working with. Expand that range and you have the 24,700 call for a premium of 30 rupees, so 24,730, and at the lower level the 24,600 put. That's the one that comes up for you as well. That has a premium of 12 rupees, again telling you closer to 24,600 is or closer to today's low is a very strong support that we're seeing for the market. 3 crore shares outstanding on that option as well. So the Nifty stays in this 150-point band and a lot of individual stocks fairly well bid.
All right. Thanks very much for that, Mangalam. That's on the F&O desk. That's the update from the F&O space. But we do have Rachna Vaidya who joins in to talk about the technicals of the market. Rachna, hi. Welcome to the show. Well, the markets are off the day's high. It's just about around 24,677 currently for the Nifty. It's off those highs of over 24,700 odd. What's your sense in terms of where we could close up for the Nifty? Do you think that the second half could be more pressured? Or do you think that we're going to get more support from the Bank Nifty, which is showing some amount of gains now?
Hi, good afternoon. And see, basically the extreme short-term period, we are in a sideways market since 2 days. And the upper end of the range for Nifty futures would be 25,000. So unless and until we cross 25,000, which is good 200 points away from the current levels, till then we remain in a sideways mode. Nevertheless, within that range, we are right now at the lower end of the range. So there is a good amount of probability that in the second half, before the contract expires, there are chances that we could see a little bit of higher levels from the current levels. See, we are at 24,800 on futures. If we hold on to 24,750 on futures, then there are chances that we could see levels of 24,900 and 950 on Nifty futures before the expiry. And this will be possible only if the Bank Nifty as an index starts supporting the market. The PSU part of it is already doing it. What we need to see is some amount of more traction from the private banks as well.
Okay, and Rachna, individual trading ideas for today that you're looking at?
In terms of individual names, one of the names that I'm looking at is Canara Bank. The futures is already trading at a very good rate of return for the day, which is around 3%. We are at a level of 125, and there are good chances that the series of October could remain good for this entire month for this PSU counters, and Canara Bank could be leading the pack as one of the counters. So Canara Bank can be looked at with a stop loss of say around 120. from an entire month's perspective, wherein we could see levels of 130.35 around in the next 1 month of time frame. The other counter to be looked at would be Coforge, which also has some catalyst of news within today. And this also would be performing well for the entire upcoming series. Right now, we are at around 1600 on futures. And if we sustain the levels of 1570, then there are chances that we could see 1650 and 1670 over the next few weeks.
Okay, Rachna, thank you so much for that. But on that note, we're going to slip into a very short break now, viewers. And on the other side, we'll have Manisha Gupta, who is going to be joined with GP Sharma of SkyMed. So stay tuned for that conversation.
Welcome back. Well, just about flat for the mid-cap index at this point in time, lower by around 47 odd points. We have the Bank Nifty, which is managing to hold up with a gain of around 0.5%. Just watch out for a couple of these stocks from the broader markets, however, which are managing to hold up. So Trigon Technology, for example, is up around 3 odd %. We have West Coast, which is buzzing from the paper space. So that stock is up around 3 odd %. CSB Bank is up around 1 odd %. So there's definitely a lot more fervor in a couple of these stocks, but nothing really to write home about. If you look at the gains, it's anywhere between 1 to 3 odd %. Overall, it's a quiet day. The street is just about consolidating ahead of the RBI policy. There's definitely more optimism amongst the banks at this point in time. But good time then to get in an update with regards to the monsoon. We have Manisha Gupta joining in. Well, Manisha, it's definitely been a great monsoon, 108% LPA, and besides that, we also have a possibility that it's going to extend into October.
Oh, well, absolutely. And that is a full 100% probability. But let's get in more from Mr. GP Sharma. He's President, Meteorology and Climate Change at SkyMet. Mr. Sharma, officially, today is the last day for monsoons, but it's not over yet. So withdrawal continues for most part of October, would you say?
Oh, yes, Manisha. The season has ended well, no doubt. Very, very special monsoon. Okay. What I was noticing, after a long time, we had all the 4 months ending up with more than average rainfall. It doesn't happen. Monsoon doesn't perform in all the 4 months good, and neither it gets spoiled in all the 4 months. But this season, we saw all the 4 months above average, 9% June, 5 each, July, August, and September, looking at almost about 20%, huge 20%. Okay, it happened after, I will say, 2007. I was looking at the data, last 75 years, it has happened just 4 times that the monsoon has remained good in all the 4 months. Okay, now, as we know, that yes, the withdrawal commenced a little before time from West Rajasthan, even Delhi also withdrew. Most parts of Gujarat, it's already out. Officially, West Uttar Pradesh and even Delhi region, parts of Madhya Pradesh as well. But there is plenty of activity left out now, courtesy series of monsoon systems. Actually, we have a very, very active Pacific also and Atlantic also. On one side, that US East Coast is struggling with storms. And on this side, the Pacific region, be it Philippines onward, China, Philippines, Vietnam, onward, maybe through Thailand, the system are coming to the Bay of Bengal one after the other. And that is how the monsoon activity is getting extended now. And I think it doesn't end so soon now. Possibly next 10 days or so, it will continue. And before possibly the withdrawal resumes. As of now, I see it rains visiting all those parts where the monsoon officially has been withdrawn, be it Gujarat, be it Rajasthan, plains of Punjab, Haryana are joining. Even the hills also will have once again activity. I'm a little worried about state of Uttarakhand, which already seen a lot of the cloudbursts, a lot of weather activity, maybe another spell sometime after about a week or so. So that's it, a lot of monsoon activity still there, yeah.
So you're saying officially we might be done today, but the withdrawal will continue for most part of October. So this active season that you're talking about, where you're expecting rainfall across India, what parts really, and until when do you see these rains continuing within October?
See, actually monsoon activity officially, though we have for 4 months between 1st June and 30th September, but I think you can comfortably take it 5 months, because 15th of May, the action starts in the Indian seas, and till 15th of October, comfortably, it carries on over the eastern parts and Northeast India. Okay, so, but officially, now we see 15th of October is the date when the monsoon normally should be withdrawing from the country, southwest monsoon. And that is the time when there is a likelihood of the northeast monsoon setting in. Sometime it has happened. It is simultaneously the day southwest monsoon withdraws and the arrival of northeast monsoon takes place, because normal date of northeast monsoon is about 22nd of October. Though before 15th of October, it is not announced. Okay, so we expect this activity next about 10 days. Plenty of activity will be there over Northeast India, eastern parts, central parts. All these states, starting with West Bengal, Bihar, Jharkhand, Chhattisgarh, Madhya Pradesh, Maharashtra, further up to Punjab, Haryana, Delhi, Rajasthan, and Gujarat, even including Konkan, Goa, they will have a fair amount of activity. So monsoon withdrawal, which has been there earlier, it will get stalled. It will have a long pause.
Okay.
Possibly will resume not before 10th of October. Some date, difficult to say at this moment because of model variability, but comfortably you can say not before 10th of October, and it is going to get prolonged, particularly the central parts and the northeastern parts. Possibly nothing before 15th of October, as such as the normal date which we take for the complete withdrawal. It will extend up to that.
All right.
Mumbai rained last weekend.
Yes.
Delhi is raining today. Kolkata will rain on Vijayadashmi, day after tomorrow. So this activity, and Mumbai, I think we will have one more spell, possibly. Mumbai rains are very, very notorious from weekend to weekend this season, I noticed. Okay, so let it be the next weekend. We will have not as hefty rains as we had the last weekend, but then definitely there will be an uptick in weather activity over Mumbai. Yeah.
All right. Mr. Sharma, also, what is your sense now on La Nina? Because that is what the street is watching out for. I'm assuming the winter rains, the winter itself, the Rabi sowing would all come into picture with what La Nina really projects from here.
See, firstly, the extension of this monsoon into middle of October, wherever the crops have been cut, the harvest is already, and I think it is already there. Parts of Rajasthan, even northern parts. If actually the news is coming even of that parali burning also, means it is all secured, the crop is secured. So these rains seem to be good in case the harvest season is over for those parts. Any rains in the month of October, it's a good sign. Moisture, soil moisture in the air, otherwise also. But then, yes, La Nina, basically it affects the northeast monsoon, not so favorably or neither adversely. Okay. As such, between the El Nino and La Nina connection always remains a little on the weaker side. El Nino remains very strong. It can spoil your seasons, but La Nina connection is not, correlation is not that strong. Notwithstanding, the La Nina, as normally we say, it doesn't augur very well for the northeast monsoon season, but then the northeast monsoon, basically it's a 5 subdivisions down south. On coastal Andhra Pradesh, Rayalaseema, Tamil Nadu, Kerala, and South Interior Karnataka. But then the winters which are coming, surely they will be definitely a little below average, below normal, the temperatures, cooler than normal, winters will be there. But then, as I said, the stint of La Nina as such is going to be very, very short and weak also. It's not going to pick up. It will not be a strong event. And duration as such, by the time the spring season comes, much before the spring season sets in, it will once again turn to neutral. Like the last year, it will again be a stint of just about 3 months, possibly we will have a La Nina condition. So, yes, and since there is a lag between the La Nina conditions and its effect, La Nina is yet to set in. Okay. It is, yes, specific temperatures, they are below the average for the last many weeks now, 7-8 weeks. It has touched the threshold. Actually, today's reading itself, it is already minus 0.5, which is the threshold for La Nina. So I see the La Nina coming in the month of October itself. Possibly it will be setting in November, December, January, and then thereafter, I think it will ease out again. Yeah.
A final question, Mr. Sharma. There are various reports that December and mostly Jan perhaps could be looking at a harsher winter this time around. Mumbai hasn't seen a winter in the last couple of years, really. Should we be prepared this time?
Surely. You see, winters, basically thick of winters, if we count, that is last week of December, the snowfall also mostly starts in the popular resorts. That's around Christmas and the New Year. So thick of winters, we can take from that and then entire month of January, maybe sometime first week of February. So those about, I will count about 40 days or so when thick of winters. And during that time, yes, well, surely there will be a chance. Like the Mumbai had an exceptional monsoon this season, particularly the second half of the monsoon of month of August and September. It was a deluge, more than almost double the normal rainfall. And keeping the same track, winters are definitely, Mumbai will have a little cooler than average temperatures in Mumbai. So it is not to that extent, but we experience in the north, the severity is not that much, but surely Mumbaiites will need some woolens also this time, this particular winters, particularly in the month of January. I feel so. Yeah, that's it.
Absolutely,
Woolens,
Manisha, I'm very happy. Finally, have some woolens that at
Jackets
least
to
are
wear
used, as well as umbrellas this weekend as well.
Boots all the time, right?
But now again, we have to carry our umbrellas this weekend. My weekend was ruined last week. Now again, I have to wait for more rains this week. But
deep and dark clouds. It's not even a light rain this time. It's like deep and dark clouds. But nonetheless, thanks, Manisha, for joining in. So definitely changing weather patterns, which is probably the larger takeaway from what we have, or maybe it's limited to this year. Let's see. But for the markets at this point in time, we're just about consolidating. So let's talk about specific stocks at this point. One specific stock which I'm looking at is Dr. Reddy's. Now, it's not news which is linked to today or something that is probably moving the stock. It's just something that one should probably keep on their radar when it comes to Dr. Reddy's. Now, remember that Ozempic generic or semaglutide is going to be a big opportunity for companies in Canada. And there are multiple filers for semaglutide in Canada. It's going off patent in January of 2026. So interestingly, the likes of Sun, Teva, Aspen, Apotex, Dr. Reddy's, Sandoz are the companies who have filed for semaglutide generic in Canada. The companies, remember, are still waiting final approval for this particular drug by Health Canada. So they've all filed for it, but they've not received final approval for it. Interestingly, initially the street was quite enthusiastic that, Dr. Reddy's would probably have a great advantage in this market, and they would probably, be one of the few filers for it. But it seems as though there's more competition which is now seeking it. Market size is estimated at around $1 billion in Canada for semaglutide. Estimates are that Dr. Reddy's can make around $150 to $200 million with 40 to 60% EBITDA margins. That's the range at this point in time, with around 4 to 5 initial players. Now, analysts are concerned that now the opportunity could probably be limited in case there are more than expected filers than what was initially presumed. So that is something that the street is probably going to be watching quite closely. And also Novo Nordisk is probably going to be quite competitive itself to retain its market share. So this is something that we will be watching out for. That's on Dr. Reddy's. But on that note, we also have run out on time on Halftime Report. It's a wrap from all of us. Business Lunch will take all the action ahead. Stay tuned.
Stocks are oscillating in a range ahead of the FNO expiry today on NSE. Metals and IT eke out some gains while consumer durables, realty and FMCG are the big drags. The Nifty Bank is supporting the Nifty in today's session.
Donald Trump fires a fresh tariff salvo targeting movies and furniture imports, while foreign movies will be tariffed at 100%. Upholstered wood items will attract a 25% levy. The Indian film industry may only be marginally impacted, say analysts.
The Reserve Bank of India is likely to take a pause on interest rates and its stance, even as the GST rate cut could see it revising its GDP growth and lowering GDP growth forecast higher and inflation forecast lower. A dovish tone may, however, keep the door open for future rate cuts.
Gold scales to a new high of $3,870 per ounce on Tuesday, clocking gains of 46% for the year and setting up for its best monthly gain in 14 years. A likely US government shutdown and hope of further Fed rate cuts keeps the bulls upbeat.
So very important final couple of hours that beckon for our own markets. You're watching Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormus Fatakia. With me is Vamakshi Dhoria. It's a very important last couple of hours for Vamakshi as well. We'll tell you more about that as the show comes to an end. But Vamakshi, good afternoon. The monthly expiry today, proper expiry session playing out. But the bulls would be hoping that A, today's lows are not tested, and 2, we finally see some green at the close of trade.
Of course, Hormas, over the last couple of sessions, what we've seen, like you pointed out yesterday as well, the trend of lower lows, and that trend again still continues today as well. Of course, we've seen some bounce back for the Nifty from the day's lowest point. It slipped below that 24,600 mark, but we've seen a good recovery of almost 60 odd points from the day's low. So at least that bodes well for the benchmark index. As far as the broader markets are concerned, the advanced decline ratio is 1:1. So, not much happening there as well. The Midcap index for now is down almost 0.2% and underperforming what the benchmark index is doing. Now, let's take a look at some of the sectoral movers as well. Ahead of the RBI's decision, we do have the PSU Bank that is perking up in trade. PNB is up almost 3.5%, and so is Bank of India trading with a gain of over 3%. Canara Bank too upbeat in trade today. But what's not doing well is the media index, and we're seeing sharp fall come in on Nazara Technologies. That stock is down almost 3% in today's trading session. PVR Inox too taking a knock in today's trading session, and Tips Music, Sun TV, and the likes of all of those counters down in trade after the Trump's announcement of 100% tariffs on film. So that is how broadly the sectors are moving, Hormas.
No, indeed, and that's the case, right? And the Nifty is been that big talking point, right? 24,593 was the intraday low that the index has made. That the bulls will be hoping that first we don't go to those levels in the second half of the trading session, and B, the fact that excuse me, the fact that we come out of this range. We've been in a very narrow range over the last couple of sessions. Even today, we've been in this 130, 140 point range all through the trading session as well. But there has been a lot of stock specific activity in the broader markets, and of course, news flow driven names as well. You take a look at Tata Investments. Tata Investments has now crossed the 10,000 rupees mark. It's at a record high, and it is now up almost 45% in the month of September. Now, at a time when a lot of these Tata Group stocks are underperforming, TCS at 52-week lows, Titan not doing well despite gold prices being at record highs, Tata Investment has been in a league of its own, and it continues to move higher. It's up almost 45% in the month of September itself. Of course, the record date for its stock split is the 14th of October. So you're seeing some buying interest, and of course, the anticipation of the Tata Capital IPO as well. But since we are on the subject of Tata Group stocks, Tata Motors continues to grab the headlines, and as has been the case over the last few trading sessions, came out with an update. It held an analyst meet yesterday, and there they came out with a clarification saying that JLR is going to resume production in a phased manner. Now, that is something that they've been saying consistently, that they will resume production in a phased manner. They have not shared a definitive timeline as to when that happens, because Tomorrow is the date which is when the production pause is extended till, as per their last official communication for Tata, for JLR, and since then there has been no communication as to when production will resume. Now they also went on to say on the demand front that sales have restarted, the spares and servicing is started to ramp up, but on the demand front they mentioned that the demand remains challenging for JLR in the near term, be it in the Chinese markets, Russian markets, or in the US markets itself. The other major trigger for Tata Motors tomorrow is the fact that tomorrow is the effective date for its demerger, the demerger of its commercial vehicle business. They also mentioned that it is on track. The NCLT approval has been received. The effective date is tomorrow, but the record date, subject to approval from the registrar of companies, will be sometime mid-October, and after which, a day after the record date, the stock will start trading its commercial vehicles business, and it will begin trading as with a different name, and the commercial it will be renamed as Tata Motors Passenger Vehicles Limited, is TMPVL, and the commercial vehicles business will have a mid-November listing sometime during that month, and it will list as Tata Motors Limited. So that is what they have mentioned about the demerger, tomorrow being the effective date. And on the PV demand front also, they mentioned the fact that there is strong uptick that they have seen in the passenger vehicle bookings starting from the 5th of September. They have outpaced the industry growth. They are expecting mid-single digit growth in the industry over the second half of the year as well. So commentary coming in from Tata Motors, but Jefferies in its note has mentioned that although they are optimistic on the passenger vehicle segment, they are not very convinced about the Iveco acquisition that they have done, and also improvement in the margins of the passenger vehicles business. So that is something key that is keeping them underweight on Tata Motors, and they have a 575 rupee price target on the stock. So that's Tata Motors for you, not doing much today, but all eyes will be tomorrow because a lot of triggers are looking to fall into place here.
Absolutely, Hormas. Tata Motors, the past, I think 1 or 2 weeks has been in coming up with new headlines every single day. So definitely one stock that we'll be watching out for. But Hormas, the other, important story is the number of listings that we're seeing, right? In the trading session, we've got at least 4 companies that listed today itself, and many more IPOs. So, a lot of supply for paper coming in, and if you can just take us through how the listings did exactly. Anand Rathi is doing quite well, it's up almost 7.5%, while on the other hand the other 3 listings, they were not as great, Hormas.
The one major takeaway that you have had from the listings of today, we had 4 listings, and the one major takeaway is the fact that even if your IPOs have seen healthy subscription, there is no guarantee that your listings will be as good. Of course, market sentiment has a lot to do with it, but you take a look at this, Anand Rathi and a lot of these companies listed at or around their IPO price in today's session, and look at their IPO subscriptions as well. Now for IPOs of their size, anywhere between 450 to almost 800-900 crore, subscription figures of anywhere between 15 times to as high as 68 times for Sesha Sai is fairly healthy. You could call it that, and especially considering the fact that all of these 4 IPOs were open simultaneously, and yet they have received healthy demand. So that is one. That was the one aspect that you need to pay attention to. But if you take a look at the listing price today, Anand Rathi listed 4% above its listing price. Solar World listed 11% above its listing price. Jaro Tech listed exactly at its listing price. But barring Anand Rathi, now all of the other 3 have now fallen below their IPO price. And of course, it is initial days, it's the first day of trading. Always there is no guarantee that just because you listed at a discount, you will not do well going forward. Angel One being a case in point, the IPO listed at a discount and then it went on to do wonders over the next few years. But in today's session, considering the rush of IPOs that you are seeing, there is one thing very clear, that just because you have had a healthy IPO subscription, there is no guarantee that you will have a proper healthy listing as well.
Absolutely, important to note, and very interesting observations out there, Hormas. But on that note, let's actually slip into a very short break. Up next, we get you updates from the White House in our special segment, Trump Watch. So stay tuned. Welcome back. You're watching Business Lunch on CNBC TV18. Now getting you the latest on Trump-related developments, we have Dia joining us in our special segment, Trump Watch.
We begin with a high-stakes announcement out of Washington. President Donald Trump and Israeli Prime Minister Benjamin Netanyahu have unveiled a 20-point plan aimed at ending the war in Gaza. Now, the framework includes a phased withdrawal of Israeli forces from the enclave. Trump said the plan has backing from other West Asian and Muslim-majority leaders, though questions remain over Hamas's role. The Palestinian Authority welcomed what it called Trump's sincere and determined efforts following the announcement. But Prime Minister Netanyahu made it clear Israel will not walk away entirely. He said Israel would retain security responsibility in Gaza and vow to finish the job of destroying Hamas if the group rejects the US-backed deal. Meanwhile, Trump is turning to trade. On Monday, he imposed fresh tariffs to support the US film and furniture industries. Trump said any country not producing its furniture in the US would face substantial tariffs. He also imposed a 100% tariff on all foreign-made films. Now, the tariffs on kitchen cabinets announced earlier and the newly announced tariffs on furniture will come into effect on October 14, White House stated. And in yet another attack on Harvard University, the U.S. Department of Health and Human Services has recommended the university be excluded from federal funding. Now, this comes after the Office for Civil Rights in July referred the school to the U.S. Department of Justice to address allegations it failed to address discrimination and harassment against Jewish and Israeli students on its campus. That's all for today. Now back to you.
Dia, thank you for that update. Now, for more on the US President's Gaza peace proposal, let's watch this next report.
At least we're at a minimum very, very close, and I think we're beyond very close.
U.S. President Donald Trump said on Monday that Israeli Prime Minister Benjamin Netanyahu had agreed to back a U.S.-sponsored Gaza peace deal. The agreement includes a ceasefire of the two-year-old war in Gaza and the release of hostages held by Hamas.
If accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours.
An official with Hamas said after the announcement that it has not received the written plan.
I support your plan to end the war in Gaza, which achieves our war aims. It will bring back to Israel all our hostages, dismantle Hamas's military capabilities, end its political rule, and ensure that Gaza never again poses a threat to Israel.
Netanyahu made his fourth visit to the White House since Trump returned to office in January. The right-wing Israeli leader was looking to shore up his country's most important relationship after a slew of Western leaders formally embraced Palestinian statehood last week in defiance of the U.S. and Israel. Trump, who sharply criticized the moves as a prize for Hamas, was seeking Netanyahu's agreement despite Israel's misgivings on parts of the plan. Washington presented its peace plan to Arab and Muslim states on the sidelines of the UN General Assembly last week. Trump's 20-point plan includes a staged Israeli withdrawal from the Palestinian enclave, Hamas disarmament, and a transition government led by an international body headed by Trump. The White House talks came as Israeli tanks on Monday thrust deeper into the heart of Gaza City. Israel has launched one of its biggest offensives of the war this month, with Netanyahu saying he aims to wipe out Hamas in its final redoubts. The war has left much of Gaza in ruins and caused a major humanitarian crisis.
All right, on that note, let's slip into a very short break for now. More news and updates follow on the other side, so don't go anywhere. Welcome back. Let's bring you some updates on the monsoon front. We now have Manisha joining us for the monsoon update. Manisha.
Let me tell you that this is the most important season for agriculture, for farmers as well, because 70% of Indian rain happens between June to September. Now, interestingly, officially the monsoon ends on 30th of September, and I'm assuming that date is going to be changed very soon in coming few years, because this time around as well, we saw the onset of monsoon delayed, and that is the reason the outgoing or the exit of monsoon also is going to be slightly delayed in that sense. But we do follow 1st January to 30th of September. Today is 30th of September. Officially, monsoon ends today. The dates I have is until 29th of September. So all India is 8% in excess, 108% of long period average. And that's exactly the number that IMD had put out in their revised forecast. So that's exactly what we are standing at right now. The only concern has been in the east and northeast. That is where we have seen deficiency of 20%. But apart from that, it has been a good monsoon across other states. Northwest, 27% higher. Central India, 15%. And the southern peninsula also is ending with 10% of excess rains for this season here. Now look at the deficient rains here, and that basically was in Arunachal Pradesh, minus 41%, and then you had Bihar as well with 31% of a decline in overall rains. But the excess states are quite a bit. You have Rajasthan with 60% more rain, Punjab 42%, and then you had 40%, 39 to 40 for Himachal and Marathwada as well. Maharashtra, of course, has been a bit of a concern with various areas in mid-Maharashtra as well. Now, interestingly, when you look at the monsoon this time around, all 4 months were excess monsoon months. So we started with June, and that was 9% above average. You had 5% above average for the months of July and August, and September until now has been 15% more than average. So the mean median of that is 8% or above axis. So 108% is how we get that. Now, when you look at the monsoon in last many years, 94% was in 2023, which is normal or below normal. But apart from that, the last 5 years in that sense have given you above normal monsoon. So it has been great going when it comes to the Indian markets there. Now, above average monsoon in all 4 months is quite a rarity, by the way. 2025 is one such year where you have above normal monsoon every month of this season. And the last time you saw that was in 2007, and then it was in 1975. And then 1961, 1956. So since 1950, if you start looking at data from 1950 onwards, it has been only these years that have seen average, above average monsoon in all of those months. Interestingly, now when you look at Mumbai and monsoons, IMD has moved dates that happened last couple of years itself, that the withdrawal date was shifted from 29th September to 8th of October. But this time around, in this year, IMD says that monsoon withdrawal from Mumbai would happen on 15th of October. Apart from that, when you look at the September rains itself, well, average really is at around 341 mm. For the month of September this year, Mumbai has seen 607. So we're looking at really high, almost double of monsoon that we usually get in Mumbai. Now, what's coming is even more interesting because you have more low pressure areas being formed all over Bay of Bengal, and that would bring more rains into Mumbai, Konkan, Gujarat, and some parts of Maharashtra. This would be between 4th to 6th October. So is the monsoon withdrawing? No, it's not. It's exactly what I told you. Another very important thing to note out going forward is that La Nina is setting, and it is setting during October to December period. Now, what does it mean for India? Remember, La Nina means different things for different countries. But for India, it means stronger monsoon. So October to December, those winter rains that we talk about are going to be stronger this time around. And the other thing is colder, harsher winters is something that India could be prepared for as well, is what we're looking at now between October to Jan. Actually, there are some reports which suggest that Jan 2026 could be one of the harshest winters that many parts of India perhaps would be looking at.
Manisha, thank you for that update. Well, we mentioned to you at the start of the show that it's a very important day for Vamakshi as well, not just for the Nifty monthly expiry, but she takes our leave from CNBC-TV18 today. And Vamakshi, it was an absolute delight to share the studio with you on Business Lunch and on various other shows as well. So thank you for being a part of the journey, and I'll leave the final word to you today.
Absolutely. Thank you so much for that, Hormaz. I remember anchoring my first show with you, and as I anchor my last show with you, I think life has come full circle. Of course, you know, a big thank you to everyone for giving me this opportunity. You know, all the teams. I mean, I think I would run out of words. So it's been a great pleasure being out here at CNBC. But you know, it's been a family. So I wouldn't say goodbye. I'll say aujo. I'll see you around, and hopefully, you know, we'll connect with all of you. But with that, that's all the action we have on this edition of Business Lunch. Don't go anywhere. Midcap Radar comes up next.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Hey Vivek, good afternoon. The Nifty in the green right now, but just at the flat mark. It's been very volatile and was something which was expected as well, considering it's the first Tuesday expiry ever.
Right.
So a lot of volatility, but the last 1 hour will be very crucial to watch out for.
First Tuesday expiry ever, and keeping in line with earlier expiries on Thursday, the volatility is the only thing that remains quite intact. Well, we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Stocks oscillate in a range ahead of F&O expiry today on NSE. Metals and IT eke out some gains, while consumer durables, realty and FMCG drag. Midcaps lag.
A string of listings in D Street this morning. Solar World sees a listing pop up around 10%. Meanwhile, it's flat listing for Jaro Institute.
Coforge gains after CLSA initiates coverage with an outperform rating and a target price of 2,346 rupees a share. Says the company having a consulting mindset is visible in its strong order book, revenue and earnings growth.
Sammaan Capital continues to rally on a number of triggers. The company's board is set to consider a fundraise on the 2nd of October. ICICI Prudential also picks up stake in a big block yesterday. The stock, however, is back in the F&O ban list.
Man Industries is under pressure after SEBI bars the firm and 3 of its top executives from securities markets for 2 years. The company says primary issue alerts to non-consolidation of their subsidiary Merino Shelters along with minor compliance lapses.
Okay, those are the headlines that we are tracking for you today. But of course, the mid-caps are the ones in focus. They are the ones underperforming the benchmarks. PSU Banking Index lending some support, but it continues to oscillate between the green and the red as well. Mid-caps at the day's low, but we have a whole host of stocks which are on our radar, be it on the back of news flows, be it on the back of block deals. We've been discussing it since morning, but this is our special segment, Mid-Cap Movers. We have Ria. She is joining us to take us to the mid-caps that are moving around in trade. Hey, Ria.
Hi, Sonal. Let's take a look at the stocks that have been buzzing in trade today. Let's take a look at the gainers first. The first one is Blue Dart, up around 5 to 6% after the company announced that it is going to increase its average shipment prices in the range of 9 to 12% with effect from the 1st of January of 2026. Thomas Cook is the next one. This one has been in focus since the company has partnered with the Ministry of Tourism to elevate destination experiences across India. DCX Systems has also been in focus today after an order win worth roughly rupees 50 crores. These orders were for electronic module assemblies as well as cable and wire harness assemblies. 2 stocks at their 52-week highs today, Tata Investment Corporation as well as Netweb Technologies. These stocks have continued their run over the last 1 month. Tata Investment up around 37% over the last month and Netweb going up by over 65% over the last 1 month. Sammaan Capital has also been in focus today, up around 2 to 3% after a big block deal. ICICI Prudential Mutual Fund has bought around 44 lakh shares at a price of rupees 151.95. Coforge was the next one that has been in focus today. This is the biggest gainer in the Nifty IT index pack today, or over 3% higher today after CLSA came out with a note on the stock. They've initiated with an outperform rating and a target price of rupees 2,346. Taking a look at the stocks on the lower side today, Man Industries around 12 to 13% lower after SEBI has barred the firm and its top 3 executives from the securities market for 2 years. Media stocks have also been lower today. The index is down over 1%, being the biggest sectoral loser today. PVR, Inox, Sun TV, as well as Tips Music and Z Enterprises trading lower after US President Donald Trump announced a tariff of around 100% on all movies made outside the US. Realty stocks have also been trading lower today. The likes of Prestige, Godrej Properties, Anantraj, Lodha, DLF, as well as Sobha trading lower in today's session.
Thank you so much, Ria, for joining us and taking us through all of the stocks from the broader end of the market that are making the moves both on the upside and on the downside. Well, it's a very good time to welcome Shrikant Chauhan for a quick technical check on the market. Shrikant, good afternoon and thank you so much for joining us. Shrikant, we'll keep it a little short today. First up, what's your view on the market, especially Nifty on expiry day, and what are your top picks for the day?
Good afternoon, Vivek. Good afternoon, Sonal and everyone. So for Nifty, we are of the view that it is trading with a downward bias. It is finding difficulties to sustain at higher levels. Today we saw gap up opening, but again, eventually the market is now again trying to move towards the levels of 24,600, which was the lowest of the previous day. I am of the view that till the market is not crossing 24,800, we are going to witness range-bound activity between 24,800 and 24,500. But close to 24,500, the market is having support. So close to those levels, we should look for taking some long bets in the market. But at these levels, it is better to be focused more on stocks.
Okay, all right. Shrikant, thank you so much for joining us today. These are some levels to watch out for on the benchmarks, but we'll slip into a short break now. Management of Brigade Group will join us to discuss the FY26 outlook, the real estate residential demand, and a lot more. Welcome back. Brigade Enterprises, that is the corporate on our radar. Joining us now, the company has recently announced a slew of projects this month and last month as well. M.R. Jayashankar, who is the executive chairman at Brigade Group, joins us now, and we'll discuss the demand trends in Bengaluru market, the residential project pipeline because it looks very strong, outlook on the commercial or the leasing segment as well. Mr. Jayashankar, good afternoon. Thank you so much for joining in. It's been a while since we spoke to you, so there are a couple of things that we'd like to understand. This is about the company's pipeline because there have been a lot of JVs, JDAs that the company has entered into this month and last month as well. By when will they materialize? Will you see some bookings coming in from there in this fiscal itself? And how are you planning to expand? Will it be via the JDA model as well going forward?
Thank you. Thank you for inviting me. So, historically, if you see, Brigade has always been doing about 50% JDA and about 50% in purchased lands. So somehow it has been going like that with a variation of 5 to 7 or 5 to 10% on a year-to-year basis. And recently we have in the last 9 months, we have announced about 15 million square feet of new projects. Of course, about 70% in Bangalore and 30% in Chennai and Hyderabad. And I think the market in Bangalore is fairly robust. I would say this year, FY26, even for the first 6 months, the overall sales in the Bangalore market is higher than the last year, and we hope the next few months also should be fine for the city as such. But as far as Brigade is concerned, compared to the overall country performance of about 15% is the overall reduction in the outtake of the market in the sales. So to that extent, we are also, I would say, we may be down by about 15% compared to the last year in the first 6 months. And we are working hard to make up for the next 6 months.
Okay, so that brings us to our next question. Q1 sales was flat around 1100 crore mark. You've guided the street to a 15 to 20% growth of pre-sales as far as FY26 is concerned. Post H1, would you be trimming that particular guidance down?
Yeah, we hope to substantially do better in the H2, primarily because a number of our projects approvals got held up or delayed due to a variety of reasons, including the formation of Greater Bangalore Authority from the earlier Brihat Bangalore Authority. So I think things should are settling down, and we are eager to, I would put it that way, to launch more projects in H2.
Okay. Mr. Jayashankar, you've been in the industry for a long time, and now that we are in this real estate cycle, we saw an up cycle for the last 6-7 years. Do you think we are somewhere closer to the peak for two reasons? Because we have seen it for so long. Secondly, there have been a lot of issues around the IT industry, global layoffs, plus TCS talking about layoffs as well. And third, pricing also has surged massively. Do you think all of it would come down because of these reasons?
I would put it this way, see, after almost from 2016 to 2021, due to variety of reasons like demo, RERA, GST, COVID, so the real estate market was soft, and from 2022 to now, last 3 years, it has bounced back in a very big way. And with all the I would say the uncertainties in the global market, India is a fairly insulated and resilient, as shown in earlier, mega issues like the, global financial crisis of 2008, 2009. And we have been resilient, and we are, as far as real estate is concerned, we are substantially, it's a domestic market. And whatever is happening in the global market will have some impact, but I think there are opinions that we may be the beneficiary. IT sector may become the beneficiary in the medium to long run. In the short run, it is very uncertain. The situation is fluid every day there is some kind of new announcements by United States president, and
right.
it may have. So it is very, very difficult to predict.
Okay.
Mr. Jaishankar, the other question is a couple of analysts, a couple of notes have highlighted the fact that in the Bangalore market, we had one period last year where approvals were not coming through. Again, there is an issue going on currently where approvals as far as real estate projects have been stalled. What is the on-ground situation? Have any of your projects been stalled?
No, it is generally not just our project. All projects were stalled for about 2 to 3 months due to various changes in the civic authorities, I would say structural change. As I said earlier, Bangalore Brihat Development Authority, Bangalore Mahanagara Palike, Brihat Mahanagara Palike was there. It has become the Bangalore Greater Bangalore Authority by dividing it into 5 different corporations.
Right.
So they are still settling down, and that definitely created delays. Unfortunate, but that is the fact.
Okay. This is about the residential market, Mr. Jaishankar. I wanted to understand what is the update as far as the leasing or the commercial part of the business is concerned. Will you look at REIT in some way? What is the kind of growth you're envisaging in that portfolio?
See, we have about 10 million square feet of annuity income yielding projects, and already yielding annuity income. And on pipeline, we have another 9 to 10 million square feet, which should get completed in the next 3 to 4 years, or if not 4, maximum by 2030, which will all become by 2030. We expect to reach about 20 million square feet. At that time, probably it might be ripe for a REIT. Not earlier than 2030. We don't expect it to be ready.
Okay, so thank you so much for joining us, giving us clarity on the on-ground situation as far as the Bangalore market is concerned, also giving up some visibility, although slightly some time away as far as the REIT for the commercial assets is concerned. Thank you once again. Well, before we slip into the short break, if you could just pull up the intraday chart of KPIT Technologies. That particular stock in the last half hour or so has seen a significant sell-off and now trading near the day's lowest point. KPIT Tech, as you can see on the bottom of on your screen, down almost 6.5%. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Welcome back to Midcap Radar. Well, we've had 4 listings today, but one particular listing that's been quite weak has been Jaro Institute. Upasna, who's been tracking this particular company, joins in with more details on the company as well as its comparison versus some of its peers.
Well, certainly. Overall, if we see, it's a flat listing. And the stock has fallen nearly over 17%, marking an intraday low of nearly about 732 per share. Now, if we look at the overall IPO size, it's about 450 crore, marking fresh issue of 170 and OFS of 280 crores. Now, if we look at the promoter stake sale, it falls nearly to 57.3% from 78.2%. Now, Sanjay Namdev Salunke is the promoter selling shareholder in this IPO. Now, let us look at the objectives mentioned by the company for this issue. Company says that the proceeds out of 170 fresh issue, out of it 81 crore will be used for marketing and brand building and 45 will be used for the repayment of the outstanding borrowings. In terms of overall industry outlook, if we see, India's online education and higher lifelong learning market is projected to see a strong growth at a CAGR of over 40% from FY24 to FY28. Now, let us understand what does the company exactly do. It was founded in 2009. Jaro Institute is an edtech company specializing in higher education and even executing upscaling programs. It partners with leading universities such as IITs and IIMs to deliver its various offerings. Now, let us look at the key financials of the company. Now, if we look at the revenue growth for FY25, it stands at 27% versus the growth of as high as 63% in FY24. Now, there is such a huge difference in the growth of these two financial years because company has discontinued some of its operations in FY25, which is why the financials stated in FY25 are on standalone basis, while for the other years comparable are on a consolidated basis. Now, if you look at the EBITDA margin, it stands at 33.1% versus 32%, and company's EPS stands at 25.5 versus 18.9%. Now, if we look at only the FY25, since the other years are not comparable much, let us look at the key indicators for this company in FY25. The company's ROE stands at 36%, debt to equity stands at 0.3 times, price to book stands at 10.5 times, price to earnings stands at 34.9 at the listing price, which is now cheaper by almost about 20%, and company's EBITDA margin stands at 33%. Now, if we look at the listed peer space, peer group companies, there are not much. Jaro has a CAGR of 66% versus the other companies, which the CAGR is from 46 to 155%.
Thank you so much, Upasna, for joining us and taking us through what exactly Jaro does. However, it's been a very muted listing, especially for that particular name. Well, as far as the slump in the market is concerned, especially the mid-cap IT pack continues to witness significant selling pressure. We did highlight KPIT Tech. A few of the other names like Emphasis and other IT stocks are under pressure. With that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.
Hello, good afternoon. Welcome to MF Corner on CNBC-TV18. I'm Vinny Motiwala, with me Sonal Bhutra as well. Sonal, today is interesting, right? Markets have been so volatile. I also want to know what should I do with my mutual funds, and I want to understand how to go about it as well. That's what we're going to discuss, right?
We are going to, and you know, this is the time when we really need a voice that can calm the nerves and tell us how to go about things when the market is so volatile. We are seeing something coming up every day when it comes to the geopolitical arena. Markets are grappling with them. Investors often find themselves at the center of these issues, right? So how should you navigate market volatility? Should you stay put? And what happens with your mutual fund portfolio? We'll discuss this and more with Swaroop Mohanty, the Vice Chairman and CEO at Mirae Asset AMC. Swaroop, such a pleasure to speak with you as always. Thank you for coming down to the studio at a time. Everyone has the question what to do next, especially mutual fund investments, right? Because people say that, okay, we've seen some gains. Should we take off some gains from there? So first up, what are you making of the markets right now? There's so much happening.
It's good that so much is happening, right? And, you know, in volatility always lies the opportunity, and it's a good time to be an asset manager, I must say. Because when you look at the globe, a lot is happening at the globe. And then you narrow it down on the asset you're owning, and the asset called India is a good asset. You ask any fund manager what he or she would like to do, a simple answer will be own a good asset at a good price. Because of all this volatility, you're getting this good asset as a good price. I mean, make no mistake, the accumulation which is happening at these prices from a long-term perspective only strengthens the portfolio. If that is good for the fund manager, it's good for the investor too. And so much has happened. We're talking about, I personally believe there was life before Christ and after Christ. Then I've come on shows and says the life is before COVID and after COVID. Make no mistake, it's life before tariffs and after tariffs. It's a changed world. When the largest economy changes its behavior, every country will change its behavior. And in that behavior change, so good to see India standing tall, sticking to its core, not doing anything rash, in fact taking it head on. Don't mistake the impact which GST can have in the economy in the times to come. India is a consumption economy. And the best way to push the economy is to start with consumption. We didn't wait for things to happen. We've taken it on our side. See that, couple it with RBI now taking a more growth-oriented stance. So the policy making has made it its own thing to come out in the front and take the economy head on. You know, that's so refreshing to see. And if in the worst days this economy is growing at 6%, then the globe is tottering at 2 to 3%. This is a good asset and it's good space to be in from an investor perspective.
Absolutely, Swaroop. Good afternoon, and first of all, happy festivities to you as well.
Thank you so much.
From all of us here. So hope you have a great time after the show, and we want to have a great time post-COVID.
And during the show as well.
During the show and post-tariff scenario for investors. Right now, do you think there is any of this asset class which would provide a better opportunity or where someone can make more money?
No, I think the underlying has changed dramatically. Let's look at what we call the democratization of the market. India for the last 2-3 years has been the largest public issuing country of the world. Okay, and most of the new issues have come in the mid and small cap space. The market has become broader. In 2016, now I'm not advertising, but I'm stating a fact that we closed our mid-cap fund, stating that we didn't have ideas. Today, fund managers have more ideas often than on the mid and small cap space. So to catch that length and breadth of the market, you have to invest very differently from your yesteryears. Due to the rate cuts, debt is again back in play. Duration can be a play again. And at a time when global treasuries have more gold than dollars, you have to rethink the question, is gold a hedge or is it not, right? And along with gold, there is silver. The point I'm making is all the rules or the erstwhile allocation rules need to be rechecked. Portfolios need to be rebalanced to catch the length and breadth of all asset classes.
Rebalance to get in gold?
I mean, see, it depends on the risk profile. I have this thing about not gold, any asset class. Returns always come in a lumpy nature. It's just 2-3 years which make up for 7-8 years. Indians, I believe, are suited more to make money in gold because they hold it. They hold it for 10 years, 20 years, and catch those lumpy years more often than other asset classes. If you apply that same rule to any good asset class, you make money. From the equity side, they've not waited for those lumpy years. There have been more timers, and the last 2-3 years flow are very cognizant of that. It's been brash return changing. Just last one return kind of comes into the portfolio. You change that to the behavior of gold, same investor.
Yeah, that's true.
You know, you make money, right? Whether it's gold, debt or equity.
But isn't it now more FOMO situation if I enter gold now? Like,
how do you know? How do I know?
Because I was looking at it at 2,600. I was like, oh my God, it's expensive. Now look at where it is.
Vinny, I've been thinking yesterday from 2001. I've been making this presentation called Investing in Volatile Times. Market at all-time high, how many times have you done a show? Right? So you don't know. So better to be allocated in that and allocate as per your risk profile. Yes, between gold and silver, there is a risk profile coming in. If you want good risk-adjusted return, maybe gold. If you are a slightly higher risk-taking ability, maybe silver. But the point I'm making is you need to rethink whether it's just a hedge or not. That was the erstwhile rule. All those rules stand changed.
That's true. So, you know, while you're saying for long-term investments, you have to stay put. Before tariff, after tariff, life will change, but long-term goals, so to say, should remain same in terms of allocation as well. SIP inflows, every month also we talk about the word record high SIP flows. But cancellations also are growing, right? At a point in time, it was around 50%, it grew to 70%, 80%. What's happening here? What are you as a fund manager making of that?
I mean, see, the market is getting its net money. So market is happy. The investor who's stopping before the goal is achieved needs to think. And that same investor, I always tell somebody who redeems on market timing, just write down your exit NAV. And go back 2-3 years later and check that exit NAV of that particular fund. Invariably, all of them would have been wrong. Because this is a country which is going to double its economy in 8-10 years. And one of the best ways of owning this growth of the economy is through the capital markets. And the only person who will make money is who will sit. In mutual fund data says that only 2 people make money. Somebody who's lost his or her account statement and the other person who's dead, right? So the person who has to hold this asset class as per the risk profile will only gain. Yes, it is very sad to see SIP stopping purely on market timing. Just states how much of work you and I have more to educate people. And if they think that we know better, then why are we salaried individuals? But it's just you have to play the course, right? But at the end, what is happening? Somebody is stopping, some more money is starting. So the net market continues to get more money. Hence, the market is a place where a buyer and a seller meet, right? There are more buyers in the market. Hence, it is meeting its own goal or its own path.
You know, what about global international markets, right? Every time you talk to investors, now they're more interested in international markets. They know that I want exposure, you know, maybe in US, maybe anywhere else, at China. Is it an opportunity? Anything specific that stands out for you?
No, I mean, that realization is not wrong. All said and done, and taking nothing away from Indian markets, just 3% of global market cap, right? So owning some of those economies makes sense on your portfolio. Some of those companies or those businesses are not in India. So diversification is key, right? And when you have economies like US, which have run away, and I personally believe that, you know, maybe things are looking a little tight for China. You have to look out for China for the next 10-15 years. So if you are owning those economies, they are more diversified. More often than not, you can catch some incredible growth businesses from there. So diversification is genuine. I mean, it's sad that mutual funds are stopped for those allocations. I wish they were open. But some incredible stories which play out there could be owned by Indians.
So there have been any conversations about that limit?
Not that I'm aware of.
No, just generally if the industry has asked for an improvement in that limit, because there are very few international funds which are open for subscription.
So we only become open when we get some redemption.
Correct.
Unfortunately, we have Mirae Asset Fang Plus, which is not getting redeemed. So we are absolutely shut. But what has happened is through the LRS route, a lot of investors can own this through the gift city.
Yes. Okay, so that's a different conversation altogether. We'll discuss that, actually a lot more other than that, in the next part of this segment. But we have to slip into a quick break and we continue our discussion with Swaroop Mohanty of Mirae Asset AMC. Stay tuned for that conversation.
Welcome back to MF Corner on CNBC-TV18. We still have with us Swaroop Mohanty, Vice Chairman as well as CEO at Mirae Asset AMC. And we're discussing how should you be investing in this volatile market, right? We've discussed what's going on right now, what we're looking at in terms of global front as well. But Swaroop, my portfolio allocation, how should I go about that? And how should I look at it right now? How should that allocation actually start panning out as an investor?
So I think it starts at the portfolio allocation grid. And suppose, say, for discussion's sake, if the grid was 70-30, 70 in equity and 30 and if the markets are down a bit, it would have come down, say, to 65 and that would have gone up. So your fresh allocation has to be equity. The more you make it mathematical, the easier this answer becomes. You stop the market, it takes its impact on the portfolio. If the market goes up 10%, then your 70 goes to 75, 77. So your next allocation goes to debt. And that you do an yearly rebalance, and that's what it is. But
what about mid and small cap also? Add that also.
That's the right question. In fact, because of what's happened in the last 2-3 years, and make no mistake, lot of public issuances have been in the mid and small. The AMCs were not there, so hospitals were not there. A lot of chemicals have come into small cap. So to catch the length and breadth of the market, invariably to allocate more to mid and small than you used to because of lack of ideas. So I would definitely allocate a little bit more to mid and small. Till, say, before COVID, I was not a small cap investor because my portfolio requirement was 11 to 12%. But some great stories are compelling me to go there. And to be fair, I think the liquidity there has increased dramatically compared to what it was. The market is getting structured. So especially the small cap, I would recommend play it through a manager, not try your luck on your own. But I am in print saying that India is a mid-cap story. It will perpetually remain a good mid-cap story. So allocate maybe a shift a little bit of what is happening on the large cap side to the mid and small. But what's very interestingly, the flexi caps of the industry have started behaving like flexi caps and not the erstwhile large cap oriented. So the fund managers have started, expressing themselves better. So investor is in better hands now.
I think the expectation in terms of returns is also, I would say, has gone higher post-COVID. When you said earlier it was 11 to 12%, now suddenly everyone wants higher returns immediately at the tip of their hands. So I think, as you said, with small caps, go play it via a manager, play it via someone who has an expertise in that particular field, because it can be very volatile as well, small caps and mid caps.
But so now returns have to be mitigated to market realities. I mean, typically if you track the Nifty 50, which you guys do, it's money double in 5 years, roughly, if you would have seen traditionally. Now, what happened in COVID, the markets crashed, gave it a beautiful bottom, and hence the last 3-4 years have been an aberration. Now, you can't build your story on aberrations. From here on, it will revert to that.
Exactly.
So good 11-12% is a doable on overall portfolio basis.
A lot of new investors came who didn't think the entire way. That's the reason.
It's because we were spoiled also, and after COVID, I think everyone was like, oh my God, I'm going to get fabulous
But you've
return.
got good returns, no?
Yeah, but in last year, what you saw as a return, you were like, oh my God, am I going to continue seeing that? That is not something...
Someday it was going to happen. I mean, if money making became so easy, then everybody would leave everything and do just this, right?
Yep. Okay, but in that case, we have spoken about India being a good asset class, but valuations also were some concern at a point in time. In that case, within the markets, any margin of safety that you are looking at?
Yeah, I think in pockets we are still pretty confident of getting good margins in financials. Healthcare always remains a favorite of mine. Perpetually, you have good stocks at good pockets there. I think non-FMCG consumption is looking quite okay. And then this GST should throw up a lot of future there. So I think in pocket, especially mid and small, still remain a good stock pickers market. And mid and small, I would definitely play through a manager in these markets. But a good manager has a good play. Please understand, markets always remain cyclical. My asset allocation is always inversely proportional to last 1 year return. So you catch the non-cyclical part of the market in your fresh purchase. A fund invariably whose cycle has played out actually plays out at the top. But if you compare last year funds to this year funds, it's gone upside down. And so if you allocate a little prudently, and not just follow the past near-term returns, your portfolios can become even stronger.
Swaroop, how should a new investor or someone starting out right now start their journey with mutual funds? How should they look at it? What would be a better option right now for them?
No, I think every asset class comes with its own way of working, right? To understand the asset class, always better to understand the volatility of each asset class, and then you understand your risk profile. Nobody is born with a risk profile. You understand your risk profile as you play it. I would start with the broad index. Either an ETF or index, whatever suits you. Understand the market, broad market. Once you get a little aware of the nuances of that, then you start growing a little ahead. And that's what we've seen in the industry. The number of folios which have come into passives over the last 4 or 5 years have been pretty telling of this fact that investors are now cognizant of buying broad market and then understanding the asset class. And that's the right way of starting. But before that, one has to be very clear of how much to allocate. And that how much to allocate comes from your goal. First, set your goals. If you don't have a goal, then don't invest. Keep it in the bank. If you don't know why you're investing, you will never know where to invest. So that why is most important. Your why and my why will be completely different. Hence, it is called personal finance. It's everybody's person, right? So get that in place. Earlier, there was this thing that information was not available. Now that is not so. So read a bit. If you don't take care of your money will not take care of you.
Right. And you need to make your money work for you as well.
Yes, absolutely. There's enough there. Just at your phone you can do. But
my one point I just want to know is in terms of, you had said, right, gold also is a good bet right now. So if I'm looking at mutual funds right now, should I see allocation whether it's higher to gold, silver or something? How do I go?
But here's my unlearning post-COVID. The beauty is that, when you go through a multi-asset structure, the chances of getting a median return over the longer term is higher in a multi-asset strategy than a pure one-asset strategy. So that's where you do not know when that lumpy return will come. You have to allocate across asset classes to catch those years, and you have to be there, right, invested. You can't make money if you're not in the market.
That's right.
Right, so these cash calls and all don't make sense to us. We always remain fully invested and to catch these years.
Portfolio diversification, that's the word.
Yeah. Well, it's been an unlearning for me, and it's in a good way.
All right, but we are learning from your unlearning. So thank you so much, Swaroop, for joining us today, taking out time and explaining to us different contours of investments and saying it's very personal. So go with your risk and return possibilities. With that, we'll do one thing. We'll take your leave on this edition of MF Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng trading with gains of around 0.6%.
The support zone, once again, doesn't change. It's 24,400, 24,330, 0.25% higher, 24,680.
If you look at the dollar chart of gold, it has been more volatile than equities.
According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy.
If you really look at it, again, our share is 50% from cash and 50% derivative.
We are sure that we'll be able to retain our market share and grow as the market expands.
We have come off from those highs of 24,731. That continues to be a very important level that we are watching out for. Two-wheeler sales up 7% and medium and heavy commercial vehicle sales up 7% on a YY basis.
All four listings have given you one major takeaway, is the fact that a healthy IPO subscription may not necessarily translate into a healthy listing.
The Nifty in the green right now, but just at the flat mark. It's been very volatile and was something which was expected as well, considering it's the first Tuesday expiry ever.
Well, that is the day so far. Markets are quiet, very, very quiet. Something like actually yesterday, right? I mean, not being able to hold on to gains, 25 points lower, nothing very dramatic on the downside either. Broader markets are a little more negative. 1,800 stocks are lower, and you got about 1,200 stocks which are higher in trade. There's last 60 minutes coming up on closing bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi. Good afternoon.
Hi, good afternoon. Hi, afternoon, folks. I think markets are already off to the festive holiday. Looks like no one's interested. People are making their midweek, the Sarah break plans and 2nd October plans because, yeah, I mean, yesterday we had a lot of volatility within a 200-point range. Yeah. Today it's just been largely listless.
Well, that's right. And, the expiry factor will play out in the last 60 minutes.
That's where the excitement will happen.
And that's going to be, it could probably be the 8th straight session that the Nifty has ended lower. So let's see whether or not we can avoid that record. But I think in the last 25 to 30 years, we haven't seen 9 sessions in the red. So that's a record we'll want to maintain.
Well, talking about sort of cutoffs, right? Expiry today, it's also the end of the quarter.
Yeah.
So hopefully some of this selling is related to the quarter end kind of rebalancing, etc. Hopefully from, October perhaps is a little better. We'll see. But I just want to quickly highlight, 2 or 3 things. KPIT Tech, I'm not sure. Yeah. KPIT Tech is down 7%. Just look at the intraday. And that is a plunge. 1240 it started. And just look at it, it's just one way. I'm sure, stocks don't sell off for no reason like that. We'll try and figure out what's happening. But there you go. It's a very sharp fall. Hitachi is the other one. Hitachi's taken a dive as well. Starting about 1 o'clock, it's down 6% on the day. Low was about 17,904 and it's come up about 150, 200 rupees from the low, but still down 6%. So you've got a bunch of these names. Godfrey Phillips is another one. Which has taken a dive starting about 1240, 1245. And we'll sort of talk about more. As I said, market breadth is not all that great, with more down than up, second day in a row this week. Of course, market breadth has been poor last week as well. Just running you through what's coming up here over the next 60 minutes or so. So markets, of course, flat, volatile session, lots of single stock movers, and 650 around where the Nifty is now trading at. Banks are outperforming a little bit. RBI decision tomorrow, and we'll get you a preview. Editors take everything to prepare you what can happen tomorrow. Auto stocks are doing better. Release of monthly sales number for the month of September. We'll see if there is that GST bump in those numbers. And a string of listings on Dalal Street this morning. Anand Rathi, of course, listed with a premium. Sheshasai Technologies, minor listing gains. And Solar World seeing a listing pop of about 10%. But of course, very dramatically different outcomes now with a couple of hours in. So that's the overall picture and what we're going to address here over the next 60 minutes. Guys.
Absolutely. Just some more names as we bring in Mitesh as well. In terms of the downside, look at a name like Subros. Subros is down about 8.5%. So yeah, quite weak and undoing some gains that it saw yesterday. So broader markets pretty weak. Now, yeah, that's the one down at the day's low. So what should one be doing in this last 1 hour as expiry plays out? Let's bring in Mitesh. Mitesh, it's another down session at least so far. Now, what is your index advice, levels to track, and how are you expecting the expiry to play out?
Good afternoon, Suki. So, I maintain that rally should be used to select the markets, and till we get a strong move beyond 24,900, I don't think this is a market where I would be wanting to go positioning down. Having said that, I think the way the medium-term charts are shaping up, good chance that we'll retest those 24,400, 350 zone again. The only scenario which could possibly play out on the other side is that we are oversold and the put call ratio is oversold as well. So you might get a 1 or 2 day kind of a pullback. But the idea is that if you're worried about the deep stop losses, then I think play with the options side. I think make some bear spreads, buy a higher strike put, sell a lower strike put. But the overall view is that we are likely to test the 24,450 zone in the coming 5 to 7 days. Having said that, on the stock side, I have one buy and one sell. Hindalco is a buy with a stop at 754 for targets of around 782. And Amber, that's Amber Limited, that's a sell with a stop at about, that's a sell with a stop at about 81.15 and a target of around 7,900 can be looked at.
Mitesh, just quickly on KPIT Tech, what Prashant was just spotting, actually, I mean, like he said, it's a very unusual decline. It's not a small stock. Any immediate levels that come to mind?
So, actually it's broken that big consolidation zone around the 1190 mark, and the fall has been much sharper. The lowest weekly closing we got sometime in April was around 1,086. So obviously that's not very far away. We might actually test that. And the lowest daily closing that time was around 1,035. I sense we might actually be heading towards 1,035 in the next few weeks.
A few reasons that were doing the rounds was, Volkswagen, there was a case that was being heard, I think, an hour or so ago, and they lost that case. I don't know whether, that had some kind of impact. The second point that I heard was that the street is sniffing that Q2 will be rather weak. This is just, what the street has been a little bit nervous about. And thirdly is, it's the end of a quarter and end of the half year. Some kind of cleaning of the portfolios could be another reason where, someone is pressing that sell button out there. So I think a whole host of factors coming together. Sniffing weak results, maybe a couple of clients not looking up too much, and the end of a quarter, end of a half year could be some of the reasons it's putting, some pressure. And as it is, we know the stock is not cheap at all. So if there's not going to be earnings growth, then they're in a bit of an issue. We'll try to get more on that front, but that's clearly the one that's taken a hard knock. Last few minutes I was looking, even Tata Elxsi actually had slipped. That's down only 1.5%. But bulk of that move, has started at around that 1:30 p.m. or thereabouts. So Tata Elxsi as well comes up for you on the screen. But let's hop across to Hormuz. He's here to tell us about the primary market action. There were multiple listings today. Hormuz, give us some details. A lot of these got subscribed big time, but the listing gains are not to be seen.
Not the biggest takeaway of this, right? 4 listings today, and the biggest takeaway is indeed the fact that despite having healthy subscriptions, it is not necessary that it will translate into healthy listing gains as well. And barring Anand Rathi, which listed at around about a 4% premium and has built onto those gains since then, most of the other 3 listings that took place today, be it Jaro, be it Sheshasai Technologies, or be it Solar World, all of them have now slipped below their issue price. You take a look at their subscription figures as well, right? Anand Rathi was subscribed around 20 times, and as was the case with companies like Jaro was around 13 times. And for IPOs of their size, anywhere between 500 to 1,000 crore rupees, subscription figures of around 15 times to as high as 70 times are relatively healthy, especially considering the fact that all of these IPOs were open simultaneously for subscription, and yet they managed to get these figures. But you take a look at the listing as well. Jaro listed exactly at its IPO price and has now slumped further, and Sheshasai Tech, being the most subscribed among them, is now below its IPO price. See, Solar World as well, listed at the biggest premium among the 4, that too has slipped below its IPO price. So that being the biggest takeaway of these 4 listings today. Of course, market sentiment has a lot to play, role to play in this as well, but the fact that despite having healthy IPO subscriptions, that has not translated into listing gains, at least for these companies. Early days still, but for those who play for the listings, this has not been a very good day.
Indeed, yeah, we don't have the kind of super pops that the market has seen in the recent past. I think the one stock that bucks that trend is perhaps Urban Company. In terms of the recent listings, that's the one which actually saw big ticket gains on day one. Let's discuss this and more with Dharmesh Kant, who's joining in from Chola Securities. Dharmesh, great to have you in. Today's 4 listings, I don't know if you had a look at any of these companies, all 4, 1, 2, 3, whatever. Any thoughts here? What would you advise people who did get allocation, who got allotment, and are wondering now what to do?
Yeah, good afternoon, Survi. Thanks for having me. We did not come out with IPO note on any one of them. Of all the 4s we have avoided, and the last one which we came out was Atlanta Electricals, with a clear message that this is only for the listing gains. So no follow through expected. I think most of the IPOs which are coming is not only fairly priced but highly priced. It's on the premium side of the pricing which has been there, and the hope is still there in the system that there would be listing gains. So one has to be very selective and sometimes lucky to have the listing gains play out. Let it cool down more. I mean, a couple of them are good, but the valuations are stretched as of now. So what we have been thinking that we'll wait for a couple of months, and all the new listings which have been there, once they arrive at a reasonable valuation, then pick and choose with a particular place can be there. But one needs to be careful, and there are many coming as well. So again, a warning sign is there.
Okay, all right. Hi, Dharmesh. Good afternoon. Good to see you in. Dharmesh, any kind of view on KPIT Technologies? The stock has fallen off the cliff. It's falling on very large volumes. The street is clearly sensing some bad news, unsure of whether or not it will play out that way. But your sense on this one?
Yeah, Dr. Nigel, not that I have laid my hands on any news which is directly responsible for the fall in the stock price today. But all the 3 in the pack, be it KPIT Technology, Tata Elxsi or Tata Technologies, is showing some sort of a weakness in today's trading session. And my own sense was that going forward from Q2 onwards, things are likely to improve for this entire space, because they are into engineering, research and development of automobiles primarily. The entire concept, design, modeling, powertrain and chassis engineering, design and development they do, and lot of new launches were aligned. Except India, most of the countries have settled with their tariff issues with the US, so things were likely to pick up, particularly for the big names like BMW, Merck and Volkswagen. So Tata Technology has sounded, pretty sound, the management, about going forward, how the business is going to look better from Q2 onwards. So we have a coverage on that. We have been recommending buying. But to answer your specific question, why KPIT is falling today, that I don't know why this sharp correction is happening. However, for long-term perspective, I think Tata Technology offers a better chance of reaping good benefits, as they have already bought a stake in Germany, which will give them access to a better margin and better volume growth. So numbers are likely to be better going forward into H2 of FY26 for Tata Technologies.
Got that. So that's interesting. Dharmesh, stay with us. I just want to quickly run our viewers through auto sales expectations, which we will, September sales will start pouring in from tomorrow morning. So let's bring in Sonal, who's here with a preview and what the street is expecting. Sonal, over to you.
Thank you for that. Well, it was a mixed demand scenario this time around, right? So the initial month had Shraddh period, and from 22nd of December, we saw that massive GST cut come by for all these auto companies. Now, this is something which led to pent-up demand across categories, and that is the reason companies had some positive commentary come by as well. For instance, Maruti says that they saw 75,000 units of retail sales since the start of Navratri. They continue to get 18,000 bookings per day and 80,000 inquiries across their distribution network. Hyundai said that they saw 11,000 dealer billings. Tata Motors said 10,000 deliveries and 25,000 inquiries on the first day of Navratri itself. Hero MotoCorp added, saying that they expect double-digit growth during this festive season itself. So Nomura has put out a note as far as the industry expectation is concerned, category-wise. They expect PV sales of 5% on a YY basis in the month of September, two-wheeler sales up 7% on a YY basis, and medium and heavy commercial vehicles up around 7% on a YY basis as well. Let's talk about individual companies now. For Ashok Leyland, the expectation is of a 6.8% growth in the month of September. For Bajaj Auto, while total sales will grow by 6.5%, the expectation is that it will be led by the export business, which will see a growth of around 12%, while domestic two-wheelers will see a growth of around 2%. For Eicher Motors, Royal Enfield will do well. Around 55% growth is expected there. VECV will see a single-digit growth at 5% this time around. Hero MotoCorp, they did say that they will see high double-digit growth, but Nomura expects the sales growth to be around 2% in the month of September. Maruti Suzuki, total sales expected to grow higher by 3%. M&M, where the total sales are expected to be higher by 7%. Their tractor business is expected to do well, 12.5% there. There has been some cuts across the agricultural value chain as well. They expect some growth to come by because of that. For Tata Motors, total sales expected to grow in double digits, 13% there. CV sales up 7%, but PVs will be the ones that will contribute to this growth by around 21.8%. Even TVS Motor is expecting good double-digit growth this time. 14% is the estimate from Nomura. And for Hyundai, they're expecting 7.5% growth in their overall portfolio in the month of September.
Okay, so overall a good month expected, and many of these automakers perhaps expected to post double-digit growth. Thanks for that, Sonal. It preps us up as the numbers start trickling in tomorrow onwards. That makes the question is, now a lot of the stocks have already run, ahead of the event, as the market always functions. So the question is, how much is in the price? And which are the auto stocks that you can still buy, expecting sustained outperformance? What would your thoughts be and your preference be?
Survey, I think almost 95 to 98% of it is in the price. And October may still be good as far as numbers are concerned, but November onwards, things may not be as rosy as it is looking at right now. So from a tactical point of view, one should be, taking profits now. At least part profit taking is, recommended. And for structural overall, this theory to play out and the consumption to pick up, one is to wait. That answer will come only in the month of December when November numbers roll out. So for that, it's a long time to go. What we have been recommending to our investors who have been holding this automobile theory for, 2 years, 3 years kind of a perspective, they are, recommended to stay invested. But who were there for tactical trading purpose, so it's time to take your profits out of the table. There will be volatility, some profit taking may happen. But again, I don't see much price movement for the entire month of October in most of these companies.
Okay, all right. Dharmesh, wanted your view on a couple of these defense names. DCX is a stock that yesterday you had a fund that sold, and then they won a small but strategic order from an Israel company. Any view on this name? A lot of promise over the years, but delivery has been short.
Yeah, Nigel, that's the issue with this company. If you look at the order book, they are sitting on a very strong order book. More than 2,600 crores of order book is still to be executed. And last year also the order book was strong, but last few quarters, the execution has not been happening. My understanding and discussion with the management did suggest that Q2, Q3 will be better than both on sequential basis, on a year-on-year basis, but not the kind of, quarters one can expect to justify the valuation multiples on which they are setting. However, they are sounding very positive on the execution of the order flow, but not in the near term. FY26 is likely to be a challenge for them. And the reason for that is normally it takes 6 to 7 months for the clearances to come from Ministry of Defense and all departments for the materials which are used for, manufacturing of PCBAs and master system integration and other stuff out there. And the first lot is already been done. This is the new set of orders which has come to the company in last 1 year, and those processes are in the place. So that's the reason why there's a delay in execution. So somebody who is holding this company, the recommendation is still stay invested. It may be a couple of more quarters where the pain is there, but eventually when the execution picks up, I think the stock prices should move up. Valuation wise, it's quite comfortable considering the order book and the size of cash they are sitting on balance sheet. More than 900 crores of cash is in the balance sheet to support the ongoing execution.
All right. One of those stocks I think you've been positive on. Let's see whether or not delivery does come about. Thanks a lot, Dharmesh, for joining in, giving us your view on a whole host of stocks. Have a good remainder of the day. Well, by the way, a few stocks actually are calling for attention, and the markets, maybe we don't get that 8 straight session in the red because the Nifty has perked up a little bit. Tata Motors is a stock that's moved up. Get the intraday chart out there. RBL Bank, for all of September, I've been saying that this is the stock that you need to keep on your radar. For half the series, it spends in the F&O band, and it just appears that the stock totally is in that band, out of the band. When it comes out as well, you don't see the stock falling much. And if you pull up RBL Bank with the Nifty Bank, pull up a 1-month chart, you'll see that the Nifty Bank has gone through periods of underperformance, but RBL Bank actually has done relatively better. So the street is sensing something, and that's why cash-based buying and big build-up in the open interest market is what we have seen. We'll get RBL Bank as well as the Nifty Bank that comes up for you on the screen. That's the 1-month chart that I'm talking about. That's with the Nifty 50. With the Nifty Bank as well, will tell you a similar picture. Slip into a break, come back. Rahul Vera from Nippon India AIF will be waiting for us on the other side.
Welcome back. So, yep, it's volatile, but finally it's again flat, 5 points lower. That's where the Nifty is right now. So there you say, you saw that volatility in a very narrow band, and we are at the flat line, at least for now. Good time to then go across to Hormaz to find out what's buzzing, what's on his radar and on his board today. Hormaz.
Well, the index has been in such a mode, right? It's been absolutely snoozy, but what's not snoozing around are some of these broader market names, and IFGL Refractories, after being in snooze mode for almost a month, has now sprung up again. There's a 19% up move that you're seeing in today's session. We saw a similar move in one of those sessions last month as well, but today's volumes are on the highest on record for the stock. We've had close to 67 lakh shares, I beg your pardon, trade hands, and the 20-day average here is only 55,000 shares. Now, this has resulted in September becoming the best month for the stock since May of this year, and the stock is up 30% so far on a year-to-date basis. What has snapped an 8-day losing streak today is Chemfab Alkalis, and after 8 days of losses, the stock has gained almost 16% today, and this 16% move was enough to recover the entire loss that it saw in the last 8 trading sessions. Now, today's gain is the biggest single day up move we have seen since the month of January, and today's volumes are also the highest that the stock has seen since December of 2024. We have had close to 2 lakh shares change hands, and take a look at the 20-day average, only 4,000 shares being the 20-day average here. Stock has been an underperformer this year, down 34%, but had almost tripled in value in 2024. Tamil Nadu Newsprint is the other one. That too has snapped a 3-day losing streak today. The biggest single-day gain since December of last year. And this stock too, before today's session, the last 9 sessions preceding this one, the stock had gained only once in those 9 sessions. And today's trade, we have had 90 lakh shares that have changed hands, and the 20-day average is 90,000 shares for Tamil Nadu Newsprint. The stock is back above, and it had broken above its 100-day moving average of 162. That's an important level to watch out for. And the stock has been an underperformer so far, down 12% year to date, and had declined close to 40% last year as well. And a stock that has made headlines in the last 1 hour or so, KPIT Technologies, is now down over 9%, the biggest single day fall since October of 24. The stock had declined around 14% back then, and it's not today itself. The stock has been on a downtrend in 7 out of the last 8 trading sessions now. It's down around 15-16% during this period, as a result of which the stock has now turned negative for the month of September. The volumes have seen a very sharp spike after 1:30 p.m. is when the stock started to fall as well, where 23 lakh shares trading so far, a 20-day average of 7 lakh shares, and the stock has not had a very good year. The 9 months of 2025 so far, the stock has had positive returns only in 2 of those months, which is March and May, and the stock is down 24% so far, most of which has come in the month of September, and it has also made it the worst year that the stock has had since its listing in 2019. That's KPIT Tech for you today.
All right. Thanks very much, Hormuz, for that. It's a big drop, 10% now. Actually, it was down a little lesser when we started at 230, but I mean, the cuts only become a little deeper. Rahul Veera is with us, Fund Manager, Equity Investments at Nippon India AIF. Rahul, good to have you with us here. Thanks for joining us. I think earnings will keep markets busy, starting shortly in the next 6-7 days. It'll start and go on for a month. Where are you most focused on the back of earnings? Where do you think, on the back of earnings, etc., you'd get opportunities, both on the long and short side?
So largely we are focused on consumption theme as of now. So if we take the total wage bill, right, for listed companies is close to 16 lakh crore. Now, if you take central government wage bill, again, it's closer to 7 lakh crore, and again 14 lakh crore on the state government side. The total cumulative wage bills, right, for India's economy is closer to 40 lakh crore. Now, given that the 8-pay commission is going to infuse close to 3.5 lakh crore over a period of time, so almost a 10% increase that we are going to see as a booster for the consumption theme. Within the consumption, more of autos and consumer discretionary that we are focusing on. Like we discussed last time, some of the platform names that we are closely watching. Some of the themes that we are other than that is focusing on names like housing finance companies. Some of them that we like is fintech companies. So again, a little bit of platform, consumption and auto is where the focus is on.
Consumption and auto. Rahul, hi. So good to have you on the show. Just to understand on consumption, and you mentioned platform companies, they've had a decent run actually. They've turned around from the lows, have had a decent run today. I mean, for instance, we got a call of 400 rupees on internal by one of the brokers. So what's your thesis here? I mean, is it quick commerce? Is it going to be food delivery? Are you looking at, say, travel aggregators? Because now, I mean, you have something like an urban company, home services. So there's a wide variety of such platform companies that are coming into the listed fold. What approach are you taking in terms of your investments here?
Right. See, each sub-segment is going to be a little bit different from each other. But from a longer tenure, right, from a 10-year perspective, you see how things are going to penetration levels are for the food delivery companies or for that matter, quick commerce. We believe this is going to be the mainstay eventually in the long run. Average order value has been flattish. Number of orders is peaking out, but it's a quick commerce and the adjacencies for some platforms that they're able to create going forward. So focus remains like how much more adjacencies they can create. We've seen historically like some other companies, right, from even though they were not tech oriented, but the adjacencies that they were able to create over a 10-year period with the help of course, funding was huge. The kind of wealth creation happened during those days also was very large. If we take the case of Walmart between 1984 to 2004, right, 25% compounding stock. The kind of grocer, then they moved into different items. That's the way these companies will keep on growing. So we believe platforms will be a key thesis to play out over the next 10-year period.
Hi, Rahul. Good afternoon. Good to see you in. You know, this government was totally focused on capital expenditure. For the first few years, I think we saw the capex spend move from what, 1.5 lakh to around 2 lakh crore, all the way to 10-11 lakh crore. Now, in the last, 8 or 9 months or so, we've clearly seen that shift from capex. They've said, we have done the heavy lifting for so long. Now we want to see the private sector do that capex lift. And the shift has been towards consumption, whether it's the tax cuts, whether it's, the GST 2.0 or so clearly the capex to consumption theme seems to be playing out. Are you realigning your portfolio out there? Because, I'm looking at a lot of mutual funds. They are going in, then they're selling a lot of industrials, a lot of these capex themes or thereabouts. Are you doing the same?
Yes, we largely agree. So if you see the 11 lakh crore outlay in the budget that was given out, right? Only one of the themes that show very large outlay was power, which showed 12% growth on a YY basis in terms of the budget outlays. Otherwise, your other rails or your road was showing flattish outlays. So very clear, other than power and maybe a little bit of defense post-budget, we believe the allocation towards capex has more or less peaked out. Even from a state level capex, right, 14 lakh, 15 lakh crore that the state governments have been doing. If you see the budgets of most of the states are largely strained at this point of time. Almost out of 15 large states, 10 states are started hitting the peak of 3.5% of FRBM Act fiscal deficit limits. So we believe incremental allocation towards capex even by states or center is going to be difficult from you. So portfolio pivot is going to be important at this point of time.
Pipe makers as well, Rahul, is you like those?
I'm sorry?
Pipe makers. You have some in your portfolio?
Yeah, we love the PVC pipes. We believe they're at the bottom of the cycle. Post the AD anti-dumping duty coming in, we believe the prices started moving up. The average PVC 10-year has been 72, right? It hit with the Chinese dumping, it went down to 66. Now it has started recovering. Though the volume, again, being a subsidiary of a little bit of capex plus a little bit of agri side plus real estate, we'll have to see how the volumes pick up, but it's an interesting space to look out for.
Okay, sorry, jumping sectors, but microfinance, do you have any exposure?
Oh, no, we do not have any exposure. We believe it's going to be on a reversal now. Largely, worst is behind. 1 or 2 quarters from here on, we'll have to keep an eye on them.
Look at the flash at the bottom of the screen. Adar Poonawalla, among others, in freight by RCB. So that is very, very interesting. RCB owners are seeking a $2 billion valuation for the franchise. And it's quite something. So, big industry name in the fray, among others, to buy the RCB franchise.
United Spirits could be the stock that,
we should actually tag United Spirits in those flashes and look at what's happening there. A bit of a bump starting to emerge straight away on the back of the news coming through. 13:07 or so. I think Mangalam is going to have more details and he should be with us shortly to run us through what this is going to look like. But, the IPL and, all these teams which are there, absolute, the business model is extremely interesting. and there's not very many transactions which take place. It's not as if, you know, there are investors, but they are all mostly strategic, long-term in nature. It's not as if, you know, stakes are sold and bought on a regular basis. So few transactions, but we've seen a few marquee transactions in the past as well. One of the most profitable sporting leagues in the world now.
Yeah, you know, and for RCB, basically, they just won the, the last tournament that took place. We'll have to see how things pan out on that front. Currently, the market capitalization of United Spirits is around 95,000 crores. So they're going to get $2 billion thereabouts. That's going to be quite large. That'll be roughly around 17,000 crores approximately. Current market capitalization is around 96,000 crores. And what you get with RCB, I think, is an entire controlling stake. There's, they own the entire franchise. Otherwise, you could get piecemeal with regard to the others. So we'll have to see what they're interested in, whether they want to buy the entire stake and or will they want to come in as a strategic investor. Mangalam, I think, is the one you are saying who is...
Mangalam is going to come in. By the way, the last transaction just is Torrent Group buying 67% of Gujarat Titans. That was, they bought 67% at about 575 for 575. So basically they bought at a $900 million valuation.
Yeah, close to $1 billion.
Close to, yeah. So $900 million, and the CVC retained their 33% stake in Gujarat Titans. That's the other large transaction which had happened.
Yeah, and the other one I'll keep an eye out on, Prashant, is for United Spirits, the company, the market cap is close to around 1 lakh crores, so $2 billion. But Sun TV could be the other one, right? Because they as well own the franchise in there, and that's under the listed entity. And, for a smaller company, actually, if there is a monetization of another company that takes place at $2 billion, suddenly things look very, very large for this. Because if I got the number right, Sun TV will be around 25,000 crores of market cap. They have cash in the books. And if they have this IPL franchise as well, which could be valued at a discount in comparison to RCB, but even $1 billion thereabouts, suddenly that gives them their additional fillip. Though the core business hasn't been growing that much, but you have this cash in books, you suddenly have an IPL franchise.
The point there is the seller has to, I mean, the point is that the willingness to kind of sort of, sell. I think Nimesh is also with us and on chat. He's been listening in, and I think he wants to add in. Avid cricket watcher for starters, but also he's been following some of these teams. Nimesh.
Of course, Prashant. So, from a market perspective, as even Nigel pointed out, there are only 2.5 teams through which you can play the IPL team, right? RCB is 100% owned by United Spirits. There is, Sunrisers Hyderabad owned by Sun TV, fully owned by Sun TV. And RPG's Ventures owns 50% of Lucknow team. So, in that sense, there are only 2.5 listed players to play the IPL teams. Now, if the valuation of $2 billion is rightly so, and if that sense is the benchmark, I guess, of course, United Spirits do benefit, but the bigger beneficiary would be Sun TV. As Nigel was pointing out, 25,000 crore market cap, $2 billion of valuation coming in from the IPL team. They're sitting on 6,000 crores of cash as well. So technically, if you add IPL team and the cash, then you're getting the rest of the residual business virtually for free. So I guess from that perspective, Sun TV could be the biggest beneficiary, and that's something we've discussed in the past as well, that these are the 2 or 3 players whom investors can play through if they want to play the IPL game and the valuation for the franchises. So just wanted to add that perspective. And if $2 billion is indeed what RCB fetches, then I guess there will be a rub-off on these 2 other companies as well, Sun TV as well as RPG's Ventures.
So this $2 billion figure, where else have we heard it before? Yesterday, I believe, I think it was yesterday, Mr. Lalit Modi had put out a social media tweet. And he was talking about how RCB is a good franchise, and he wouldn't be surprised if some top dollar global funds perhaps want to come in and have a piece of the pie. And in an interview to, I think, Michael Clark, it was a conversation or a podcast, that's where he said that it would be unwise of the current promoters to sell for anything less than $2 billion. And I think that's what the buzz is right now, that it's going to be around that vicinity, the number, when it eventually becomes formal. So let's see. But it definitely has the market excited.
Actually, I'd done a show on Prime on IPL, the business of IPL. And so I have some of the graphics numbers, etc. I don't know if they can pull it up. But RCB is in terms of brand rankings, franchise brand rankings, it's number 1. It's $269 million. This was their estimate, which is just the value of the brand.
This is as per a global report, I think. This 269 million valuation.
Correct.
Yeah.
It's not the full value of the team. It's just the value
of the brand.
Yeah,
the
269.
brand. Correct.
Mumbai Indians was number 2, 242. CSK was number 3 at about $235 million, and so on and so forth. Yeah. That's I think Mangalam is going to come up and maybe talk more about this. But why not use the opportunity to just talk about, I don't know if Rahul has any thoughts. Rahul, if you're still with us, any thoughts at all? Slightly out of syllabus.
Yeah. So we did evaluate some of these names, right? When you do the SOTP for some of these names from the listed companies, and we see the valuation and value unlocking that is happening, as you rightly mentioned. The last deal that was done was closer to $900 million. At $2 billion, we see some kind of an upside there. But more or less, it's going to be the core business that's going to add value over the medium term. So yeah, $2 billion of cash is a big number for some of these companies. But re-rating for some of these names is going to be challenging. Only the number 1, number 2 team will get that valuation eventually.
So you evaluated these USL and Sun TV, etc. Those names?
Yeah.
Okay, and
we do SOTP, as Nimesh mentioned a few names there.
Yeah.
Right. So we evaluated on a SOTP basis core business plus the IPL brand overall. What will the team valuation be?
So attractive, not attractive? Makes sense or no?
No, it's going to be challenging for the low run teams.
Okay.
Number 1 and 2, the valuations will matter. They will get eventually the valuation that we are talking about on screen right now. But the lower rung eventually will not get the valuation that we eventually be packing it.
Yeah, that's the other one actually. So we have United Spirits, we have Sun TV, and the one that Nimesh pointed out, RPSG Ventures. And the reason is RPSG Ventures has 51% stake in LSG, Lucknow, and the market capitalization itself of RPSG Ventures is only around 2,730 crores, and they have 51% stake in one of those IPL teams. So, that could be the other one where I think they have a football team as well, if I remember correctly, with regard to other ones as well. So that could be the other one that Nimesh pointed out. 3 companies from the listed space that you'll want to keep a close eye on with regard to this IPL play.
Absolutely. Keeping in mind, obviously, that they're all 3 different franchises, different identities, different brands, but it gives us some sort of a benchmark and excitement for sure. Thanks very much, Rahul, for weighing in and taking our questions today. Very quickly, before we get Mangalam to talk more about this exciting piece of news around RCB, Nimesh Chatter, what's on the radar today? What have you picked up? Quiet session otherwise.
Oh, absolutely quiet. Surbhi, except for this IPL news, it was a dull day for me as well. I'm also struggling for news. I'm also struggling for charter, so to speak. There is zero lack of conviction, not much of interest as well from retail or from HNI investors. It's been a struggling market, so to speak, and there is really no traction as well. Barring the PSU basket, which has relatively outperformed in the last month or so, there is not much traction across many of the sectors. You look at IT, pharma, all export sectors are under pressure, and for domestic sectors, it's going to be a challenging Q2. So no fresh triggers for that as well. Again, from a liquidity point of view, I guess even Rahul can speak about it if he's still there. Most of the domestic funds are also struggling with liquidity because of the slew of IPOs which are coming there, and that's actually sucking a lot of domestic liquidity. So clearly, it's been that kind of a market where one day you might see a bit of a pop, but on a consistent basis, it's been difficult to make money for HNIs, for retail investors, or for that matter, institutional investors as well. So on an expiry day to have such a range-bound market, that explains the kind of interest which is there in the market, at least at this point in time.
Okay, all right. Now, you have managed to pick out a few names, although it's been a struggle, Nimesh. What are those names?
Well, so the first name on my list is Senor's Pharma. It's been consolidating in a narrow range, but I understand one very large influential investor has been accumulating this stock in the last couple of days. Remember, the management has gone on record that Q2 and Q3 is going to be very strong for the company. So watch out for the numbers in Q2. The second stock is Vedanta. Again, buzzing in trade today, up to 2.5%. For Vedanta, I guess the next big trigger would be the October 9th hearing. But again, that's the trigger which is keeping the street excited. And the street is anticipating that maybe, if not in the next hearing, but in the consequent hearings, you will see the demerger approval coming through. So that's the trigger as far as Vedanta, and some bit of interest is back. The third stock is MTAR Technologies. Again, in a narrow range for the last couple of weeks, but for MTAR, there is indication that you could see a large block coming soon in MTAR Technologies. And the last one is RBL Bank. In the ban through a large part of the series, you've seen a bit of a reaction today in the last 30 minutes of trade. Looks like there is a bit of delivery-based buying. And for RBL Bank, I think the next one could be quite interesting because post Q2 by Sensex, you will see that fundraising as well. Remember, on 26th there was a AGM, and the shareholders have approved the fundraising. So the city is anticipating a big fundraising, maybe post the Q2 earnings.
Okay, all right. Thank you for that, Nimesh, for all the chatter and all the buzz. But just to quickly go back to that story, which finally caused some flutter in the market, the prospects of United Spirits looking at monetizing their IPL franchise, Royal Challengers Bangalore. Manglam's joining in. Manglam, and finally they waited for what? How many was it? 17 years, 16 years before finally getting the title this time. Maybe a good time finally?
Well, they got the championship after 18 years, but the rumors of their stake sale has been around for a while right now. And now what we understand is that there are interested players have put their hat in the ring as well. And what we understand from our sources is that one of the players could perhaps be Siram's other Poonawalla as well. You know, so what we understand is that Diageo has put RCB up for sale, and Siram's other Poonawalla has emerged as the front runner. Other Poonawalla, among the others, is keen to buy the entire stake and not just a part stake sale in RCB. And the owners are seeking close to $2 billion in terms of valuation. And here's where it is very important to understand a couple of things. From a seller standpoint, there's no better time than this to sell because they've just won the championship. And at the same time, you know, you have their star player who's towards the latter half of his career, if not, towards the end of his career itself. So we have Virat Kohli as well. So you cash in on the chips when they're all on the table. That's what, what would make sense from the seller standpoint. But from a buyer standpoint, RCB is one of the most exciting sports franchises that we have, not only in the IPL, but if you look at some of the metrics, online engagement metrics and the fan loyalty metrics, they're actually among the biggest sport franchises in the world itself. And with the growing sport economy that India is, it would make sense for one to put in the money. The only difference here is that instead of getting it from the BCCI's auction, where the payment is staggered over 10 years, if you're buying it fully, then you have to pay the entire money upfront. So to that extent, you know, the ROI metrics or the payback period metrics get a little skewed, which is where the discussions are currently underway. And that's what we understand from the players who we are talking to. Citi, obviously, are the appointed bankers for this transaction. We formally reached out to Adar Poonawalla. He refuses to comment on the story. Diageo have said that this is market speculation, so they don't want to comment on that. But we did have Praveen Someshwar, who's the MD and CEO of United Spirits, on record speaking to us, saying that RCB is a very exciting business, but he qualified it by saying it's non-core to their alcohol business. So those are a couple of things that we'll most definitely monitor. RCB owners seeking a valuation close to $2 billion. Buyers will have to put all the money up front. Will that happen or not is something we'll watch out for. From an RCB standpoint, from a United States share standpoint, it accounts for nearly 15% of their sum of the parts valuation that brokerages are assigning. So that's why we are seeing some bit of excitement in the stock. Let's see what happens, but let's also hear out what Praveen Someshwar had to say to CNBC-TV18.
It's an exciting asset. It's clearly something which is absolutely exciting because cricket is the lifeline of the country, and within cricket, IPL has a play, and therefore it's an exciting asset. But that has nothing to do with our core Alcobev business. Well, I wouldn't get to saying unlocking or unlocking. It's certainly not core. There's no doubt about it. Alcobev is our core, and that's where we focus on our business, and that's exciting. This is an exciting extension.
Okay, so big story of the afternoon indeed. We do have to take a very quick break on that note. Come back on the other side. We'll, of course, get you the final trades for the day. Quick check on what's happening in the F&O markets as well. So stay tuned for that. Welcome back. Again, about 30 points lower. There's been that kind of an expiry. So from being flat, the market is pretty much back to where we started when the show began at 2:30. Mitesh is with us. Mitesh, final advice for the day.
I have one STVT call, Anjali. Keep a stop at about 580 half, put target of 565. On the buying side, there are the metal name, that's NMDC. Keep a stop at 75.70 for targets for about 7.8.
We'll take a break. Mitesh, thank you very much. Just completely short on time, so I have to take another quick commercial break, mandatory one. But Jay Bala is with us on the other side. Stay tuned. Welcome back. Just 4 minutes to go for close. Jay Bala is with us. Jay, good to have you with us here. Thanks very much for joining us. Are we likely to see a slightly more excitable move? Because a few days now it's been sideways, and this week so far, yesterday and today, not very much at all. Quiet. What's your sense?
Hi, Prashant. See, the markets are at a very important critical support zone, 24,440 to 24,337. That's absolutely crucial. If the markets were to break, the market can dip sharply and something like 1,000-point dip, and it can delay the bull market by about a quarter, 2 months to a quarter. But this doesn't impact the medium-term picture, where when you say medium-term picture, it's unlikely to break the April low, and we are likely to see 29,000 later on in 2026. But that being the case, the short term could get impacted, and we could have a Q4 delay for the bull market's resumption. And the US markets are also very close to an important top. So, again, US markets are likely to resume their bull trend in 2026. This is likely to be a correction within the bull trend.
Okay, Jay, so on the downside, what is the level you're looking at? Which is the line in the sand?
Basically, the line in the sand is the April low, but the dip is likely to be somewhere close to about 23,400 to 23,600. That's the higher low I'm anticipating if 24,440, 24,337 were to break. But that's an important if. But it's very close to the bulls have squandered their advantage that they had, and they come below 24,750, which is not an ideal situation for a very strong bullish case.
All right, 24,440, 24,475 is the first level we should be looking at the downside. But next year, our date with 29,000 is on. So we'll have to keep an eye out on that mark. I'll tell you, the kind of mood that we're seeing in the market, 26,000 also will do, at least for the time being. That aside, what about individual stocks? Give us a couple of ideas first.
Yeah, I have a pick from the metal space, and Nalco with a stop loss of 197 with an objective of 250. And I also like TVS Motors, but in both these cases, you need to be scaling down your position sizing because we are at an important support zone, and I don't know if these two stocks can buck the trend. So scale down, and TVS Motors is more a half a pick, but coming from a strong sector, and Nalco again scale down position with a stop loss of 197.
Just Tata Investment Corp, right? It's a 10,000 rupee stock.
And it's up 20%.
No, it's up 20%. And 10,000 rupee stock, it's the #1 volume-led gainer.
Yeah.
It's got the highest amount of volumes right now. By far. I mean, I think, some 10x the next stock, which is Nalco, by the way, with a 4%, 5% pop. So I'm not sure if there's something specific happening, or maybe there is a large block. But these are very, very large.
I was thinking about this, Prashant.
Actually, Surabhi, volumes today, I suspect, are the highest ever on Tata Investment Corp.
So we know that it holds a little over 2% in Tata Capital.
Yes.
But that's been a wide known fact. I mean, nothing new about it as of now. And we also know that Tata Capital itself, from valuations of about 1,100 crores in the unlisted market at one point in time, finally, when the issue is coming to the public markets, I think 325, 326, I think, is the upper end of the price band. But I'm not sure whether it's linked to that listing or something completely different.
It's like a
mutual fund.
It's like a mutual fund.
Yeah.
It owns a variety of companies, any large cap mutual funds. So it's not that the underlying stocks have all gone berserk, right? But this one certainly, and it's with huge volumes right now. That's what makes it special. Jay, stay with us. We're just going to wrap up things here and then come to you. 24,636 is where the Nifty's finally ended at. That is the star mover today. That is Tata Investment Corporation. But Nalco is at #2 with a 5% pop. Bank of India, 4%. Ola, 5%. J&K Bank, about 5%. Shalby Hospitals, about 6%. Bluestone, went up about 5%. I think it was initiating coverage from one of the brokers yesterday. So about almost 600. Bharat Wire, I can go down, but then volume started to thin out. So yeah, individuals, very, very stock-specific kind of day. But I think I don't know what the adjusted close will be, but 2 points higher is the final tick that we saw on the Nifty. Nigel.
Well, a lot of stocks actually from the broader markets that did do well. Anand Rathi shared Stock ended higher with a gain of around 7.5%. One of those debutants that did do well, Mr. Rathi, ringing that bell, was looking very happy, and he'll be very happy at the end of today. From the other stocks, metal stocks, you had Nalco that did well. That was up close to 5%. Hindustan Zinc was up 3.5%, and Hindustan Copper as well was higher. We have a bit of a supply shortage on copper as well as on silver. The only way to play them is via Hindustan Copper and Hindustan Zinc. And because Hindustan Zinc did well, Vedanta as well did do well. As Nimesh was saying, some delivery-based buying out there. There's that demerger in the works. So the street quite optimistic on that front. What else did pretty well in today's trading session? Vascon was a stock actually that recovered a goodish bit from the low point of the day. So that one managed to end more or less flattish in today's trading session. And a few more notable movers, Paisalu Digital, that was up close to around 3%, massive volumes on that particular name. But it was another session where the Nifty goes home with a cut, 8th straight session in the red. The bulls not feeling too good. We'll wrap up on this edition of Closing Bell. Stay with us. The team of Markets Forward is waiting by.
The Wall Street ends largely in the red. Nifty and Sensex fall for the 8th straight session. Banks outperform. Index gains 0.25%.
A string of listings on Dalal Street today. Anand Rathi share and stock brokers list with a premium of about 5%. Sheshasai Technologies see minor listing gains while Solar World sees a listing pop, but the other two end below their issue price.
The Monetary Policy Committee is set to hold rates and maintain its neutral stance, according to a majority of market participants polled by CNBC-TV18. 60% believe RBI is unlikely to cut rates further in this cycle.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points, gear, and of course gear up for the next trading day. I'm Hormuz Patakia, with me Sonal Bhutra. Sonal, hi.
Hey Hormuz, what an interesting day, last day of this September series, and we did see the 8th continuous session of red on the Wall Street. And if we look at what contributed to those losses, a lot of them, actually Bank Nifty supported it, but we had some cuts coming in from consumption, energy, IT too did not do so well. A lot of stocks which were on our radar today, and we'll keep talking about that in greater detail. But a lot of mid-caps which saw a big decline today, but Bank Nifty, that saved the day in some way.
Saved the day in some way. And the other positive, if you want to count as one, is that we managed to save today's low. Although we made a lower low on the charts yet again, but we did not close below today's low, and that will be something that the bulls would be taking in as we go into the new series and of course the new month as well. But here's what we have lined up for you today on the show. We start of course with the top movers and shakers with Vivek. Man Industries was an underperformer today after the SEBI barred the company and 3 of its top executives from the securities market for a 2-year period. Meanwhile, Sammaan Capital continues to gain as the firm will consider a fundraising. Also on the show, Solar World listed with a premium of 10%. And last but not the least, we delve into the key market events to watch out for going into tomorrow's trading session. But here's our first segment of the day, and as always, Vivek is standing by the wall to tell us some of the big movers and shakers of the session. Vivek.
Well, good afternoon. Like you mentioned, another down day, but some positive, especially towards the later half of the session. What did very well in the session today? Well, the entire PSU banking index, have a look at it. The index itself was up 1.8%, and most of the constituents, in fact, all of the constituents today did very well in the session. Bank of India, Can Bank, Indian Bank, PNB, Union Bank, all of these stocks among the top gainers as far as the PSU banking index was concerned. Along with that, the Nifty Metal Index was the other set of all of the constituents there managed to see significant up moves. Look at Nalco, Hinzink, Vedanta, all of these stocks are among the top movers in the session. Hindustan Copper continued the stellar rally that it's seen over the last couple of trading weeks. Tata Investment Corporation, this particular stock, yesterday was a down day, but today had almost 17% strong volumes, the top NSE 500 gainer. And Blue Dart, company went ahead and announced a price hike effective Jan 2026. That stock higher by almost 3% today. On the other hand, quite a few laggards as well. One particular stock that clearly stood out was KPIT Technologies. This particular stock in the second half of the trading session saw a very sharp down move, ended the session low by over 8%. It will be important to see what exactly has transpired as far as KPIT Tech is concerned. Dixon Technology, yesterday a lot of the EMS stocks did see selling pressure. Dixon Tech, again, today was the second straight day where we saw significant selling pressure, one of the top laggards today. Jara Institute, a new listing, but a very weak listing for this particular name, down almost 15%. And exchange stocks saw, both BSE as well as MCX today saw significant down moves. In fact, mid of the trading session, you did see significant selling pressure emerge across both BSE as well as MCX.
Okay, all right. Those were the top stock movers. Thank you, Vivek, for joining us with that. Let's go across to our guest, Jay Bala, CMT at cashthekiosk.com, and Mayuresh Joshi is the Director Research at MarketSmith India. Gentlemen, good afternoon. Thank you so much for joining in. Jay, let me come to you first up. Another day of lows, 8th consecutive session actually. What are the charts suggesting now?
Hi, Sonal. The Nifty is very close to an important support zone of 24,400 to 24,337. It's absolutely crucial it doesn't break. But the fact that the markets are hovering around it, that's not a good sign. The longer it hovers here, the chances of this support zone giving way is higher. If it were to break, that would probably lead to about a 1,000-point decline for Nifty over the next 4 to 8 weeks. But this doesn't impact the medium-term picture. I believe the April low will be well protected. And in 2026, we are likely to see fresh record highs somewhere in the region of 29,000.
Interesting. You know, the other big talking point, of course, was the 4 important listings that took place on the Wall Street today. And the major takeaway, of course, that Anand Rathi listed at a premium, but most of the others, you took a look at Jaro, Sheshasai or Solar World, all of them ended below their issue price. Now, the major takeaway here is simple, that healthy IPO subscriptions do not necessarily translate into healthy listing gains. You take a look at the subscription figures here as well. For IPOs of their size, anywhere between 500 to 800 crore rupees, IPOs of a subscription of around 15 times to as high as 70 times for Sheshasai is pretty healthy. Healthy also because all 4 of them were open for subscriptions together simultaneously, and yet they managed to garner such subscriptions. But the listing presents a different picture, right? All of them listed in or around their IPO price. Apart from Anand Rathi, which built on to those gains, the other 3 listed and went on to close with losses. Of course, early days, just the first trading day. You can't say that those that listed at a discount will not do well. But of course, those who do it for a listing play was not the best day for such players. Of course, let's take that point with Mayuresh. Mayuresh, thank you for joining in. Any of these 4 you've looked at, Anand Rathi or Jaro or even Sheshasai?
Afternoon, Hormas. No, again, I think as you rightly pointed out, I think it's a wait and watch because the listing has now largely happened. Now it's up to the numbers delivery that these companies will give. And each individual company has certain headwinds and tailwinds for their respective sector and for the stocks as well. Capital market play, Anand Rathi, what probably goes through in terms of volume growth as it comes to exchange expiry is something to be watched out for. For Jaro, I think it is a very sound model, but I think how does that probably translate into better revenues going forward is something to be seen. Solar World, again, I think there is a huge runaway growth potential over the next few years. But how does pricing change? What kind of supply dynamics happen in the market as far as demand-supply dynamics are concerned when it specifically comes to end pricing itself? I think those are question marks that will be answered by not just the listing, but by numbers which will follow suit. And therefore, I think numbers will now do the talking for all these players.
That's true. It's the numbers that we'll be watching out for and the commentary as well, because right now it's been very positive, but how the macros turn out for these companies is important to track. Let's talk about a stock now. Man Industry tanked 10%. SEBI barred the firm and 3 of its top executives from the securities market for 2 years. There have been a lot of issues. The primary issue related to consolidation of their subsidiary, a lot of other compliance lapses as well. Nigel is joining us with what went wrong here.
Well, that's right. Man Industries is under pressure following the regulatory action. SEBI has barred the company and 3 of its top executives from the securities market for 2 years. The names include the managing director, Nikhil Mansukhani, the chairman, Ramesh Mansukhani, as well as the former finance chief, Ashok Gupta. Now, in addition, SEBI has also imposed a penalty of around 25 lakh each of these executives. The regulator's action, well, it's based on the findings that go beyond a single transaction of financial year, citing a pattern of conduct that disregards transparency as well as accountability. Man Industries, well, they have responded with a clarification. They are stating that the primary issue relates to non-consolidation of its subsidiary, which is Merino Shelters Private Limited, along with some minor compliance lapses between FY 2015 to 2021. They also add that consolidation of the subsidiary's financials started from FY 23 and 24. They go on to state that their order book is solid at around 4,700 crores. The company assures stakeholders that business operations continue unaffected. They maintain a robust order book and all their facilities are fully operational. Investors, well, they'll be looking and watching how Man Industries navigates this regulatory challenge and the current market pressure. Nonetheless, for the time being, a rap on the knuckles from the regulator, and that's why the stock under pressure.
Mayuresh, do you have any take on this number, this stock?
So, Sonal, again, I think this is something in the past, and this was always an overhang onto the stock because what will come out of the SEBI ruling is something that was always perturbing a lot of players onto the street. Now it's finally come out, but yet I think questions still linger. That corporate governance issues which have cropped in the past, is it completely gone out of the books itself? Is compliance something which is adhered to? And the management sounds very, very positive and very, very constructive on all these aspects. I was hearing them on a couple of your on the other business channels as well. And therefore, I think they do seem constructive. I think the balance sheet probably seems constructive at this point of time as well. The order book probably seems well laid out, which probably means it gives revenue visibility itself. But I think you'll have to wait through this crisis as it has come around when it probably comes to corporate governance. So I think wait and watch. With the numbers probably are expected to better and the management commentary and some element in terms of corporate governance issues not cropping back again. I think that will give some confidence, but it will take some time.
It will take some time. And the other one, of course, that has been doing well over the last few sessions has been Sammaan Capital, and that continued its up move. The firm said that its board will be considering a fundraising on the 2nd of October, which is Thursday. And that's not all. ICICI Prudential has also picked up a stake in the company in a big block deal that took place yesterday. Gaurav is joining in with more details on this. Gaurav.
Well, yes, definitely when we look at Sammaan Capital, this was the second consecutive day where the stock actually was trading higher. In fact, yesterday it was up more than 10% and today it is up more than 4%. And the reason being that company today said that 2nd of October is a date when board meeting will happen where they will consider and discuss about the fundraising via equity. Other than that, yesterday when we look at some of the triggers, ICICI Pru Mutual Fund actually bought around 43 lakh shares at a cost of around 152 rupees. So definitely two triggers which help the stock price to move up. Apart from that, if we look at fundamentals, now there is also a turnaround which is likely to happen because Mr. Himanshu Modi, he has joined as Deputy CEO. At the same time, for FY27, company is saying that the legacy book is going to be in single digits versus what it is right now at 37%. They also say that the loan book is going to be around 1 lakh crore, which also implies 27% CAGR growth from here on. And at the same time, credit cost on a steady state is likely to be around 1%, which is currently at 3% if we compare first quarter of FY26 numbers. So definitely there is promising future which the management is speaking about. Now let's come to valuations. When we look at the valuation, it is trading at around 0.6 times. So definitely there is some headroom. Remember, for the last 5 years, the valuations have been sub 1%. In fact, the average 5-year valuation price to book value is 0.46 times. So definitely there was some discounting that the street was doing after 2019 crisis. But now, given that the stock is recovering, let's see if it is going to be any beneficial for investors. As of now, the stock is trading as at a higher point of time and also moving towards its 52-week high.
Thank you, Gaurav, for all those details. Jay, quickly, if you have any take on this particular stock and any stock from the financial space.
I mean, the PSU banks have been positive on, and they've been doing quite well. But Sammaan Capital, from a weekly perspective, that is a medium-term perspective, it's looking quite positive. The stock from the May 2022 low has gone up in trending fashion, corrected from there, and it's retraced to 78.8% Fibonacci retracement, which is typical of corrective decline, and it's starting to bounce from there. So I think Sammaan Capital has got considerable upsides, probably around 210, 220. Stop loss are about 134. The stop is a bit wide. Positive on Sammaan Capital.
Jay, Mayuresh, thank you so much for sparing time and joining us on the show today with your views on specific stocks on our radar. Take a short break. On the other side, we get to the top corporate voices and some key events to watch out for going into tomorrow's trading session. Stay tuned.
Welcome back. You're still tuned into Markets Forward. Let's now talk about the key corporate voices we had on our channel today. First up is Keystone Realtors. The management is upbeat about second and third quarter. Adds festive season will be much stronger this year on the back of GST rate cuts. There has been a strong walk-in demand, but the management adds rains acted as a dampener for demand as well. That's not all. The realtor is optimistic about Diwali and anticipates a bumper sale for homes, especially in mid-mass and premium segments. The company has seen an upswing in demand for 7 to 15 crore rupee homes. That's the segment that's working for them.
Now on to companies that marked their last week debut today. First up is Solar World Energy. The management says that it is focused only on the domestic market. It has plans to invest in a 1.5 gigawatt module manufacturing line, a lithium battery line and a 1.2 gigawatt solar cell line. It anticipates better margins once it starts manufacturing in-house. Currently, the margins for solar cells is near 14%, and the management adds that the margins are strong, but it should normalize soon. It also said that the company has seen demand and supply growing rapidly in the solar segment.
Let's talk about the other listing now. Seisha Sai Technology saw a muted listing on the Lal Street. Speaking to CNBC-TV18, the company's management said that it expected to see a 12% CAGR growth for its payment vertical. Also added that they enjoyed accelerated growth in Internet of Things, which they believe will grow the fastest. The company has also entered into the non-BFSI space. Its EBITDA margin is in the range of 24 to 25%, but profit after tax margins, they are around 15%.
And lastly, the management of Anand Rathi said that it expects the growth momentum to continue. It is anticipating a 20 to 25% growth in top line and expects growth in net profits to be in the range of 30 to 35%. Now, that's not all. Currently, the share of revenue is leaning towards broking business at around 60%. However, it intends to bring that down.
Okay, all right, those are the corporate voices on our channel. But the big event tomorrow, RBI's MPC will announce its interest rate decision. Ritu is here with the key expectations.
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause at this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy, that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5 to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Ritu, thank you for that. All eyes, of course, will be on the RBI policy tomorrow. But aside of that, what are some of the other important events to watch out for? Gaurav is here to list out just that. Gaurav.
Well, yes, as we move into the second half of FY26, we have a day full of events. First, let's talk about the global events. We will have Chinese and Hong Kong market, which will be shut. Chinese market will be shut at least for the next 7 days, and the Hong Kong market will also be shut tomorrow. And in fact, now Goldman Sachs says that global hedge fund recorded their largest weekly sell-off in the emerging Asia equities in the last 5 months because of this market holiday. Other than that, from the Indian market perspective, there are a lot of reforms which will happen. First, let's talk about RBI MPC meeting. We will get an outcome. Let's see if we go ahead with the rate cuts or not. So that is a key thing to watch out for. Other than that, India and European FTA will come into effect from 1st October. Remember, this FTA is likely to bring 100 billions of investment in 15 years. Then we have NCPI, who will stop UPI P2P collection request from 1st of October. We also have new online gaming regulations, which will be applicable from 1st of October. And secondly, let's also not forget that RBI project financing norms. Now, they are also going to be in effect from 1st of October. Other than that, some tariff-related changes are also likely to happen. First is that 100% tariff on branded patented drugs for USA, 50% tariff on kitchen cabinets, bathrooms, vanities. We also have 30% tariffs and 25% tariffs on trucks imports for USA. So that is a key thing to watch out for, how it is going to impact, given that it is going to get into effect from 1st of October. And lastly, let's also not forget that Jain Resources, the new company, will get listed tomorrow. Today we saw new companies dancing in the market. So let's see how it is going to be for Jain Resources tomorrow, given that they are going to get listed tomorrow.
All right. And of course, we'll be watching out for auto sales numbers as well. Thank you so much, Gaurav, for joining us with all those details. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty declined for the 8th straight session, but the losses are marginal. Bank stocks buck the trend. The rupee hits a new low against the dollar before recovering some ground. Safe haven rush takes gold prices to another record high. The yellow metal has now rallied over 11% in the month of September, making it the best month in the last 14 years. Silver prices up 18% this month. The U.S. government is headed for a shutdown, says Vice President J.D. Vance. The White House seeks to pin the blame on Democrats who are seeking additional health care funding. Several parts of the federal government will close either partially or fully from the 1st of October, with funding set to lapse. The Monetary Policy Committee is set to hold rates and maintain its neutral stance. As per a majority of market participants polled by CNBC-TV18, 60% believe RBI is unlikely to cut rates further in this cycle. The 4-month monsoon period officially ends today, with India receiving above normal rains in all 4 months. For the first time in 18 years, all regions receive above average rainfall, barring the east and northeast, where the deficit stands at 20%. This is the best monsoon in the last 5 years. IPL champions Royal Challengers Bengaluru up for sale. Sources say Serum's Adar Poonawalla emerges as a front-runner among others in the fray. RCB owners Diageo eye a valuation of nearly $2 billion. That's a CNBC-TV18 exclusive. India's largest conglomerate, the Tata Group, loses nearly 10 lakh crore rupees in market cap in the last 12 months. TCS accounts for nearly half of the losses following Tata Motors, but other companies like Tata Steel, Tata Consumer and Titan buck the trend to gain value. President Trump proposes a 20-point peace plan to end the war in Gaza and return hostages to Israel. Leaders in the Middle East and Europe welcome the proposal. Hamas is studying the plan, which is vague on statehood for Palestine. The government pulls up e-commerce companies for raising prices on select items despite GST cuts in the last 1 week. Sources say more than 3,500 complaints have been registered, with a majority from UP, Bihar and Delhi. Well, let's start with the day's market action. The market's closing largely in the red today, with the Nifty and the Sensex down. For the 8th straight session, the Sensex fell by about 97 points, the Nifty down 23, so absolutely flat close. The Nifty Midcap, nothing at all there, 3 points lower. And the bank stocks, again, up in positive territory, 170 points higher today, so bucking the trend once again. In the money market, the rupee hitting a fresh record low against the dollar in intraday trade, but the currency did recover some losses in late trade. $1 US now costs nearly 89 rupees. 10-year bond prices and yields remain largely stable in trade today. Remember, we also have the MPC coming up tomorrow. In the commodities market, gold prices hitting another record high, crossing the $3,800 mark in the international markets. The yellow metal has now rallied over 11% in September, making it the best month in the last 14 years. In India, too, gold prices have hit 1.16 lakh rupees per 10 grams for the first time. Prices of silver have also touched a record mark of 1.5 lakh per kg. The rally in the precious metals comes on the back of safe haven buying on account of a U.S. rate cut expectation and a potential U.S. government shutdown.
So if you look at the dollar chart of gold, it has been more volatile than equities. Gold has been more volatile than the S&P 500. So it's no safe haven. So have some gold in your asset allocation, but it should not be 25-30%. And yes, we have added silver also, because silver is looking good compared to gold. And silver also has industrial usage, and with the renewables, that is one area where silver is used. So actually, in terms of industrial demand, also silver has been going up.
Well, that's the story there as far as global commodities are concerned. But the big global story, a U.S. government shutdown appears imminent. Vice President J.D. Vance has said the shutdown is on the cards and has sought to blame the Democrats who are seeking additional health care funding. A meeting with congressional leaders at the White House failed to break the deadlock. Several parts of the federal government will close either partially or fully from the 1st of October in the absence of a federal funding bill.
I think we're headed to a shutdown because the Democrats won't do the right thing. I hope they change their mind, but we're going to see. We just had a very frank conversation with the Senate and House Democratic leadership. Look, the principle at stake here is very simple. We have disagreements about tax policy, but you don't shut that government down. We have disagreements about health care policy, but you don't shut the government down. You don't use your policy disagreements as leverage to not pay our troops, to not have essential services of government actually function.
Well, the
possibility of a US government shutdown looms large. Back home, the Reserve Bank of India's Monetary Policy Committee will announce its interest rate decision tomorrow. The committee is set to hold rates and maintain its neutral stance, as per majority of the market participants polled by CNBC-TV18. Ritu's here to take us through what the street expects ahead of the MPC's decision. Ritu.
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts, ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5% to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Ritu, many thanks. The Met Department has said that India's monsoon period officially ends today, with more than 70% of the rainfall being recorded between June to September. So far, 2025 has seen the maximum amount of rainfall, with Arunachal receiving the least, while Rajasthan has received the most. The Met Department has pointed out that all 4 months received above average rains for the first time in 18 years. This was also the best monsoon in the last 5 years. Well, on to a CNBC-TV18 exclusive. IPL champions Royal Challengers Bengaluru are up for sale. Sources tell CNBC-TV18 that Siramzada Poonawalla has emerged as a front-runner among others in the fray. Manglam is standing by now to take us through a deal in the making. It's long been anticipated, Manglam, but finally it looks like Diageo could put RCB on the block.
Well, that's right. You know, what we understand from sources is that Royal Challengers Bengaluru parent Diageo is looking to sell the asset. Now, this has been on the cards for a while right now. The company has refused to comment on speculation. But what we now understand is that we have a buyer in place as well. Among the others, we have Siramzada Poonawalla, who has emerged as the front runner for the same. Citi is obviously, carrying this deal out. And what we also understand is that, the sellers are seeking a valuation of $2 billion, or closer to $2 billion for this franchise. It'll be very interesting to see how this goes about because of a couple of reasons. The last deal that happened was Gujarat Titans. Two-thirds of that were bought by the Torrent Group and reportedly at a valuation of nearly 7,500 crore rupees, which is slightly under $1 billion. And even the last two teams that were auctioned by the BCCI, went a little over $1 billion itself. But the difference between those deals and now this one would be that, one, we understand that the buyer is seeking full stake sale and not just a part stake sale. And secondly, because it will be a secondary market transaction and not a sale from the BCCI or a new franchise being auctioned off from the BCCI, the payment would be entirely upfront as against a staggered, 10-year sort of payment that would come by for all the new franchises like Lucknow Super Giants or Gujarat Titans, which was in the auction bought by CBC Capital. And to that extent, how does the valuation scenario play out here would be something that we'll be tracking very very, very closely. From a seller's standpoint, obviously, this will be the best time to cash in on the chips because they've won the cup or the championship after 18 long years of wait, and some of their star players are now towards the latter half of their career. But from a buyer standpoint, it gives them a front foot access into India's biggest sporting action, which is cricket, and in that IPL, and also the long runway for growth that there is for a franchise like Royal Challengers Bengaluru, of which the fan base and fan engagement metrics are among the best in the world and not just the IPL. So all these factors make it a very, very interesting prospect. Let's see where the dust settles. We've actually, reached out to Adar Poonawalla, who refuses to comment on this, and Diageo also said that this is market speculation, so they do not want to put a word on that. But importantly, we had a word with United Spirits India MD CEO Praveen Someshwar earlier in this month, and he called it a very exciting business, but did qualify it as a non-core business for the company. So let's see where it goes. So after 18 long years of the fans saying "Ee saal cup namde" or "we'll win the cup this year," investors will now ask, "Ee saal deal namde" or "will we get a deal this year?"
It's an exciting asset. It's clearly something which is absolutely exciting because cricket is the lifeline of the country, and within cricket, IPL has a play, and therefore it's an exciting asset. But that has nothing to do with our core Alcobev business. Well, I wouldn't get to saying unlocking or unlocking. It's certainly not core. There's no doubt about it. Alcobev is our core, and that's where we focus on our business, and that's exciting. This is an exciting extension.
Well, that could be a big deal in the making there. RCB up for sale, Diageo looking for a buyer, Adar Poonawalla expected to be the front runner. Tata Motors' own Jaguar Land Rover has secured a £2 billion emergency credit line. The Financial Times reports that Standard Chartered Bank, Citi and Mitsubishi Financial Group have agreed to offer the funding facility. Shares of Tata Motors surging in trade after that. The news comes just a day before the demerger of Tata Motors passenger and commercial vehicle business comes into effect. Now, it has been a rough year for the Tata Group, India's largest conglomerate. The group's valuation is down nearly 10 lakh crore rupees from its peak, with TCS accounting for a lion's share of the erosion. Yusuf is here with more on the Tata Group's valuation and the rocky ride so far in 2025. Yusuf.
Well, the Tata Group is bearing the brunt of US President Trump's tariff policies. India's largest conglomerate was valued at 35 lakh crore rupees at its peak. At the start of this year, the group was valued at over 31 lakh crore rupees. That valuation has now eroded by 5.4 lakh crore rupees to just under 26 lakh crore rupees. Trump's tariffs, the clampdown on H-1B visas and a cyber attack on JLR has further dampened sentiment. The combined loss in market cap now accounts for about half of the group's annual revenue, which is also slowing. At 4.7%, the growth in revenue in FY25 was the slowest in 5 years. The group's revenue grew 17% in FY23 and over 12% in FY24. TCS accounts for 80% of the erosion in value, with nearly a third of the decline since the 19th of September after the crackdown on H-1B visas by the Trump administration. Trent has lost 85,000 crore rupees in value. Companies like Tata Motors, Indian Hotels and Voltas have also lost anywhere between 14,000 to 25,000 crore rupees in market cap. But some Tata Group companies have bucked this trend. Tata Steel has gained 39,000 crore rupees in market cap. Tata Consumer, Titan and Tata Investment have also added anywhere between 10,000 to 21,000 crore rupees to their market capitalization.
Yusuf, many thanks for joining us. Coming up next, US President Trump proposes a 20-point peace plan to end the war in Gaza and return hostages to Israel. That and more when we return. Well, a slew of listings on the Lal Street. Shares of Anand Rathi making their debut on the stock exchanges, up nearly 8% on the first day. No such luck, though, for the three other companies that listed today. Jaro Institute's shares listed flat, ended the day nearly 20% lower. Seshasai Tech shares listed at 2% premium but ended nearly 3% lower. And lastly, Solar World Energy shares witnessed the highest jump, listing 11% above the issue price, but that stock also closed the day nearly 8% lower. So the new listings of the day. And speaking of IPOs, electronic major LG India is expected to hit the Lal Street soon. The company's subscription will open from the 7th of October. Rachna standing by to take us through the details. Rachna, another Korean company soon to hit the Lal Street after Hyundai India. Tell us more about the LG IPO.
That's right. LG India IPO is set to open between October 7 and October 9th with what could be one of the biggest IPOs of the year. The company plans to raise about 11,500 crore rupees or nearly $1.3 billion through the sale of a 15% stake. Now, the entire issue is an offer for sale where the South Korean parent will offload just over 10 crore shares. None of the proceeds will stay with the Indian subsidiary. Instead, they will flow back to the parent company all the way back to Korea. Now, this playbook may sound familiar because Hyundai followed a similar path just last year. Its IPO, the largest in India's history at nearly 28,000 crore rupees, also involved the parent selling a chunk of stake of about 17.5%. Again, the money went straight to Korea, not the Indian unit. In fact, both these IPOs share striking similarities. They're structured entirely as OFS issues. They represent Korean conglomerates unlocking value in their Indian arms, and both involve significant but minority stake dilutions to give public investors a slice of these consumer giants. Also, both Hyundai and LG manufacture the vast majority of their products here in India. Another striking similarity that I was just told about is they also share a brand ambassador, and that's Shah Rukh Khan. Now, Hyundai's IPO debut was muted as we know it. It was around this time last year. It opened slightly below its issue price in October 2024, despite heavy institutional demand. Now, whether LG faces a similar listing day performance or manages to outperform will be the key story to track when the IPO hits the street.
All right, Rachna, many thanks for joining us. That's LG India, all set for its Dalal Street debut. US President Donald Trump has proposed a 20-point proposal to bring an end to Israel-Gaza conflict. Israel's Prime Minister Benjamin Netanyahu has accepted the proposal. However, Hamas is studying the plan, which is vague on statehood for Palestine. Archana joins us now to explain to us what the Gaza peace proposal entails. This 20-point plan that was put together and presented by President Trump and Benjamin Netanyahu after their meeting last night. Archana, take us through what it means for all parties involved.
Right, Shireen, the most important part is if both sides agree to this. So let me give the main highlights of this 20-point plan. Point number one, if both sides agree to the plan, the war will end immediately. Within 72 hours of Israel publicly accepting the proposal, all hostages, alive and dead, will be returned. Once all hostages are released, Israel will free 250 Palestinian prisoners serving life sentences, plus 1,700 Gazans arrested after the start of conflict on October 7, 2023. Israel will not occupy or annex Gaza. The Israeli Defense Forces will hand over the Gaza territory it occupies to something called the International Stabilization Force. Now, what is the International Stabilization Force? Well, the United States will work with Arab and international partners to develop a temporary international stabilization force to immediately deploy in Gaza. Next point, once all hostages are freed, members of Hamas who give up arms will be given amnesty. They'll be allowed to leave the country. Next point, full aid will be immediately sent into Gaza Strip through the United Nations without interference from Israel or Hamas. Next, Gaza will be governed, and this is the most important point, Gaza will be governed under the temporary transitional governance of a committee made up of Palestinians and international experts to be overseen by something called the Board of Peace. Now, this Board of Peace will be headed and chaired by US President Donald Trump and will have members including former UK Prime Minister Tony Blair. Hamas would agree to have no role whatsoever in governing Gaza directly or indirectly. All military infrastructure, including tunnels and weapons production facilities, will be destroyed, and independent monitors will supervise the demilitarization of Gaza. Next, a Trump economic development plan to rebuild Gaza will be created by a panel of experts. A special economic zone will also be established. Under this plan, no one will be forced to leave Gaza, and those who want to leave will be free to do so and free to return. According to this plan, New Gaza will be fully committed to peaceful coexistence with the neighbors. Another important factor, a guarantee will be provided by regional partners to ensure that Hamas and other factions comply with their obligations and that New Gaza poses no threat to its neighbors or people. The United States will establish a dialogue between Israel and Palestinians to agree on a political horizon for peaceful and prosperous coexistence. And another important point of contention, which was the Palestinian statehood. Now, that is where there is some vagueness and ambiguity. Now, this plan says that while Gaza redevelopment advances and when the Palestinian Authority is reformed, the conditions may finally be in place for a credible pathway of self-determination and statehood, which we recognize as the aspiration of the Palestinian people. Now, what is the reaction so far? Hamas has yet to respond to Donald Trump's plan, while Prime Minister of Israel, Benjamin Netanyahu, has strongly opposed any Palestinian statehood. Trump has also said that Israel would have America's full backing to do so if Hamas did not accept the deal. Back to you.
Archana, many thanks for joining us. That 20-point plan, but as Archana was pointing out, yet to be agreed to by Hamas, though the Palestinian government has given its go-ahead. With that, it is time for us to wrap up this edition of Business 360. More news and updates will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Hello and welcome. You're watching Commodity Champions and I am Manisha Gupta. The most important period for agriculture, or the monsoon period, has officially ended. India receives about 70% rainfall between June and September, and as per the IMD, the country has recorded a surplus rain of 8% during this period till September 29th. All 4 months have witnessed above normal rains, which is rather rare. This has only happened in 1956, 1961, 1975, and then in 2007, and now in 2025. Before this, all regions have also received above average rainfall, barring East and Northeast, where the deficit at this point stands at 20%. At 108% of long period average, this is the best monsoon in last 5 years. The low-pressure area is expected to continue over the Bay of Bengal, bringing rains in Mumbai, Gujarat and the Konkan region between October 4th and 6th. The IMD expects La Nina conditions are expected to set in from the month of October until December. This could mean stronger monsoon, above-average rains and colder winters. So what will all of this mean for the agriculture sector? Joining us now to discuss that is Mr. Siraj Hussain. He's former Agri Secretary. Mr. Hussain, I thank you so much for joining in. Good monsoon. All 4 months of this monsoon season have been above average as well. While it has made some damages as well for the Kharif crop, first of all, your reading of this monsoon and the kind of above normal rains impact on the crops that were in Kharif season, and how are you looking at the overall agri in sense of Kharif?
Actually, one good fallout of the excellent monsoon is that perennially deficient regions, shadow area in Maharashtra, for example, Karnataka, they have received very good rainfall. Marathwada, Vidarbha, even Punjab and Haryana have been receiving deficient rainfall for the last several years. But this year, the rainfall has been very good, about 40% higher than normal in Punjab. So I think on the whole, if we take the picture, then in Punjab, just about 4% of total Kharif area has been affected. So I do not think there will be much impact on paddy production and rice procurement in Punjab. In Maharashtra, we are getting information that a lot of area has been affected, but I'm still waiting for any confirmation from the state government. In Punjab, I'm also told that another area which has been badly impacted is in Firozpur area, where quinoa is grown. So it seems that the water level there has gone up and quinoa crop is badly affected. So on the whole, I do not think that Kharif production will be very badly affected, but obviously individual farmers whose lands have been submerged, they are facing bad time.
So while there's not too much of an impact on Kharif as in sense of overall numbers, as you said, Mr. Hussain, how are you looking at Rabi from here on? Because the kind of monsoon that we're looking at, which is extending itself into mid-October, well, actually, I was talking to SkyMet and they said we shouldn't be looking at 1st June to 30th September. We should actually be looking at mid-May to mid-October, because that is the kind of monsoon that we're looking at this time of the year. Are you looking at that as a positive for Kharif, or for that matter, Rabi crops?
Actually, this year the monsoon came a few days earlier than normal. So for estimation of monsoon, it is not 1 year or 2 years data which is taken to 40, 50 years data. So on that basis, IMD decides. But I think if rains continue for another 10 days, but not too much of rains, so that will not be very bad. However, if there is too much of rain and then the harvested paddy crop, which is lying in the field, will be affected, or soybean crop in Maharashtra, as was the case a few years back, then that will be bad news. But in addition to all this, I think there are also several other things which are going on. For example, soybean prices are low and farmers are suffering. So there are difficulties for individual crops also across India.
How would you look at the Bhavantar scheme that has been recently launched into MP? Do you think that would ease farmers' pain?
Actually, if it is properly implemented, then Bhavantar can be beneficial for the farmers. But last time, when it was introduced in Madhya Pradesh, we had evaluated it with Dr. Ashok Gulati when I was in ICRIER. And we found that the prices of soybean in APMCs in Madhya Pradesh were lower than the same in Maharashtra. So there was an apprehension that the traders are paying less to farmers, and they are telling the farmers that you will get Bhavantar from the state government anyway. So I'm hoping that state government will take necessary action, precautions, comparison of data with other states, etc.
Mr. Hussain, now just coming forward, taking a step ahead and talking about Rabi now, La Nina is settling in, expected to settle in October, continue until December. It's a 3-month period, which is not so great, but the expectation really is that we could be looking at a wetter October for sure, and perhaps November, December also. And then it is expected to be a colder winter this time around. How will that work in favor of Rabi?
Actually, we have all been waiting for colder winters because even last year winter was very mild, and cold nights in December and January are necessary for wheat crop. So, अगर पाला नहीं पड़ता है तो हम समझते हैं कि जो हमारी रबी की क्रॉप्स हैं उनकी बहुत अच्छी यील्ड होगी क्योंकि सॉइल का मॉइस्चर बहुत अच्छा है। और अभी पिछले साल हमने देखा कि कुछ ड्राउट रेजिस्टेंट वैरायटीज भी heat resistant varieties Punjab में बोई गई थी. So on the whole, I think Rabi prospects are very good, and we should hope for a good crop.
Mr. Hussain, one more word, and this is really about the food prices or the food availability for the Indian markets. This is what we've been hearing for the last couple of quarters now on how the Indian demand hasn't been so strong. What is your sense moving forward from here? On how are you looking at the food prices, food security? Would you say there are still concerns when it comes to India as a market?
Actually, if you see, the food prices are very low, and the inflation is so moderate that RBI is very happy, Government of India is very happy, interest rates are likely to be brought down. So what is happening is that the burden of keeping the food prices very low is falling on the shoulders of farmers, which is not a very ideal situation. And one reason is that imports are coming too freely, whether it is import of pulses or import of edible oils, etc. So a lot of food commodities are being imported, which are keeping the prices low. I think the government will have to do something, and I expect that very soon we should see some announcement on pulses, import of pulses.
Well, that point is well taken, and that is something that the street has been awaiting as well. Mr. Hussain, thank you so much for joining in with your sense on monsoons, impact, and of course, expectations that Rabi this time around would be on the positive side. And as he said, that the prices are low in India when it comes to agri as a product, and perhaps we would hear something from the government pretty soon. With that, it's time for a quick break, but don't go anywhere. We will be discussing gold's record rally on the other side with Dan Struwin of Goldman Sachs.
Welcome back. You're watching Commodity Champions, and week after week we have been tracking this, and there is still no stopping the gold rally. Prices have reached $3,800 per ounce mark after surging 12% in the month of September. This makes the yellow metal's strongest monthly performance in 14 years. Silver prices, in the meanwhile, are trading at a 14-year high. Prices have jumped 65% so far in 2025, also headed for the best yearly gain in 10 years. The growing expectations of more U.S. Fed rate cuts in the next two meetings this year have boosted demand for the safe haven yellow metal. Prices also are rallying over the possibility of a U.S. government shutdown. If no deal is struck on a spending bill by 1st of October, the U.S. will have its first shutdown for nearly 7 years. On Monday, President Trump met congressional leaders, but there was little progress. So how soon could gold hit $4,000 per ounce mark? Well, for joining us to discuss all of that is Dan Chauvin. He's co-head of Global Commodities Research at Goldman Sachs. Dan, hi, thank you so much for joining in. First of all, your sense on the U.S. government shutdown. Is it coming? And if it is, the impact on gold that you see?
Thanks so much for having me, Manisha. So at this point, I think financial markets and prediction markets and our U.S. economists think that a shutdown is somewhat more likely to happen than not. Historically, around government shutdowns, safe haven assets such as gold tend to benefit somewhat. You also tend to see a somewhat weaker dollar. But more broadly, though, I do think that uncertainty about macro policy, uncertainty about geopolitics, is the backdrop against which gold prices have risen very sharply. And we think more gains are ahead. We see the gold price exceeding $4,000 per troy ounce from the summer of next year onwards. And I think the risks are skewed towards reaching that target earlier than our baseline.
Dan, sorry, I missed that level. Did you say 4,000 or prices above that?
So yeah, our base case is that you hit 4,000 in mid-26 and then exceed 4,000 in the second half of 2026.
And what are you looking at in sense of gold prices by the end of 2026 then, once that 4,000 is crossed? What levels are you looking at?
Yeah, around 4,300, yeah.
Dan, there also are various reports suggesting that by the time it's 2028, 29, we could be looking at 5,000, 6,000. Do you see that linear progression continuing in case of gold prices?
Yeah, so our current price forecast ends in December 2026. But to answer your question, I think we first need to figure out why gold prices have risen so much, essentially since 2022. And the main driver really is the fivefold increase in the buying purchases from central banks. So specifically, central banks are now buying at a roughly 80 tons per month monthly purchase. That is about 5 times faster than before 22. What happened in 2022? Russia's central bank's reserves were frozen. And as a result, EM reserve managers across central banks in the world realized that the truly only safe asset when you hold it in your domestic vaults is gold. And so central banks have been adding gold. And based on our estimates, several important Asian and emerging market central banks are still underweight gold, still have significant room to increase the gold share in reserves. And so we have estimated that central banks will likely to continue to buy gold at a rapid pace for the next 3 years. That has been the main driver of the rising gold prices. If that continues, I think it's quite plausible that gold prices continue to rise even after the end of our forecast horizon in late 26.
All right. Dan, how are you looking at silver also? Because silver has outperformed gold, and silver, apart from safe haven, is also an industrial metal, and that is where the major demand seems to be coming in from. And then add the deficit story to it, and you have a perfect mix. From where we are standing, do you see 50 taking off, and what are your targets for this one?
Yeah, so we don't forecast silver prices, but what we have seen basically since 22 is that the gold-silver price ratio, which historically is in sort of a 45 to 80 range, has broken out of that range. At the moment, despite the outperformance year-to-date of silver, gold prices are still just about 80 times higher than silver prices, above this historical 45 to 80 range. Why have we broken out of this range? The main reason is that central banks are buying gold at a much faster pace to hedge against geopolitical shocks. Central banks are not buying silver because silver is more ample and less precious. And therefore, we do think that this higher gold to silver price ratio is structural and is here to stay. That said, if investors rotate from the gold market into the silver market, you can have a lot of upside to the silver price. And that's what we're seeing year to date. If investors look for the catch-up trade of silver, or for that matter, other precious metals to gold, you see a lot of upward pressure on demand for silver and therefore the price. I think the main intuition is that we estimate that the silver market is about 10 times smaller than the gold market in terms of the value of all the metal that has ever been mined. And so you only need a relatively small diversification step out of the gold market into the silver market to cause a lot of upside. And so the ETF inflows, investor inflows in silver have been very strong, and there is potentially more room to run. That said, structurally, the main reason we are bullish and have been bullish gold, and gold remains our favorite long commodity, is central bank buying, and that's a gold-specific story, not a silver story.
Dan, coming on the de-dollarization part of it, because you mentioned central bank and you mentioned buying as well in sense of ETFs, but do you see de-dollarization as a major part as well when it comes to gold buying?
I do think that diversification has been a main driver of the gold rally. So far, central bank reserve diversification out of Western treasuries and government bonds has been the main driver of the gold price rally. That said, over the last few months, we have also seen some indications of what I would call private sector investor diversification. For instance, this month, we have seen a roughly 100 tons inflows in gold ETFs. That's more than what our traditional models based on falling interest rates would predict. So we're seeing more inflows into gold ETFs than you would predict. And that's consistent with investors in an uncertain geopolitical and macro environment looking for diversification opportunities. And I think the main reason that we see significant upside to our 4,000 mid-26 gold price target is precisely the possibility that private sector diversification continues. The key intuition for the large upside risk to gold prices from private sector diversification is that the gold market is quite small. If you, for instance, compare the value of global gold ETFs, it's about 100 times smaller than the value of outstanding US treasuries, 200 times smaller than the value of the US stock market cap. And so you only need a very small diversification step out of, for instance, US treasuries or out of US stocks to get the next giant leap for the much smaller gold market.
I get that. Dan, are you looking at dollar declining from here? That would explain the kind of run-up that we're looking at in various metals. And as you said, it's not just gold and silver, it's platinum, palladium, even copper, zinc, aluminum are trading at a multi-month highs right now. Is dollar somewhere to be seen as a catalyst for this?
Yes, so our FX strategists, they do expect dollar depreciation to continue. They, for instance, estimate that the dollar is about 15% overvalued. The main reason to expect somewhat additional dollar downside is that the incredible outperformance of the US economy and US financial markets over the last 10, 15 years in our forecast diminishes somewhat. US outperformance looks somewhat less exceptional in our forecasts. If you combine that with a large current account deficit and overvaluation, the base case is that the dollar depreciates. That tends to be supportive for commodity prices, because many commodities are denominated in dollar, and so you make commodities more attractive, cheaper for non-US buyers when the dollar depreciates. In the case of gold, though, we do find that the main reason that gold tends to rally when the dollar depreciates is via the lower US interest rates channel. When the Fed cuts rates, all things equal, the dollar tends to depreciate and ETF flows into gold rise because the opportunity cost of holding gold and non-yielding asset rises. But yes, I would say big picture, a softer outlook for the dollar is a supportive backdrop for commodity demand, including gold, but also industrial metals such as copper.
Dan, you mentioned the interest rate cuts, and that really was my next question, because 1 done and 2 to go this year?
Yes, so we have the Fed indeed cutting 2 more times by 25 basis points towards the end of this year, and then an additional 50 basis points in 2 steps by mid-26. So if you do get another 4 25 basis points cuts from the Fed, it's another reason to expect gold ETF inflows to rise, and it's one of the 2 key drivers of a bullish gold call. So cyclical support from Fed cuts and a structural support from central bank buying.
Then are you also looking at base metal prices? Because we're looking at copper at a 2-month highs and zinc and aluminum at 6-month highs as well. While China, of course, continues to play a bigger role here, the markets do believe that the demand scenario from here would improve. How are you looking at the segment?
Yes, so copper prices have rallied significantly. We're now above 10,000. I think the recent main catalyst for the rally is mine supply disruptions. The second largest mine in the world, saw an estimated 1% of global supply drop in production, both in 25 and 26. Big picture, we do think that the copper price outlook looks pretty constructive over the medium term. We have the copper price, approaching nearing $11,000 by late next year on the back of strong electrification demand, support from easing financial conditions, and somewhat constrained supply. And last but not least, we also expect stockpiling, strategic stockpiling from governments to bolster some upside to copper demand. That said, we don't expect copper prices to go to 12,000 or even higher, because there are some factors that limit the upside price pressure on copper. For one thing, we think the market is still in a slight surplus. And then second, when copper prices rise too much relative to aluminum prices, when the copper to aluminum price ratio sort of exceeds a factor of 4, you tend to see switching in terms of demand outside, away from the copper market to the aluminum market. And because we expect strong aluminum supply from Indonesia, we do think that there are some constraints, there are some caps on how high copper prices can go, despite a pretty constructive demand environment.
All right, Dan, thank you so much for joining in. And that's a lot of detail that you have given to us in sense of commodities analysis and, of course, prices expectation as well. We'll hope to speak to you very, very soon yet again, because there's just so much happening in the international markets. Would be very, very helpful. So that's the view coming in from Goldman Sachs. Gold prices heading to 4,000, 4,300 perhaps in the next year as well. And the support in case of copper also is quite intact. But with that, that's all the time we have on this edition of Commodity Champions. Thank you for watching.
Hello and welcome to our special broadcast. I'm Parikshit Luthra. India's green drive just got turbocharged. The GST cuts from the government have now taken effect, and there is a clear message to companies and the consumer. Electric vehicles will be taxed at 5%, small cars at 18%, and mid-sized cars and SUVs will be taxed at 40%. There is no special tax rate for hybrid vehicles. They will be taxed alongside ICE and alternate fuel vehicles, either at 18% or at 40%. The 5% rate will only be for EVs. With this, the government has signalled its intention very clearly, giving a much-needed fillip to EV makers. Electric vehicle penetration is increasing in India, from 1/5 of total car sales in 2020 being electric to 2/5 in 2024 being electric. Will EV sales take off after the GST cuts? And do these reforms provide enough policy clarity to India's electric vehicle makers? Does this decision also end the debate on whether government should offer financial incentives to hybrid vehicles similar to EVs or not? To take this discussion forward, we're now joined by Chetan Maini, co-founder and chairman at Sun Mobility. Mr. Maini, thank you very much for joining us on the program. Let me begin by asking you, do you think this GST reduction somehow puts the lid on the discussions, the debate within the industry on whether government should only be giving financial incentives for electric mobility, or should hybrids also get similar incentives?
You know, as a country that's growing the way we are, reduction in emissions is important, but elimination of emissions and reduction of our complete elimination of fossil fuels is much more critical. So I think government's message is very clear that electrics, it achieves both. So we actually keep that at 5%. And all of the vehicle platforms, fill at 18 to 40. That itself is a big drop. A lot of smaller vehicles are at 18, and so there's a big change of 10% for the industry. And I think that'll boom, that'll really give a good boom to the entire community. But at the same time, the intentions are very clear that electrics are most beneficial and therefore should have that continued differentiation of 5%.
Right. What I would also like to ask you is that with this current tax rate, do you feel that it will be financially attractive for a customer to buy a small EV compared to an ICE vehicle or a hybrid vehicle?
Well, actually, the differential is reduced by 10%, right? So I think in the short term, there will be, a higher level of sales probably of ICE engine vehicles and hybrid vehicles than there would be of electric. I think electric will continue to grow, but the overall market size will also grow with the GST reform. So it won't have a negative impact, but probably from a market share point of view, in a short term, electrics may not have that sort of growth rate that it's seen in the last, 24 months.
Right. But do you feel that more policy clarity is needed? Especially you've got state governments who are incentivizing hybrid vehicles on similar lines as they do for electric vehicles. The centre is very clear that when it comes to financial push, we will support only electric. Rest of the technologies, we are technology agnostic, but the tax rate and the policy framework for them remains the same.
I think the central government has taken the right decision. It's the right way to move forward. And, hopefully over a period of time, the states follow that construct as we looked at, and that would keep more uniformity across the country on policy front of it. However, as you mentioned, there is a bit of a, challenge around on the GST implementation, right? Now that regular vehicles have come to 18%, I mean, one of the key issues is that, batteries continue to be taxed at 18% in the country, right? Which means that the working capital that's stuck up is pretty large for a regular automotive company. When you think of businesses like battery swapping, then that is 18% additional capital actually you need to put in. So in a way, that's really impacting the industry a lot. And I think coupled with that is a person who's probably using a swapping or charging service is today charged at 18%. Now that's similar to an ICE vehicle when really everything else is at 5%. So this anomaly and inverted duty structure related to batteries coming in, which need to move from 18 to 5, can give that boost to electric mobility. And charging and services of charging and swapping coming back to 5% will also give the necessary boost today we need in the country. Great policies coming out related to infra, But if infra is being put in and it's being taxed at 18%, the same as ICE, that's going to deter consumer adoption. So I think it's in the right direction. This inverted structure needs to be fixed, but.
That's an important point. So could you give us a sense of how the GST changes impact battery as a service, such as what Sun Mobility is offering? How does it affect battery swapping as a service? And also the prices of batteries. If one goes to purchase an electric battery in the market, what are the changes with regard to the GST rate?
So if you purchase a battery or sell a battery, it's 18%. But when it goes into the vehicle is at 5%. And so there's an inverted duty structure, which, an OEM may get refund, and it takes some time. So the capital is stuck up, right? But eventually it's at 5%. But if you're in a battery swapping business or battery as a service business, then there is the battery is separate from the vehicle, which means the tax remains at 18%, right? And this sort of causes a huge challenge where you're stuck up with 13% more investment on this front. So that is the big thing on battery as a service. Then when the customer goes to get a swap, they'll pay 18%. So they pay, 40 to 50 rupees for a swap, they would pay 18% extra. But typically at a vehicle level, that's 5%. So we have 13% extra taxation for a consumer who's really a gig worker or someone who's doing deliveries or taking people around. And that's not the community today. We need to encourage this electric mobility and not have this huge challenge around there. So it's become
one final question.
Sure.
Right. One final question, if I may put to you, and that would be about increasing EV sales. If we have to meet our electric vehicle goals, achieve 30% electrification by 2030, what more do we need to do? What are the areas where we need to speed up things?
So I would say it's keep 4 areas. One, we talked about the GST, very critical to keep that normal. I think second is we need to get more financing available and easier. That's still a challenge for consumers who want to ship, where financing still continues to be an issue. The third is infrastructure that has to come in at speed that allows consumers to feel, yes, I'm not going to be stranded, be it swapping or charging. Right. And government's new policy that's come out as part of the PM overall level of putting in infra, hopefully fructifies in the next few weeks. And then this sort of helps that area that we look at. And the last is that the PLI that exists today, can it be extended to a wider group, more OEMs and tier ones, so that this cost benefit can come down to the end customer and can further accelerate research and development and manufacturing in the country.
All right. Thank you so much, Chetan Maini, for joining us on the program, giving us your view on electric mobility and what the government needs to do more in the next 5 to 10 years. We're taking a short break here on CNBC-TV18 and our series Charging Up India's EV Journey. But don't go anywhere. We continue discussing India's green drive in conversation with Electra Green Tech's Mahesh Babu and industry expert Arun Kumar Malhotra. Welcome back. We're discussing India's EV roadmap, and to take this discussion forward, we're now joined by Mahesh Babu, Managing Director at Electra Green Tech, and Arun Malhotra, auto industry expert. Gentlemen, thank you very much for joining us on the show. Mahesh Babu, if I can come to you first. When we look at the electric vehicle versus hybrid debate, the financial incentives have been for EVs. Yes, some states are also giving financial incentives on hybrids, but the central policy has now become clear with the GST reform. Having said that, if you just look at the August numbers, and I'm looking at retail data from the Federation of Automobile Dealers, if you look at passenger cars, there the percentage of electric car sales was 4.7% in July, 5.3% in August. Hybrids was 8% in July and 8.13% in August. Commercial vehicles, if you look at August sales, EVs were at 2%, hybrids were at 0.04%. So it seems that there is still a demand for hybrid vehicles. Do you feel that this demand will continue irrespective of the fact that there are no special financial incentives for hybrids?
First of all, due to this GST change, nothing has much impacted EV. EV is still at 5%, which was continued to be at 5%. But one benefit we got is because input credit for us was at 28 and 18%, that has come down to much lower, and that's actually helping our working capital going forward. If you look at government, as rightly said, there is a push for EV from the central government, state governments, everything. But we'll have to look at many technologies are going to be in the market. There is going to be hybrid, there is going to be hydrogen, there is going to be CNG, LNG, and other things. I think India's mobility requirements are so high, it's very difficult to discount any technology at this stage right now. But major growth is going to come from EV, which we have seen in various sectors, two-wheelers, cars, commercial vehicles, and many more, three-wheelers and others we have seen. So I would say that EV adoption and the rate of growth of CAGR, what we have been seeing, is not derailed due to any GST. In fact, it helped the working capital to many of the EV companies due to input credit available and cash flow better than that. And while we'll have to watch about other technologies, I think EV has a good future still on terms of growth rate.
Right. Let me take that question also to Arun Malhotra. Mr. Malhotra, what do you feel will be the adoption going forward? Are we going to see EVs and hybrids go side by side, or does this give a clear push and impetus for greater EV adoption?
So if you look at EVs today, I mean, there was a apprehension that EVs above a certain price, say above 25 lakhs, the GST will go up because EVs sell at even 1 crore for super luxury vehicles. That has remained 5%. That's the positive part. But if you look at the gap between EVs and in the compact vehicles, between EVs and ICE vehicles, which was to be 23%, has gone to 13%. To that extent, it's a disadvantage. Now, coming with as hybrid, I think one of the questions which is important, even hybrid even didn't gain much anything from this GST cut. On the other hand, above a certain price, the vehicles which were selling at 43% GST plus cess now has come to 40%, and the bigger SUVs have come from 50 to 40. So there's not much gain as far as GST is concerned also. I think the challenge at this point of time is going to be the next stage, which is the CAFE norms, on which the proposal has been put out, where we are giving bonus points of 3 to EVs and 2 to strong hybrids. So clearly these are two technologies government is betting on, and there is where the major difference will arise. But as far as compact vehicles is concerned, in the short run, it is disadvantage to EVs.
You're saying it's a short run disadvantage to electric vehicles. So let me get in Mahesh Babu at this point again. Mahesh Babu, if you look at data from the International Energy Agency, they say that global electric car sales exceeded 17 million in 2024, rising by more than 25%. 20% of new cars sold worldwide were electric. Plug-in hybrid sales have grown faster than sales of electric vehicles in China. Going forward, when you speak about commercial vehicles and even cars to some extent, do you think that there will always be a market for hybrid vehicles?
Yes, I feel so, because as Arun rightly said, if India has to meet CAFE norms and if any OEM has to meet the requirement, we need to look at multiple options. EVs, of course, growth will be there. But if you look at weighted average, plug-in hybrids plays an important role in reducing the CAFE norms. Second, plug-in hybrids requirement is also much higher in the countries, I would say, more not tropical, but where there is a climatic condition of cold conditions, because you can't depend on long distance and the consumption is very high. You will see typically plug-in hybrids playing a vital role in these conditions. So plug-in hybrids to some extent, or strong hybrids and plug-in hybrids to some extent will play a vital role. I think what we call in India hybrid, mild hybrids, I think those are all part of the existing sales. But still, I would say that EV will have a lead in most of the growth because of simple zero tailpipe emissions and government's focus in various areas. And consumers are also slowly getting adapted to EV. EV, the biggest inhibitions were the charging infrastructure, which is getting improved day by day, and also the range anxiety. I think both are being well addressed both by government and the industry, and it is going to be a better adoption going forward as well. So most of the plug-in hybrids are going to eat away from petrols and diesel vehicle sale today. I don't think it's going to eat away or reduce anything with EVs penetration.
Okay, Mr. Malhotra, you spoke about CAFE norms. Do you think the next set of CAFE norms will make it even more important for the industry to have more electric vehicles in the portfolio?
So clearly, the petrol and diesel vehicles will be under tremendous pressure because we are talking over 20% reduction in the emission norms from 113 grams per kg to 91. But we must look at the point that what the proposal is. If the 3 points, bonus points are even for EV, hybrid is also getting 2 points. And also flex fuels are getting 1.5. So I think government has not totally put all their bets or all their money on EVs. They're also hedging their bets on hybrids or flex fuels which are to follow. But clearly EVs will be the big gainer. Companies which have to conform to the norms of CAFE 3, and the penalties are very, very stiff. And this starts from 2017 March or April. So it's not very far away. To that extent, EV gets a real momentum. The other part is this focus on the PME drive. Although the demand incentives may not be high, but this focus on charging infrastructure, 2,000 crores being spent, 7,000 charging structures and public spaces, I think that should also get the factor of reliance and reassurance back into EV. So EV on the long term, medium and long term, is on a strong wicket. But hybrid is also there to stay.
Absolutely. Okay. One other point, Mr. Babu, that a lot of people fake, including industry folk, is that you need more strong plug-in hybrid vehicles. You cannot be incentivizing or supporting mild hybrids. What's your view? Do mild hybrids also do the job of giving you better fuel efficiency and also reducing emissions, reducing the environmental impact? Or do you feel that somewhere we should be very clear in our policy making that when you're talking about hybrids, it should be plug-in hybrid vehicles?
Difficult to define what is mild hybrid, what is strong hybrid. I think it's English, very difficult in technical terms. The thing is, hybrid, as long as you use the energy from plug, which is the plug-in hybrid, which is from the grid, which is going to add, then only you are going to create enough differentiation with respect to petrol and diesel burning vehicles. If you have a battery which is getting charged from the engine itself, it's in fact more inefficient than charging from the grid. So we'll have to be a little bit careful on the definition, but there are experts who will define it. My sense and recommendation would be that more and more diesel and petrol vehicles have to move towards plug-in hybrids, and more plug-in hybrids have to move towards EV. That is the right path to get going, and we should not be pitching against each other. More and more new technologies come, clean technologies come. We should look at how to move from grade 1, grade 2 to grade 3, which is the factor given by government for CAFE norms as well.
Right. Arun Malhotra, when it comes to electric vehicles, what's the next phase of support that you are expecting from the government? The PM e-Drive scheme will end in March next year. The government has through the Niti Aayog given an assurance that it will continue, support will continue, perhaps for public transport, those sectors and electric vehicles which really need it, charging infrastructure, maybe not for sectors where we've already seen high levels of electrification. What do you think should be the policy road ahead, considering we're not close to our milestone or our target of 30% electrification?
So one of the challenges is that the incentive on demand incentive on electric vehicles, which used to be very high, passenger vehicles, it doesn't exist because even fleet has been taken away in the PME drive. Two-wheelers, it is 10,000 per vehicle, which used to be at some time 30,000. And from the 1st of April 2026, it becomes 5,000. So clearly demand incentive is not going to be the key factor. The two factors is one, this GST gap, which is there, 5% should continue and will continue. That's the positive drive. The second is in the CAFE norms, which are just around the corner, this strong disincentive for petrol and diesel to meet the norms will give a fillip to electric vehicles. And last but not the least is, unlike the electronics industry or other industries, the PLI scheme has been a slow starter in the auto industry. And the PLI and the advanced cell chemistry was to help electric vehicles. There's a lot of noise, there's a lot of action happening, but if you look at the disbursals, against the 25,000 crore budget, only 3% has been disbursed. To that extent, that is going to be the bigger point, creating infrastructure, creating components that we are not dependent on markets, which reduces prices, and then move to the CAFE norm. So these two are going to be the strongest combination for driving electric vehicle. Demand incentive, I don't think is part of it. And the second last part is the charging infrastructure, which government is giving a lot of emphasis.
All right. Thank you very much, Mr. Mehrotra and Mr. Mahesh Babu, for joining us, taking out time for CNBC TV18. And that's it on our special series, Charging Up India's EV Journey. More on the program later. Thank you for watching. Goodbye.
opportunity is missed by most because it's dressed in overalls and it looks like work. It's hard to argue with Thomas Edison, and my guest today certainly won't. Not one to believe in the magical notion of overnight success, he spent the last 4 decades not just building his own business, but has put his might behind some of India's most celebrated digital disruptors. From believing in the power of the internet before it became a high conviction bet in India, to taking his startup public at a time when startups didn't enjoy the currency that they do today. Sanjeev Bikhchandani has in many ways been the quiet but passionate evangelist for India's tech age. Today, when you hear people call you the father of Indian startups, what does it make you feel?
I mean, look, that's probably because I've been around so long, so I'm part of the furniture. But that's about it. I mean, I don't feel like I'm the father of the Indian startups. No. We launched Naukri as a nifty small eye. So I do not have a vision. I had a sales target. I said, जिस कंपनी का विजन होता है, वो लॉस बनाती है. जिस कंपनी का सेल्स टारगेट होता है, वो ब्रेक इवन करती है.
But do you believe that this is the big India moment that everyone's talking about?
Yeah, moment कुछ नहीं होता है. Period होता है, phase होता है.
हाँ, तो period है, phase है, decade है, century है.
Period phase तो है.
Are you already starting to spot the next Zomatos, Policy Bazaars within your own portfolio companies?
We didn't know Zomato
would become
this Zomato.
Yeah.
We didn't know Policy Bazaar would this Policy Bazaar. A large part of the value creation has come post-listing.
Yeah.
I remember speaking to Rakesh Jhunjhunwala. You know Rakesh, right?
Yeah.
I mean, you know how he spoke, and he'll get your name wrong sometimes. So he says, Sanjay! Haan, Rakesh. So he says, I'm telling you, if you find a good company, stay forever. I did that to Titan. This is where I am.
For now, it's a whole both as far as Zomato as well as Policy Bazaar is concerned.
That's right.
What do you look for now as an investor?
A company, a startup needs 3 things. Visionary, hustler, hacker. कामयाबी के लिए तीनों चाहिए.
But how far removed are we from what we're seeing happen in the US?
For that, the Indian economy has to mature to a level of the US economy. That might take a few decades. I think the US government, is my speculation, has realized that the dollar, if it loses ground, the US needs something else which they can migrate to and not the yuan. So they would rather have Bitcoin, but I'm also risk-averse. मैं थोड़ा डरपोक हूँ. मैं crypto में नहीं जाऊँगा.
People would not necessarily believe that you're risk-averse, considering the fact that you've invested in 140 companies.
See, in India, there's also something what I call a stroke of pen risk. That somebody somewhere in a position of power and authority signs something which kills your business.
Like we've seen with online gaming recently. Inside, I'm curious, where did, I mean, in the middle of all of this lovely art, what is the Hathi Mere Sathi poster doing there? Somebody gave you this as a gift.
A friend of mine who was on our board as an independent director, Sharad Malik, he discovered this on eBay in the US. And he bought it. And if you come closer to the poster, I'll just show you. So there's something unique about this poster. So elephant is my companion.
Yes.
Read the thing on top.
Cinesun Distribution presents.
It's French.
French, yes.
So he bought this on eBay from a guy in Morocco.
Wow.
So Hindi films were distributed all over the world.
Yeah.
The non-English speaking world. And so this movie was apparently a big hit in Morocco. And this poster was lying there, and he sold it on eBay, and he bought it.
And he bought it, and he sent it across to you.
Yeah.
But are you a Hindi movie buff?
Not really.
No.
So it tells you what the soft power of Bollywood is.
Yeah, that is true. You have a story for everything.
Well, I'm 62 years old.
You know, when we fixed this date, I was revisiting the times that we've spoken, and there's a very vivid memory that I have of a conversation that you and Kaval Rekhi and I had at the Lalit Hotel. I don't know if you have any recollection of this. This is probably 15 years ago, and Kaval Rekhi was in India, and we were doing this show together. And, you know, there was no GMV or AOB or any jargon. It was 2 human beings having a conversation about enterprise, entrepreneurship, and what it actually takes to build something. And I remember walking away from that saying that,
this guy doesn't take himself seriously at all. And today, when you hear people call you the father of Indian startups, what does it make you feel?
I mean, look, people have been saying that, and and that's probably because I've been around so long, so I'm part of the furniture. But that's about it. I mean, I don't feel like I'm the father of the Indian startups. No.
No fatherly, paternal feelings at all?
I mean, you do your work every day and carry on with life.
But really looking back at the last 4 decades, and so much has changed, not just for Naukri and InfoEdge, but so much has changed around you. What would you believe was the sort of big breakout moment when you started to believe that, this can be India's tech age, tech aid, whatever you'd like to call it?
See, these are labels that people put in hindsight. Okay? So I'll tell you, when we launched Naukri in April 1997, there were about 14,000 internet accounts in the country.
Yeah.
With shared account usage, there may be 2 lakh users. Okay? To me, it looked like a large number. Now, I had no clue that where the internet would go, and there would be venture capital. I'd never heard of venture capital, and there would be investments coming in, and market would grow. I had no clue. I had a very simple thing. I had been drifting and trying to do several small businesses for about 7 years by then, running out of the servant quarter of the garage in my father's house, right? Paying him 800 rupees a month rent, and teaching on weekends in business schools in and around Delhi to earn some pocket money so I could live, because the company could not afford to pay me. We were barely breaking even. And we launched Naukri as a nifty small idea. My basic thought was that if we can get 500 companies every month to pay us 1,000 rupees for a job listing, this is 5 lakhs a month, 60 lakhs a year. The year before, we'd done a revenue in the company of about 12 lakhs. I said, this is 5x. Okay? If you can get there in 3 years, that is success. Okay? So I said, then I can take a salary. Then I can stop teaching on weekends.